Good morning, everyone.
NBC contributor Peter Bookvar, Chief Investment Officer at One Point BFG Wealth Partners. Peter, great to have you with us. What does it look like? How bad is it in your view if they quote unquote lose control of where the yen is going and where JGB yields are going in terms of not just the carry trade, but also, as Guy had alluded to, the money that Japanese investors have invested directly in other assets around the world, and that's a lot of it is U.S. Treasuries?
Well, it certainly matters from a flow perspective. I do think that a further rise in long-term interest rates in Japan can be sort of a magnet and drag higher long-term interest rates in Europe and the US. I know there's a lot of focus on Japan, but look at European bond yields. The ECB has cut the short rate by 200 basis points, and German, French yields are at multi-year highs. So I do think that there is a global, just as there was a global bond bull market, I do think that there's going to be a global pull upwards in yields if JGB yields continue higher. I think one interesting thing also with Japan and the yen is one of the cheapest currencies in the world versus the US dollar. But it can maintain that cheapness, or maybe it reverses. I think an important other currency to keep our eye on here is the Chinese yuan, which is quietly at the highest level since May 2023 against the US dollar. Chinese yuan doesn't rally like that for no reason. It is a purposeful rise, and if the Chinese yuan can rally, it can give room for the yen to rally and other Asian currencies to rally. Therefore, this dollar weakness, which I think is going to continue, could really broaden out amongst a variety of different currencies. And with so much foreign ownership of U.S. assets, foreigners are going to have two choices. Am I going to hedge up my dollar holdings, or am I going to start selling my dollar holdings, or at least buy less of them?
Peter, you know, it's interesting. What point does dollar weak? It's historically a tailwind for U.S.
Gold
equities.
reverted everything that it lost yesterday.
Is it become a headwind? And maybe not in the form of dollar yen because it's its own animal, but you know, dollar euros at levels we haven't seen in a while. I think it's headed to 125. I don't know what, I think I know what it means, but what do you think it means?
I'm going to shorten the market into the week.
Well,
at the
dollar
highs.
Pound, dollar Aussie. The Singapore dollar closed today at a 12-year high against the U.S. dollar. I know we think, okay, it's good for exporters, but
about Friday
the U.S. imports about 40%, or I should say 40% of U.S. imports are intermediate-term goods that find their way into finished products.
Good morning, everybody. Good morning,
Kyler.
Good morning, Henry. Good morning, Chris. Good morning, Scott. Good morning, Francisco.
Could benefit from a weaker dollar, but almost half of your input costs are going to go higher.
Good morning,
and also, we're dealing with a consumer that's dealing with PTSD on inflation. We've thrown tariffs at them. If you start to get a further weakness in the dollar, which negatively impacts their purchasing power, well, that can then be a drag on consumer spending, which we know is a huge chunk of the U.S. economy.
Good morning, Edison. Good morning, Chris. Good morning, Sheila.
Good morning, Harry. Good morning, Rod.
The flip side, though, to the weaker dollar
for the U.S. is obviously we've got a huge amount of debt, and that's helpful. How do you think that plays into it at all?
Well, foreigners still hold about 30% of the U.S. Treasury market. While that's down from 50% about 10 plus years ago, they still hold 30%. If that continues to go down, well, then the U.S. Treasury is going to have to find other investors, whether it's U.S. retail, U.S. institutional, stable coins, or whatever. So I do think that because of that very large ownership of U.S. bonds and stocks from foreigners, further weakness in the dollar could sort of disrupt those flows. And if we do get a joining of this industrial and precious metal bull market with oil because of a weaker dollar, well, then that complicates the inflation story. It complicates the job of the Fed as well.
Peter, Tim, yeah, and foreigners who've been hedging a lot of this dollar exposure may decide not to do that, and I think this favors international markets, but I've said that before. But how about the commodity space and the weaker dollar and the commodities that we're not thinking about? And we've been talking around here recently, and I know you talk about this too, that the prices in energy equities, forget valuations, but how they've held in during a period with the prospect of supply. It's just a sign that the market is telling you something. A weaker dollar tells you commodities always go higher and could go a lot higher. And I'm not just talking about gold and copper. I'm talking about the entire commodity chain, but oil for sure, where I think it's underpriced.
I agree. I think oil, and we've seen this huge spike in
fucking
natural gas.
up.
We'll see where prices settle out at when this cold spell is over with. And I think it's going to eventually be joined
I got
by
100%
ag
on
as well.
fucking gold puts yesterday, and I never left.
That
And now
precious
it's getting
metals are
fucked.
very extended
Added
and need
here.
a timeout. You can say the same.
The shit I got,
about
literally
copper
half of
as
it from
well.
yesterday was
But
at
I do think that it's a commodity bull
6,100%,
market,
and
and I
now
do
it got
think it's going to
reverted up.
spread
I
out.
added somewhere
And
here.
to my point earlier,
It got fucking
if this
reverted
does
up big
happen,
time.
if oil instead of being at
Nvidia
60
is still
all
getting
of a sudden at
squeezed.
70 or 80,
I might be
and natural
fucked
gas
into the
prices
week.
remain above 5,
187,
it does become a
186
very
holding
complicated
big time.
story for the new Fed chair. And also, in
I ain't
addition
gonna
to
lie, this shit's
JGB
not
yields,
coming back.
help to lift
It's so
long-term
fucking
interest
up.
rates.
Today is Tuesday. Friday's here in 1, 2, 3 days. Not even 4 days. So fucked. Man. Let's go see what happened on Tesla too. Playing with the gray box right now. Let's come back to that later. Gold going higher, market trying to go lower, some shit. QQQ.
Well, tech earnings set to kick off this week. Investor focus seems to be broadening beyond the big cap names. The Russell 2000 has been outperforming the S&P 500 over the last 6 months, driven by valuations and rate cut expectations. Our next guest thinks this trend will continue. Joining us now is Northwestern Mutual Wealth Management Chief Portfolio Manager Matt Stuckey. Matt, great to have you with us.
Thanks for having me.
So you're into the Russell 2000 move. You think this is durable?
Well, it's certainly been overdue, just in terms of how narrow markets have been the last 3 years. And just to put some context on that, from 2023 to 2025, between 20 and 30% of the S&P 500 constituents outperformed the aggregate overall S&P 500. That's historically narrow. Typically that's in the mid to upper 40s. And it's just really been a reflection of, the monetary policy environment, where higher rates have hit, certain segments of the economy, and the narrow parts of the economy, the AI infrastructure build out has really kind of been the source of growth. Now we're starting to get the other side of that, where we're seeing kind of rates come down and kind of more cyclical parts of the economy pick up. And, that's led to, earnings revisions starting to, improve across different sectors and different segments of the market, small cap included. And, that's really kind of been the key catalyst for unlocking some of that value dislocation that's been building the last 3 years. And, if we continue to get the emphasis for the Fed to continue its rate cutting posture, I think those revisions have room to run. And so, looking at kind of the raw fuel for continued small cap outperformance, that's what you want to see. You want to see consistent earnings revisions up, and that valuation spread between small and large continue to compress, and that's the recipe for outperformance.
Matt, I wonder about the interplay of this expectation for a reaccelerating economy, which is supposed to be what's taking earnings higher, and the reduction in the market's predicted number of rate cuts this year. We're down to below 2 cuts from here. Who knows if that'll be right, but that's where we stand, and whether, in fact, there'll be a yield response in treasuries that could offset some of these positive trends you're citing.
Yeah, I think that is the risk. And certainly, if you look through history, the reasons we get corrections is because rates move higher or unemployment moves higher. However, I think one thing that has been surprising to the downside over the last 5 months or so has been inflation. And if you're looking for a catalyst for potentially that pricing of 1 or 2 cuts priced into the forward curve for 2026, it would be if inflation comes into the downside. And one of the interesting areas that I've been watching the last few months is just the growing downside wedge between the daily Truflation data and the overall CPI year-on-year numbers. And, that was one of the first areas that we started to see and signal higher for inflation early in 2021. It was somewhat prescient in terms of that upside expectation for CPI as you look forward, the next couple of years with CPI topping out at over 9%. And, if that was a precursor to the upside, maybe it's perhaps a precursor to the downside. And so, we look here and we say, certainly there has been a couple of years worth of rate cuts in the rearview mirror, and potentially inflation coming in a little bit softer than what a lot of market participants might be concerned about. That might be the catalyst for continued cuts from the Fed, alongside a new Fed incoming chair.
9:35
when
into
Chair Powell's
9:40 on
term is
SPY.
up.
They're going lower
In terms
from
of the areas you
9:30
like,
to 9:40
Matt, it sounds like you
on
like
QQQ.
everything except for maybe
Good morning,
mega-cap,
Evangelina.
stocks here in the
Good
United
morning,
States.
Captain.
You want to go down the cap scale,
Good morning,
mid
Ali. Good
and
morning,
small
Jesse.
caps.
Thank
You like
you.
IG investment grade,
Said,
fixed
better.
income,
Ali
as well as
said,
international
better.
stocks. Is your portfolio
Cycle's
shifting
happening.
away from big caps in the U.S.?
I don't necessarily want to say that we don't like mega cap tech. We certainly
this is pivot point trading into 3/3. Let's see if 9:40 low breaks in the next 10 to 5 to 20 minutes.
But it is somewhat unusual to have the market as concentrated as what it is, and that just increases the risk profile if we were to get some disappointment there. A lot of these names are growing in terms of their correlation around the ongoing kind of build out of artificial intelligence.
This is pivot point trading risk is kind of crazy to think this is about to go lower to short or to
and disseminated by the Mag 7 names are kind of the next leg in the trade. Certainly, the labor intensity of the small cap companies and mid cap companies is higher than that of the mega cap tech companies. And so, if this technology does unlock a lot of productivity, certainly the ones that are using these products to unlock the productivity seem to me to be where some of this earnings leverage might be if these are huge productivity enhancers over the next few years. And so I think there's reasons to be optimistic, while at the same time respecting the strong quality profile of what we see in mega cap tech.
Let's bring in Kevin Green, Senior, a markets correspondent, right away to help set up the action today. All right, so begins the pageantry of earnings. This week we got a huge bag of earnings already out this morning. Before we dive into some of these results, I want to get your big picture take on the market and where things stand now.
Good morning, Diane. Yeah, we are seeing a little bit of green on the screen to start off today's session here. We are looking at really the communication services as well as the information technology sector actually leading the way over the last couple of trading sessions.
Direction is flipping north. They want to clear the divergence, maybe.
More optimism. Apple had a phenomenal day yesterday. Microsoft continues to move to the upsides. You're starting to see a little bit more of this rotation or this preparation potentially for earnings to actually beat or exceed the street's expectations, and their guidance and commentary also becoming a little bit more of a tailwind when it comes to the equity markets here. So I think that's really kind of what we are setting up. We are not seeing any type of massive outflows coming into the market, just a continued rotation from risk-off sectors back to risk-on sectors. Now, I will just kind of keep you on the radar here. VIX is still sitting at around 16. Yesterday's performance, we did not see volatility crush all that much. We still have a lot of headlines and earnings, as well as the Fed meeting that we will have on tomorrow as well. And I think the market is preparing for maybe some shocks that comes out of that Fed meeting here. And also, we're seeing maybe some dramatic moves when you look at the currency market. The dollar index is trading close to the September lows of last year, and it's aggressively re-rating to the downside. We're down over 2.4% in the dollar index since Monday of last week or Tuesday of last week here. So you are actually seeing a rapid re-rating within the currency space.
2.5 candles are on Friday, puts here on SPY right now.
Could also be just the divestiture of the U.S. dollar just in general.
I'm going to do Friday SPY about 4 or 5K.
Here. So
SPX about 3K.
You're looking at equities
Monday, I think.
SPY
Friday, I'm in.
Just be mindful of that we might be seeing a little bit of a vol shift here over the next couple of trading sessions, just given the fact that, once again, you are seeing currencies move aggressively lower. You're also seeing yields kind of staying at this current level, which is sitting at around 4.2%, 4.3%.
It's the first bounce
some of the movers in the healthcare space. You've got United Health out with its quarterly report card.
The roof exists.
It didn't help the picture. It was already under pressure off of this move with regard to Medicare payments. You got United Health down 16% in the pre-market. Humana down 16%. CVS Health down double digits. Take us through what's happening here, and then some of your takeaways from United Health's results.
Yeah, so yesterday, actually, before the earnings announcement for United Health, we actually did see a proposal for the government to increase the Medicare Advantage payment premiums by 0.9%. Now, that's well short of the street's expectations of between 3% and 6%, and this could actually have an impact when it comes to margins for all of those healthcare insurance providers that you are talking about. As prices continue to move to the upside when it comes to providing care, their ability to actually hold profitability is going to be stretched and challenged. You could also make the case that maybe the timing timing of that announcement could also kind of lead to maybe a signal for a lot of these healthcare companies that are going to be reporting earnings, especially when you're looking at United Health. Now, they actually did report earnings today. Revenue came in at $113.2 billion. Slight miss from the street's expectations. The adjusted earnings per share, for the most part, came in at $2.11. Street was looking for around $2.10 here, but their guidance moving forward did come up a little bit light. One thing to kind of keep in mind here, their medical care ratio, basically this is just the amount of premiums that they are paying out in order to cover the medical costs.
We may see HOD break at some point today.
That actually hit around 89.1%.
Which at that point I'll add again into Friday.
They continue to see that inch to the upside.
If it breaks HOD, I'll let the thing run a little bit and then it add. But I mean, it could be possible. There's HOD divergence.
The revenue guide
it went down on purpose in the morning. I don't know. Gold going higher in the morning at open. I don't know. Let's fucking see. SPX is trying to go back up. Gapped up from 4 p.m. close, pushing down, and then
focusing on the profitable ones. So this has been a headwind for the space for a fairly long time. You did see a decent little bit being brought in to the healthcare companies or health insurance companies over the last 2 months or so.
And now we're seeing that re-rating back to the downside. As this will
play out over the next couple of months, especially in the political sphere, which, once again, they're kind of in the crosshairs of.
Yeah, and then there was the view that this year the healthcare space was going to look better, was
goddamn choppy the last 4 days.
It's a blow earlier in the year for this space, and then when you look at United Health's results, it just doesn't look like there's a lot.
I don't even give a shit if they rip this bitch down or rip this bitch up. I have really zero interest on 0DT today. It's been too fucking crazy.
Tax credits that are being
what am I talking about? Choppy as shit. Choppy as shit. Destroy puts and calls. Destroy all puts.
Consumers are still buying health insurance.
Into 3/3, this is risky as shit business. There's 4 gaps below.
The system actually gets a little bit strained. So we are seeing a fundamental shift here as to how care is being provided, how it's being paid, and this is going to be a headwind.
IWM looks like it's bouncing, but this is bearish volume.
Once again, we could actually see something shift.
Why am I saying what I'm saying? If you look at the 2-hour, it's rolling down. If you look at the 2-hour right now, there's major risk. Head and shoulder forming, number one. Volume 2-hour trying to go bearish at market open.
How worse could it get from here?
Right, it's basically best to watch on IWM too. Let the cycle form, let them do what they want to do. Decided direction, show the real trap, show the real direction.
Their customers as well. So a really tough shift.
Shit, what am I saying, right? HOD is breaking, so they're trying to break the roof. Show wind direction is north. Let's see what happens off this wind direction is north shit, okay?
Obviously, they've been doing
I am not adding right now. They could run higher. If I'm crazy, back in the day, I would have added right here, right now. But I mean, I don't know if the shit's going to stop in 5 minutes. I don't know if the shit's going to bounce and go for 40 minutes and then do it. Do it as it set the HOD, clear the divergence.
Take us through some of your takeaways here.
Yeah, Raytheon continues to see, or RTX, if you will, continues to see strong inflows, not only top-line growth because of new orders coming in, but also when you're looking at their profitability. Their adjusted earnings per share came in at $1.55. Street was looking for around $1.47 here.
If they break the high today,
the
I said a little bit.
If you will, came in at $24.24 billion.
Let the thing go a little bit higher. If they break the LOD, I add.
We are still
divergence there on the roof.
Backlog as well. That came
what I am saying is crazy.
And their guidance actually was in line for the street's expectations when you're looking at EPS. Their sales guidance slightly above the street's expectations here.
They could boom this shit up, clear the divergence today whenever the fuck they want. They could even not do it today and tomorrow. But at some point today, I feel like it's going to come. So
over the last 6 months, 12 months.
I don't know if that means now. Look at QQQ. It's trying to form a V.
Also, the fact that we are seeing a shortage in engine.
Well, tech earnings
what the fuck do I know, right? Except what the market does and shows me after the fact. Man.
I want to welcome in our next guest. That's Paisley Nardini, head of multi-asset solutions at Simplify, joining us to talk about some of the catalysts for this week. Paisley, good to see you here. All right, let's talk about the big picture setup for this week. This is a week where we get a slew of earnings, several from the Mag 7. What matters the most to you?
You're right. There's a lot going on this week. We got earnings. We got maybe the announcement of the new Fed chair. We have a lot going on in the commodity market, which I'd love to talk about. So I think as it relates to earnings in particular this week, Mag 7 in focus. We've seen a bit of a pullback over the last few months. Honestly, I think this maybe 10 to 20% pullback is healthy. We had a big run up. And I think ultimately what the market's looking for over the next couple days with earnings being released is, can these companies actually deliver on the Capex that they've been injecting within them? Are they able to become profitable? Is this AI able to trickle down and ultimately show results?
Okay, that is a good question, right? You have Apple running up higher today ahead of its results. Big focus on Meta as well this week. There's this question now about should the Mag 7 be even called the Mag 7 anymore?
That's actually a really great point. We tend to see the composition of these market leaders and this concentration kind of dissolve. And I think that really started at the beginning of last year. We had some high dispersion. Tesla started to lag and then outperformed. Oracle's been lagging. Ultimately, I think we're starting to see a bit of a rotation within the market. And so that label Mag 7, it'll stick for a while probably. They used to be called the FANG stocks, if you remember.
Of course I remember that, yes.
But ultimately starting
Netflix
to look...
was in there, has been gone from that for a long time.
But ultimately looking beneath that label, really starting to look at individual companies, because we are starting to see higher dispersion amongst companies. And so these broad baskets of all tech stocks are going to move higher, or all consumer staple stocks are going to move lower. I don't think that's the case going forward. And so really understanding individual company margins and revenue and the sectors that they sit within, I think will also be helpful.
Okay, and the sectors they sit within. I want to go back to the point you mentioned. You mentioned the Fed, but it was more about the leadership of the Fed. We've been waiting to hear about who the next Fed chair is. The can keeps being kicked down the road in terms of when we'll hear. But let's talk about the expectation for rates. We're not expecting a move on rates, but what are you looking for to, in order to read the tea leaves on what's next from the Fed this year?
Yeah, there's a bit of like a divide right now. Obviously, the current political administration is in favor of lower rates, and that leads into ultimately who they'll probably select as the next Fed chair, somebody that wants to bring rates lower. I think Rick Rieder is in the lead position right now. He's been very clear he wants rates to maybe come down to 3%. Ultimately, though, if we look at the backdrop of the economy, it is somewhat healthy. There is, of course, that K-shaped terminology, but at the surface level, inflation has been moving in the right direction. Employment was difficult last year, payrolls were difficult, but I think we've started to see that plateau a bit. Ultimately, I think the tone coming into 2026 has been market optimism. And so again, you have these two kind of conflicting indicators right now. Fed wants to lower rates, but there's no need to lower rates unless the economy starts to spill over. So I think that's what the market will be focused on over the next several weeks.
Okay, I was just looking across because you said you wanted to check commodities. I wanted to see where oil was because that's the closest thing I could see there. Where do you want to go in covering commodities? And we got oil a little bit higher, but talk to me about what's on your radar.
I would say the story has not been oil and gas or the energy market largely over the last year. That's actually been quite deflationary, which is why I think commodities can be really attractive if you're looking at them through an active lens. I think just grabbing all commodities and saying inflation is back is probably not the most prudent trade. We have seen a lot of movement in metals. Of course, silver was front and center yesterday. I think it was a 5 standard deviation event. Significantly increased in price, fell over, and then ultimately started to rally again today. So there's a lot of movement in commodities due to geopolitical risks, due to supply demand, and ultimately due to the rate scenario. And so if you look at gold, if you look at silver, I think that it's been...
Is that just a momentum trade, though, for silver? Gold obviously makes sense to hedge, right?
We tend to see historically silver rally on the backside of gold. They call it the devil's metal because it is a higher volatility version of this risk-off or diversifier trade that gold is. But you're absolutely right. There's a lot of movement in silver right now. A lot of that is momentum, and we are going to start to see probably a lot of retail traders pile in. So I do expect to see higher volatility. So I still think gold can be that pillar in a diversified portfolio for a hedge against equity risk.
So tell me a little bit more about, you talk about a prudent participation portfolio approach. So tell me more, in simple terms, what does that mean?
Yeah, so my philosophy coming into this year is how do you stay in the market in a prudent fashion? This can mean active management. This can be the inclusion of risk mitigation strategies, diversifiers. At Simplify Asset Management, or I'm the head of multi-asset solutions, we think a lot about the use of derivatives. And that's not just for upside potential. It's also to think about how do you hedge a portfolio. Hyman Minsky, a quote that he provided years ago was, stability is unstable. And I think that's where we've come into this year. And the markets are complacent. If we look at where credit spreads are, if we look at where equity valuations are, it doesn't seem like there's a lot of volatility ahead. And I think that's the exact moment when markets become complacent. So how do you participate this year in a way that you are comfortable taking risk in the market, but not overextending yourself?
Are you concerned at all about another government shutdown?
I think we always have to be in this political environment. There's so much infighting on both sides of the fence. ultimately, I think what's going on right now is the vote that's coming up this week and thinking about the Homeland Security and the backing of that. And I think Democrats are saying, given what's going on in Minnesota and some of the ICE activity, so it is
I went
political.
to the bathroom.
I think we'll continue to
I just
see that.
added.
And ultimately, in the last couple
doubled
of
into
months,
Friday
when we
at
have
HOD
gone
just now.
through these government shutdowns, markets
5K.
largely shake it off. I think we have bigger risks than just the government shutdown as it relates to portfolios.
That's a good point. The challenge, though, with the shutdown is the data, which we're still catching up on. And the view was we would finally catch up, I believe, this week. All right, we'll have to put a pin in our conversation for time. That's Paisley Nardini, head of multi-asset solutions.
Commodities dropping, market going higher. Holy shit. Look at this shit. They're literally going higher in the 33rd bear trapping. What a morning rip. This is all-time highs level now. Alright, all-time high levels. Testing by the dollar.
Who knows where it's going to be next week, Jim, or next month? But you've been bullish on gold since I can remember, and the fundamentals that have pushed gold up are still there. Government
V
spending
on QQQ.
now.
HOD divergence cleared.
The catalyst we had a couple of years ago with Russia invading Ukraine and
trying to go higher into 957.
And now a new catalyst, which is this ordered world we've lived in seems to be becoming less ordered, and that obviously has an impact on the world monetary.
Dude, they've been burning bears on gold for literally like
also we have to
15 days
believe
now.
that the Chinese, which we know are selling treasuries,
talking about up
will,
1% every day.
I think, be a buyer of whatever large size amount of gold there is, and it seems insatiable to them.
It is insatiable, and they, relative to their reserve currencies, gold is still a pretty small part. And you said something interesting, Jim, which is, the Chinese and their treasury position. It's not just the Chinese anymore. Other countries
All right, guys,
or at least
we're
there's
doing
a
our first poll of the day.
that other countries are getting a little bit
all-time
nervous
highs
about their treasury holdings
or reject.
as well.
Well, I've got to tell you, there had come a time when everyone said gold was done, and that what you needed to be doing was buying crypto. Any form, Bitcoin. You and I and your predecessor, we all agreed that that was just nonsense. Is gold showing its true colors, and is crypto showing its true colors?
We could reject and go all-time highs and then do some weird shit too. Do realize we're setting a pull now. We are right below all-time highs right now.
Constructive on gold.
All right.
But I will tell you,
everybody vote. If you think we're gonna rip up all-time highs today,
I think what
or
crypto might have done
do some sort of weird ass rejection from the all-time highs again.
Generation into the realization that fiat currency is risky, and what they're now realizing, this same young generation, an entire generation of people into gold.
8 people, including Vinny.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMention.
Stop it, Jim. Stop it, Jim. All-time highs, all-time highs. So we have now 1, 2, 3, 4, 5, 9 people voting all-time highs. We have reject. We have 12 people. We have 10 people. We have 11 people voting all-time highs. We have 12 or 13 people now saying reject. 6,978. And we are 10 points lower all-time highs on SPX. If we blow up 10 points on SPX, then this bitch is nuking up to all-time highs. 10 a.m. HOD. Divergence at the roof. a.m. coming with a flash. $10 a.m. coming with a flash Naruto candle. This is muted. I don't think so. Mic should be working. AM.
But first, there is this. A major step forward in aluminum production for America. Century Aluminum partnering with Emirates Global Aluminum to build the first U.S. smelter in nearly 50 years. This new plant will be built in Enola, Oklahoma, expected to produce 750,000 tons of aluminum per year and create more than 1,000 permanent jobs.
HOD is testing at 10. There's a divergence at the roof, so it's saying medium term, long term, puts, shorts are in danger here, to be honest.
Century Aluminum up nearly 130% in 1 year. There is the stock. EJA will own 60% of the venture, and Century Aluminum the remaining 40%. Joining me now, the man behind it all is Century Aluminum CEO Jesse Gary. Jesse, congratulations. Major achievement for you. Tell us about this.
If they go higher here, I'm not adding on SPX. If they go lower and break LOD
really glad to be here with you today.
somehow, or if they break VWAP, it shows, then I will be adding into Monday or Tuesday on SPX too.
Most cutting-edge
I'm
smelters
pretty
in the
big
world
on SPY,
EGA's
NVIDIA, and gold.
technology.
I'm getting fucked on
the new
NVIDIA.
smelter will
This is
produce
literally
over
going to zero.
750,000 tons, which,
like,
just to give you a sense of how big that
it's
is,
minus
will
6K
more
or
than
something.
double
It's
total
fucked.
US production
It's
today.
real fucked on NVIDIA. It's real bad.
A $500 million grant
Gold,
from the Department of Energy.
squeezing yesterday's everything too.
Your plans
I'm wanting this shit to go gap fill 455 in literally a day or two.
That grant is going to underline the total investment, so will be contributed right down
Markets at all-time highs, gold's at all-time highs, commodities and gold are going to be fucking tricking each other like God.
So this investment will be the single largest investment ever.
Someone said this is pivot point trading. I will watch. That is fair. This is pivot point trading at the roof, 10 a.m. north side.
Needed for everything, and
roof
obviously
testing.
to get us away from our dependence on foreign countries, in particular China. Now, does this, with the steel and aluminum tariffs that were put in place, did that actually help accelerate your plans?
Absolutely. Before President Trump came into office in his first term, the aluminum industry in the United States was on its knees. We'd gone
rejection is scary as shit. Starting tiny.
After President Trump put the
two-third bearish cycle on SPY.
In his first term, we increased production.
Going tiny.
And again, when we came back into office, we're now increasing production again. So we're
with a divergence at the roof.
New smelter, but in addition, we're also expanding production at our Mount Holly, South Carolina smelter,
so fucking little.
where we've increased U.S. production by 10%. That production will come online starting in April.
It could trap big time here or drop. I don't know.
And so we're doing our part. Really, no one is investing more in the U.S. aluminum.
1005 is going higher than 1003.
It's such a crucial component to everything in our nation. It powers everything. It's in everything. I want to bring in Ashley Davis. You know, Ashley, because President Trump is going to be going to Iowa today, and the topic is going to be his energy policy. This is something that the president could bring up today. That is another win for the administration.
Remember what they did yesterday? They pulled the bullish MACD, and then there's no volume, but they were chopping up with RSI.
And Jesse, I'm assuming
people are
that you're
thinking it's
going to
show
that
again
Governor
now.
Stitt was a crucial part of this. I
Could
mean,
be.
I know that the governor has
didn't
been
even pull
very
back.
big
QQQ is
on
just straight
bringing
north.
things to Oklahoma, making sure that the regulation from a state perspective is in line with the federal regulation. And I just don't think that the American people understand how important this is, bringing all this stuff back on shore. And do you think it's going to be sustainable as you, if we get a new president in 3 years? How do you feel about that?
Three-third cycling happening, three-third bearish cycle happening if this breaks 10 low.
Involved since the very beginning, and we really couldn't ask for a better partner than the great state of Oklahoma. So we're super excited to be bringing the smelter to Oklahoma, and what we expect is to actually create a new aluminum cluster outside of Tulsa.
Let's see what happens with this divergence at the HOD.
More businesses are going to come to us and build alongside of us, and we're going to see thousands and thousands of jobs come to Oklahoma. We do think this investment is sustainable. These are the types of investments, again, it's the largest single investment ever in the aluminum space in this country, that resonate for decades in these communities.
Bearish is trying.
We expect the smelter will operate for well over 50, hopefully even 100 years.
Well, and again,
the divergence at 10:05, they're ripping it down at 10:05 on QQQ. SPY went lower from 9:55 into 10:05.
You know, you've got gold, silver slightly pulling back after hitting the record
I don't know if it's going to break the floor. I don't know if it's going to fucking bounce. I really couldn't fucking sit here and tell you. That would be speculating. I don't fucking know. They're cycling here big time now.
Safe havens like gold and
silver.
silver.
They let the calls print. They let the bulls print from 940 into 955. 950 to 955 is the three-third. Three-third bullishness is being used. Let's see if the two-third bullishness be used. This is pivot point trading at the roof, pivot point trading at the floor. This is 0.5 Fibonacci.
667,000 metric
all bulls and all bears are stuck.
Why are aluminum and other precious metals so important? In particular,
we are at the 0.5 Fib. It is up to the market and the market alone to decide what it wants to do for right now, right here.
We let ourselves get so behind
right here, right now, right? There's a lot of fucking bears. There's a lot of bulls at 940, at 955.
Well, the question of why that happened is really a sad one. But truly, aluminum is a big part of every aspect of American life. From your home and your kitchen and packaging,
fucking perfect 0.5
to your automobile,
it's like
where the engine
exact
block
fucking
and
line
your,
is crazy. VWAP touching one fucking candle.
Crash systems are all made of aluminum. To our airplane system,
QQQ is staying up though.
It truly is everywhere. And maybe most importantly, we see it in national defense. Tank armor is made of aluminum.
I think IWM is still bearish.
The bulkheads of our fighter jets, missile propellant made from aluminum. So aluminum truly serves as a backbone for this country. And in order to continue to compete, we need to build out the supply chain here locally. Right now, we find ourselves in a situation where the supply chain is so thin that a fire at an individual plant could set off implications for the entire supply chain, where you lose production well down into the system, into consumer products, et cetera.
Yeah. Well, Jesse Gary, certainly, again, congratulations on this announcement and bringing this important metal back to the United States. And Oklahoma is a great state to do it. Jesse Gary, thank you, sir, for being here.
Thanks so much for having me.
All right.
Yeah, this is what I mean. Charia said IWM is bearish while the others are bullish for the last 2 to 3 days now, if I remember. This is what I mean by IWM and is in its own fucking world. Not even intraday, but like it literally just does its own shit sometimes. That like it just makes no sense with the market. It's just IWM is IWM basically. That's why I can say IWM is IWMing. The fucking thing literally just does its own thing on setup. While the market goes up or low, like it just does its own shit. Rallies while it drops, fucking drops while it rallies. It's like opposite day. $10.05 is bouncing at 10.05 into 10.10. QQQ is so bullish, it's testing the roof.
So Kevin Hanks is joining me live at the CBOE as usual for our pre-bell playbook, getting everybody ready for a new day. Some of your thoughts, because I just mentioned the Dow had the down arrow because of United Health. So let's start with that.
Yeah, I mean, looking at United Health or healthcare in general, because it's not about, remember, United Healthcare had earnings today, and they were, you know, not earth-shattering in either direction. But these stocks are lower because of the Trump administration making an announcement yesterday that they're going to hold Medicare rates flat for this year. So that affects United Healthcare down over $55. Humana Healthcare is down. CVS is lower. So all the healthcare names, that's what's weighing on the Dow futures pre-market, and I've got them down about 330 points pre-market. Now, that being said, the leaders of the S&P are firming up and going higher this morning, like Apple and Microsoft. And so as we move into large cap tech's earnings coming up in the next few days, the S&P is about 2/10 higher, with the Dow about 0.2% lower. So you're going to have one of those days where the Dow is lower because of the effects of healthcare and United Healthcare. But overall, the S&P and NASDAQ are looking nicely higher on the open. We're getting a lot of earnings out. Boeing put up pretty solid numbers, but the stock is lower because it had run so much into the earnings report. But you're going to get a lot. American Airlines put out numbers that looked relatively horrible, but the stock's higher pre-market. So there's a dozen different stories to start the day. And what it all comes down to is S&P, NASDAQ higher, Dow futures lower, Nicole.
All right, let's talk about silver and nat gas. What are we seeing there?
So they seem to be pausing. I've got gold down about $15, about 1/3%. But
I would have added if the fucking roof divergence broke. Did not clear it.
So with the macroeconomic tailwind that a lower dollar gives to metals,
Monday and Tuesday, I don't feel confident.
But as you know, Nicole, gold and silver, they're in their own world right now, trading at hyperbolic numbers and prices and interest. So watch those. But the lower U.S. dollar will probably put a bullish tone in gold. So let's see how much damage. But as you know, it has run so far that it's in its own trading world right now, the metals. So they're worth watching, and I expect more volatility out of that sector.
Yeah, I really do want to see a silver chart, too, just because it's a particular interest to someone like Stephen Orr. We were talking yesterday, there's silver. Okay, so now we're down 1.7%, well over the 100 ounces that we had talked about, right? So at 111. But yesterday morning, we were saying silver was up 8%. And people have come on and still thought there was more room to run for silver and gold. And I mentioned Stephen Orr on Friday and Monday, and he, was probably elated that I did so because we saw it pull back. And it continues to pull back here. At this point now, copper, gold, nat gas, which had an incredible week last week, right? It was up 60% or something.
2-hour
also
flip.
Pulling back. Let's get to the Fed as we talk about tomorrow's meeting. So
let's see if the 2-hour flips.
2 cuts this year and nothing tomorrow. Your thoughts about tomorrow's meeting?
Exactly right. Today actually is day one of the Fed meeting.
See if this
As
shit
you know,
flips.
no news. Nothing happens on day one.
I highly doubt it.
But tomorrow, even though there's about a 97%
if it breaks
chance
HOD
that the
and
Fed
goes
will
to
do
0.5
nothing,
FIB,
there is still Jerome Powell's press conference, which might be his last. It's hard to say. And after that, he's going to do Q&A. And the wide range
I think it's very
of
one-directional
that he
when
can
it
talk
becomes
about is what puts a little bit of interest in that. Even though normally, historically, when they don't move on interest rates, there wouldn't be a press conference.
Going
but the
in and
new,
out?
More.
Let me test my mic. Test. Hello. My mic is kind of breaking down, but it should be fine. It's a little. And if you guys want to say what you are personally bullish or bearish on individually in the market, go ahead and chat. Now's the time. We're at all-time highs. Say I'm bullish on SPY, I'm bearish on SPY, I'm bullish on QQQ, I'm bearish on QQQ. This is a personal opinion, nothing else. I'm bullish on IWM, I'm bearish on IWM, I'm bullish on gold, I'm bearish on gold, I'm bullish on silver, I'm bullish, whatever the hell it is, bullish on VIX, bearish on VIX, whatever the fuck it is. Let's see, man. Personal opinion, pulling nothing else, jack shit, nothing really does make shit matter. But I want to know all-time highs we're at. More market volatility is ahead, but not necessarily bad news.
Stanley. Nice to see you again.
Stanley's
Welcome.
Sherry Paul.
So we are coming off volatility. I feel like we have a
Let's see, folks.
pre-Davos market and a post-Davos market. Pre-Davos, everybody's all bulled up. It's hard to find a bear just about anywhere. Now we're talking about renewed volatility, the Sell America trade, gold's continuing to ramp, the dollar's weak still. What do I do with that? Is there something to that could be more lasting?
Yeah, I think that's a great way to put it, Scott. I think one of the most important things that came out of Davos that was a change in language was going from deglobalization to now the phrase New World Order. Deglobalizing felt a little more like conscious uncoupling, and New World Order has a much harsher tone to it, which means that the urgency around reimagining supply chains, partnerships, and frankly advancing AI and automation manufacturing here in the United States, along with the dollar that's now lower, becomes, I think, even more urgent.
We were at 604 4 days ago, 5 days ago, a week ago.
Absolutely.
630.
As these things unfold even further.
Yes, but remember that, volatility is a part of investing. It doesn't necessarily mean that something bad is happening. It means something emergent is happening. And the emergence, I believe, is moving away from the Mag 7 into what I'm calling the magnificent thematics. And if you follow these thematics of New World Order, of AI, automation, innovation, longevity, and a couple of others that we've talked about, you can start to kind of trail down into the different sector weightings that people should be overweighting in, and not necessarily moving to cash.
Are you looking at the Mag 7 differently than you used to? Has any of the luster come off of that trade in your mind? As I said at the very top, we're embarking on this very critical week with many of the earnings reports hitting starting Wednesday.
Yeah, I think that the Mag 7 have become more important than ever. We're witnessing, I think, a change from going from a company to holding companies. I mean, we've got companies that sit within the tech sector that also make movies, and we've got companies that sit in the consumer discretionary sector, with traditional clothes sellers that are, launching rockets and building out point-and-click technologies. And so the distortion in that, I think, means that an equal weight is important if you're just a traditional investor in exchange traded funds.
I think LOD's going to test at some point.
But understand that there's a lot of value that's about to get unlocked.
Sooner rather than later. Fuck. QQQ showing no fucking sign of rejection here at all.
Overweight the mega caps, or would you lean in like the market has been from the beginning of the year into the equal weight areas, as that has outperformed the market cap weighted S&P?
You asked me that in December as a lead into what I thought to 2026. I think you lean
into
Tesla cooking? And my biggest thesis I'm teasing
Tesla
out
is
about
getting
that
a lot of
is
fucking bears ready.
Not every company is now a tech company.
What if this shit goes to like 450, 470 on earnings and drops to 428? That's some shit I saw in delivery. What if it drops crazy and comes back? I can see it. So it's crazy.
Explaining to clients is the blockbuster event.
NVIDIA.
These extinction events, because the race is now moving so quickly that if you don't start to model out yourself and understanding that every company is a tech company, who's going to advance in productivity, cost cutting, and advancement, like in particularly healthcare, one of the places you and I have talked about quite a lot.
Yeah.
Forming some sort of W
for profits to improve across the spectrum.
I mean, it's not as easy as it sounds, though. I mean, because in terms of your AI advancement area, you have software on the list. Now, you have it broadly listed as software. Now, we know that software has traded rather poorly.
Yeah.
Even, Microsoft hasn't done all that much over the last year. When you say software, what exactly are you talking about? Because like 90% of the stocks in the universe feel like they're just
they did trap bears.
Well,
they did trap bears, but this shit could be temporary. What if this shit bounces up and then releases before it even gets up there? Then it would wipe it all continuously.
That's why I asked about it.
Yeah, without question. And so there are other areas within
last 2 days,
tech
Monday, Friday, Monday.
Traditional
Today's
tech,
Tuesday.
which is why I go back to this point that now I'm starting to look at every company.
It's not too close to Friday.
And if they're adopting the ability to compete in this
trapping Friday and Monday at least
hyperscaling of borrowing and spending, there's a convergence between corporate spending and government spending in the AI space. It's so powerful. This is not like the early 2000s when it was sort of the domain land rush for beer.com. I think these comparisons to the early internet just once again do not hold true.
Man, since the bottom of February, though, this year, we straight up fucking went north. if you look at Robinhood, it's like
in the
this
metals
whole
because
year
a
has
lot of
been
people
like
are pointing to this and
explosion
saying
in the
the
330.
dollar's collapsing and metals
We
are
thought last
soaring,
year was
and should they
literally
feel
gonna start rejecting.
good about owning
Did a
stocks in this
fucking crazy
environment,
nasty
or you hold
pullback
your
like
nose? I mean, like, can
2020
you kind
and
of just
nuked
unpack
up
for us what you think is going on here?
in
Yeah, I mean, I think
9
metals
months.
is proving to be a real genuine asset class because I think for many years maybe people thought only gold bags should own gold, but now, especially the last 3 years, metals have, I think, proven to be a bit of a juggernaut. And it's hard to tell how much of it is geopolitical uncertainty, dollar and currency weakness versus dovish central banks. But maybe if it's all three, that explains why gold's done so well. I don't think that those are bad for equities because if this is anticipating dollar weakness or more dovish moves by central banks, then it's good for asset prices. So I almost think the gold move could be sort of a glimpse into sort of risk appetite growing for stocks.
As a result of things like dollar weakness and everything else, right? This idea that you go into more riskier assets or ones that are diversified away from there. If you're going to look at that, though, with the dollar weakness intact, Kelly also mentioned the Mag 7 stocks and the slew of earnings we've got coming up. Weaker dollar has typically in the past, from a conventional wisdom standpoint, meant better for large multinational companies. It helps their overall revenue profile, especially outside the U.S. Is that still something that we want to look towards as a true tailwind for this market, other than just saying maybe risk assets are in vogue and we just want to play the AI trade ad nauseum for the rest of this year?
Yeah, I mean, in some ways, I think one of the big sort of real stories this year is earnings growth is accelerating. And that was because of onshoring,
HOD into
the tariff
1020.
headwinds disappearing. But now if we have dollar
QQQ is
weakness,
so
I think
bullish
it puts
right
more
now.
upside to the
IWM
earnings
is showing
story.
some sort of bounce here too. So
Investors
the
aren't
North
necessarily
bullish
paying for that right
wind
now
is
because
showing.
multiples have been compressing, but I think it really helps anchor stocks. So between now and the end of the year, I think there can be a lot of reasons
This
for
is so
speed
fucking
bumps, but I
sus
think
though.
as we exit
By
the
1
year,
cent it broke
the
the
earnings
roof.
story
New
is
roof
anchoring,
at 1020.
I'd say upside to our 7,700 target.
Yeah, which is, I mean, we're starting to look at, we've seen
This
one
shit
round
pulls
number after
back,
another falling for
maybe
gold
here.
and the likes, and you wonder if
We
we're
could bear
finally going
trap
to get back to
crazy here
talking
too.
about
I
S&P
don't know.
1000 and
The
Dow
only
50K
spike
and
down
all of
1005
that. But so you're
trap
not
for
worried
15
there's going
minutes,
to be,
0 DT
you know,
at
kind
least.
of landmines hiding
Best believe
in
the
the earnings
majority
reports
chasing
or
to that
anything like
big ass fucking
Does the government
fucking
shutdown
crazy
matter? I
candle.
mean,
Even
we just
though,
had one
you know,
at the end of the year, and yet here we are with
algo range
equities.
1005 stopped it.
In
So
the short term, of course, shutdowns create uncertainty. And just, like as you said,
algo
went
range
through the
on
longest one.
here too.
Those have all proven to be buying opportunities, but it's like it's
Purple
hard
box
to
on
ignore the fact that
QQQ.
gold and silver are like sucking oxygen
Bears
out
are
of everything.
trying now.
Right?
Let's see.
So what
There's no
what do
confirmation
you do with that?
rejection.
I mean, Carter
Just
Worth,
the
for what
top
it's
of
worth,
the
I
algo
want to know
range.
what all the technicians, what everyone thinks about this. He's now put out a note and saying sell all of it, the silver.
Fucking
Right? Just sell all of it. I mean,
45% bearish.
it's
parabolic.
There's no confirmation. If there was a confirmation rejection, clearly, then there would be maybe 75%.
And as you know,
But
like
there's
when you
a
look at
HOD
extensions
divergence.
like this,
It's
it's
not
dangerous to fade it
a small
because
thing.
you don't know how long it will go. But
HOD
you're right,
divergence.
a parabolic move.
I'm running to the bathroom and grabbing a Coke.
The end of the move, not the beginning of the move. So it's
I'll be
a good
back within
question
5
about
minutes.
timing, but it sure seems like commodities, especially precious metals, needs to have a place in people's portfolios.
If you look at the way that the earnings story is going to shape up, since you brought it up, if we want to look towards this season, we've kind of established the fact that we're maybe in this transition phase. This earnings season is going to be important, but maybe not as important given the future macro tailwinds that the market may have. In your mind, are there certain key parts of the market that you should be more
I also
exposed
just added
to?
my first put
You
into
had in the past
Tuesday now.
talked about
SPX.
banks and financials being there. We saw the run last year, and since the earnings season has started, those banks have kind of sold the news, so to speak. So are the banks still one of those places you want to be?
Yeah. From FundStrat's perspective, when we did our outlook, our top sector picks this year would be energy and basic materials, and that was from early December. We still like the Mag 7 and financials and industrials and small caps. I think the financials are being buffeted because the White House is choosing winners and losers, and right now they want to reduce the burden on consumers by potentially capping credit card rates and maybe making it harder for institutional buying of homes. So I think this is hurting the banks to an extent, but the bank fundamentals are so good, and I think tokenization and sort of blockchain are really big productivity drivers, and AI is a huge tailwind that I think banks are in the process of re-rating more like tech stocks over time. So, I mean, I would use any of the weakness to buy them.
Exciting times.
There you go.
Tom, stay right there. Don't move. We're going to see you again in just a moment. Before we head to break, just want to also give you a quick market alert on Intel. The shares are now down about 20% since last Friday. It's only its worst two-day drop, by the way, since August of 24. They issued that disappointing guidance, warned about supply shortages. A lot of people were questioning kind of what happened on the execution front for them last year. The stock is still on track for a positive month, and it has also doubled in value over the past year. But those losses now, Dom, are becoming pretty significant.
All right. Now,
just sort of explain or unpack this for us. What crypto continues to experience, because we talked about this before, the October 10th reset and all of that. I don't know if that applies to Ether and kind of where it goes from here.
Yeah, I think we're still feeling the ripple effects, because on October 10th, there was a massive deleveraging. It crippled many of the key players in the industry, some exchanges and market makers. And so the industry is sort of limping along. But the fundamentals have improved a lot. And I think even Davos really amplified that Wall Street is now starting to view traditional finance and tokenization and blockchains as one business that's converging. And it's not just Larry Fink, but it's the UBS CEO, Standard Chartered CEO, Euroclear, really Wall Street sort of is on board. I think the precious metal move has sucked a lot of the oxygen out of the room. So I think crypto prices aren't quite keeping up with fundamentals. But as you know, when fundamentals go up and to the right, prices eventually follow.
Does that, though, mean that there is a certain degree of relative cannibalism between regular gold and digital gold, so to speak? I'm just using that as a kind of a metaphor and analogy right now. But if you're saying that the move up in silver and gold is kind of drawing a lot of that money or interest away from digital gold and digital silver, so to speak, does that then mean that the investor bases that they share is growing, and so they make that distinction from an allocation perspective?
Yeah, and I think part of it is mechanical. Like, you know, when gold and silver rise, and let's say folks are using margin or options, then they're using capacity that could be used to buy other risk assets, whether it's Mag 7 or cryptocurrencies. But because crypto inherently has delevered, then that's going to be felt more in the crypto space. So I think crypto, which should be going up on like weaker dollar, easing Fed, it doesn't have the leverage sort of tailwind because the industry delevered. And as long as gold and silver are rising, then there's a FOMO into buying that instead of crypto. But of course, that is just a leading indicator, right? Because when gold and silver take a break, then, and in the past, that would lead to a Bitcoin and Ethereum surge afterwards.
All right, I'm back. LOD test is likely. I said in the WhatsApp group 2 minutes ago. Yeah, it's a crazy ass shit to say. I don't really give a fuck. No volume, but it is growing on the 5. Alright, let's break the VWAP. Taking fucking forever. It is doing it so slow.
Do you want to have a more broad conversation, as we do have a potentially very big week in the markets this week? Want to welcome in Ted Thatcher, president of Bright Lake Wealth Management, joining us this morning. Ted, happy Monday to you. It's Fed week. We've got Mag 7 earnings, a slew of other big companies reporting this week. As far as your outlook for the week on the whole, what are you expecting here?
Marley, right now, when
2
we
hour
look at the
definitely did not
markets,
flip.
I actually think volatility
Still
is
down.
the name of the game. We're coming at the end of the month here, rounding the corner into
2 hour
February,
did not
and we
flip.
are having conversations
Please
about what the
understand,
Fed's going to do.
the
It
2 hour
doesn't look
did
like
not
we're going to
flip.
get that
Takes
rate
a
cut. We're
fucking
having
while
discussions
to
about
flip
a
the 2 hour.
potential trade tension, and even trade war has been thrown around with Canada. We're talking about the potential of a looming government shutdown again, and a little bit of discussion, of course, around the political unrest in Minnesota. And so it echoes a lot of what I think we saw in 2025, Q1 and Q2, of course, underscored and underlined with everything that happened with the tariffs. And so it's a little bit unfortunate. I think the market, all it wants right now is stability and consistency. And while we do see a lot of positive economic data points and vital signs, in my opinion, it just doesn't seem that the market can hold on to those because of all the questions it's having to ask.
1025 algo range. I did not draw it.
Headline driven with some of these geopolitical risks that you cited here.
Cycling
But you also
to go
mentioned that
lower,
we are
trying.
getting some stronger data. We've got GDP seemingly strong. Inflation appears to be cooling.
I would like to see a fast fucking rip down after this little bounce.
But I mean, many Americans still feel very
or
stuck
a slow,
right
nice
now.
bounce and then a rip down. But it's just
it's a really
it ain't looking the
important
best.
question for
It's
consumers
3/3.
to be
It
asking.
ain't looking the best.
When we do see a lot of positive
10:05
economic
wants
data
to
points. You mentioned GDP,
hold or
you mentioned
break, I don't know.
inflation. Even consumer sentiment and consumer confidence are
What
trending
we are
up,
doing
but
is we are
again, not
testing the
enough
top
to your
and the
point.
bottom of the purple
And
box,
so,
though.
so much of
Since
the broader
10:05 ripped
economy
down.
has to have a conversation
With the
when
bull
it
strapped,
comes
with
to
the bear strapped.
consumer. And so when we think about where the consumer is at right now, I think we have to move from a conversation about a stimulatory access to the economy to a more durable one. We see the big beautiful bill
10:30 is
having
bounce
been
trying.
passed. We expect that to put real dollars
Look
in
at
the hands of
IWM just
consumers.
fucking
That's a
rejecting since
positive
10:25 to
stimulatory
10:30,
effect.
and it's doing nothing.
Even if
It
we
makes
look back
no
a few
sense.
weeks, we
Make
saw
this shit
the
make
government
sense on
looking
IWM
to
when the
buy
market it
$200
does
billion
not.
worth of mortgages.
It makes
Stimulatory
zero
access to
correlation
the housing
sense.
market. But that is not going to be
Okay,
enough
but maybe
until
it
we
is.
get
But
a
I
more
mean, you know what I'm
durable
saying? Like,
access
you
to
get
the
what I'm
credit
saying here.
markets,
This is like something
for the consumer.
like,
There's going to be a conversation about whether or
different
not
world.
the consumer
World.
is
This is like
benefiting
literally
and whether or
different
not
world.
the economy is working for all Americans.
So how does that work?
Temporarily,
in
yeah,
theory,
they
if we're
trapped
breaking this
every
down
single
in
thing
plain
below
English, if we
240,
need to move
264,
from
but they also trapped
stimulatory,
everything
which I
above
think is one of those
264
things that
too. You
actually
can't lie.
increases sentiment in
Shit
terms of
just traps
asking people if they
everything.
feel more or less stuck right now, to something that's more durable. What specifically are you watching here? Is it the housing market? Is it the credit market? Is it the labor market? Is it all of those things? And what do we have to see to indicate an actual durable
slow,
American
steady bounce
dream
is coming
versus
now.
one that's just like a sugar high stimulus?
Let's see what happens.
Absolutely. I mean, I do think it does come down to
10:30 to
the credit markets.
10:35 registered.
We have had such a big discussion about deficit spending
Algo range
and
at
GDP
10:25
growth
here.
versus, how much pressure is being put on the debt markets, right? So much of the governmental institutional money flows have been, seeking that flight to safety, right? Toward the precious metals instead of government treasuries. And so what I think we need to see for that durability to really come into view, Marley, is actually a shift there. We've seen real positive GDP numbers. We need to see that continue in Q1 and Q2 and throughout 2026. Why? Because this key measure of the GDP compared to our deficit needs to shrink. As that shrinks, the credit markets will also become cheaper, giving consumers more access. So if there's a real specific data point, that is what I'm looking for. Now, again, we do have a lot of other positive economic data points. You even brought up, the earnings that we are going to see this week. As we went through Q4 and what we anticipate here in Q1 is a lot of good earnings. So if we can pair those, macroeconomic
really
signs
small cycles
with really
happening.
good durable earnings, I think that's going to be really positive for the markets this year.
All right, so let's stay focused in equities here for a second, because I know you see some opportunities here, despite there being uncertainty similar to Q1 of 25. You still see some investment opportunities here. Where do they lie?
Look
Are
at
any of them
testing
in
HOD.
these companies reporting this week, or are they outside of that window?
You know, of course, there's always a fun conversation to be had around the Mag 7, and we'll come to that. But when I look at opportunities, when I'm talking with investors, we are thinking about the tailwinds a lot of times in the AI economy. And when I look for opportunities, what I typically think about is, okay, what are the bottlenecks? And one name really does stick out to me here as a potential grower, and that is IREN, I-R-E-N, ticker symbol. They were a Bitcoin mining company that really transitioned into this AI economy to become an AI cloud and compute company that is vertically integrated, most importantly, with secured access to energy and electrons. Energy, electricity,
breaking
electrons
1, 2, 3 times now.
Key bottleneck in the AI economy right now, and IREN is really positioned well to take advantage of it. They just
9:30,
penned a
10,
nearly
10,
$10
10,
billion
20,
deal with
whatever you want to
Microsoft,
call it,
$2 billion
9:35,
of which
9:55.
they provided up front, and that only sold off about 10% of their secured access and arranged power. And so there's already rumors about other hyperscalers, being in the mix with them. We'll see what happens, but I think that is one equity name that's really in a nice position.
Keep going bullish, hold
and
it.
Ted, since we are kicking off Mag 7 earnings, I do have to ask,
It's
if you
so
have a pick
crazy,
in the Mag 7, who would it be?
Sure. When I look at the Mag 7 right now, Amazon does stick out to me. Now, I really like where it's positioned from a price to earnings ratio standpoint at 33. It looks like a cheap buy just by the pure numbers, but also where they sit in the AI economy. Amazon's value has been driven a lot in the last several years by its AWS cloud services. And so, of course, just their AI compute side could drive a lot of growth. But what's really interesting to me is really where Amazon has come to in the way that most of us consumers interact with it. And that is, of course, the boxes that show up at our doors every day. And so the logistical side of Amazon has another huge room to grow.
Twice,
they are
failed,
the king
went to the
of
bottom, failed,
robots.
went to the
I think
HOD.
that they now have over 1 million robots, and they are, I think, the first major company to maybe able to hit that singularity of more robot employees in AI robotics versus actual employees, which could drive a lot of growth this year as well.
Well, Ted, it's always a pleasure to speak to you. Thank you for being with us and for that insight this morning. Ted Thatcher, president at Bright Lake Wealth Management.
Showing the all-time high breakout. Five-minute candle got reverted up. Why isn't the POC coming in? This shit is going higher and higher on QQQ on 1040. Higher and fucking higher. The squeeziest of all squeezes.
Let's take a look look at crypto prices this morning. As you can see, Bitcoin, Ethereum, XRP are all lower right now. As you can see, Bitcoin, 87,000 and change. The House's Clarity Act stablecoin legislation remains held up in the Senate right now. Coinbase CEO Brian Armstrong and other crypto leaders opposed the latest draft, delaying the vote over stablecoin rewards and regulatory oversight. Armstrong staying optimistic on the path forward. Maria spoke with him about it on this program earlier this month. Watch.
The Senate's been doing incredible work. I'm still quite optimistic that this bill is going to get done in a very bipartisan and strong way. However, the draft text we did see on Monday night this week, with just 24 hours to review it, we started to look through and noticed there was a few items that caused us concern.
I want to talk about the sticking point that you've been raising for a while now, and that is whether platforms are able or should have the ability to pay rewards on or interest on stablecoin.
The banks had their own concerns, and we reached a good outcome in the Genius Act. And now the banks really are coming and trying to undermine the president's crypto agenda. I mean, these are the same banks that,
I wanted to add into here Tuesday, but I did not. I'm scared as shit now, so.
Should not be able to actually earn more money on their money.
I'm in 7-point-something K now, Friday and fucking Tuesday, and they're getting grinded.
Stablecoin legislation as an opportunity, and that includes paying rewards to Americans so that they can earn more money on their money.
Joining me now is Kraken co-CEO and member of the CFTC's CEO Innovation Council, Arjun Sethi. Arjun, good morning. Thank you so much for being here. You have supported the bill in the past. You're going to be on Capitol Hill when the Senate Agriculture
At this point, risk is too crazy for me to even think about purple bucks. It's going to come bottoms. I mean, if they do it, I have to wait. So I am just waiting through all-time highs now. This is all-time highs near. We are literally
Where do you sit on all
6 points away.
Look, I think what's most important here is what does this mean for folks that want to have access to their own capital? So we use a lot of words like, crypto custody, self-custodial.
We talk near all-time highs pushing.
But what it really means is the ability for someone, as an American here in the United States, that gets
you do push up in the morning
capital.
when they
so
do it,
small to medium business, you want to be able to get a loan.
This is because we're so near all-time highs. We're doing it every time we are near. Just push up, push up, push up.
To be able to grow. So if you're an individual, if you're a small and medium business, you want to have access to that capital. So we talk about these words, DeFi, centralized exchanges, crypto rails, etc. What we're really talking about is outside the United States, this innovation is already happening, and we've been behind the ball, but we've moved forward very quickly with some of the President Trump's initiatives over the last year. So we have the ability to leapfrog here. So cryptocurrency, what we're talking about is the rails, the liquidity, and again, these words can become confusing, but it's access to capital for the tens of millions, in cases, hundreds of millions of people that want access to a better yield on their own dollars or their assets, and that's really what it's come down to.
No, and Maria's done several interviews on this, and this is, whether you hear from Eric Trump or you hear from others, they talk about that we don't want to get left behind. I mean, that's, I think, the biggest point. And Senator
that's what I feel like right now, what he just said, liquidity.
Optimistic that we're going to get to a finish line.
As they go nearer and nearer to all-time high,
so we'll be watching
showing breakout.
Capitol Hill. Now, Kraken reportedly moving closer to the public markets, confidentially filing for an IPO late last year. They reached a $20 billion valuation. They also expanded beyond crypto trading, new acquisitions, institutional partnerships, multiple potential paths into the public markets. I mean, what are you thinking about the timing and the structure of a potential IPO here?
Look, we've been a private company, and we've
the
ability to, control our own destiny by being profitable since day one, and we're really excited about that. I think what's more important is how do we continue the mission of what we want
next second poll today are all being used, all bears,
and I think taking a step back
being used
in order to achieve that mission
for liquidity,
is very in line with how you think about American values,
all-time high running,
American property rights.
Question: yes or no?
And again, when we say these, we're not being political. It's more about
this is a personal opinion poll.
What we here have the privilege of doing as companies serving American customers with their own capital. How do we proliferate those values, those property rights outside the United States as well? And so part of Kraken's mission has been to do that, not just here in the United States, but also outside the United States, which is about 60+% of our business today.
1045.
So going back to the market structure bill, market structure for us has always been about.
It really is showing all-time high break even in my eyes too. So that's the reason why I'm doing the poll.
For an adversarial countries or exchanges that are supported by
4 points away now.
Something that is not
going
within
so
our value
goddamn
set.
north.
The yield.
We have
11,
12 people voting
being able
yes.
to protect issuers. This is all on behalf of making sure America's first,
wow.
but also American companies can compete on a level playing field, which is
All-time high.
why this
We are
conversation
at
is becoming so
696.
important.
Absolutely, and why the Clarity Act is so important in general. I want to bring in Chris McMahon. He's on set, because Chris, you make the point. We've already had a conversation this morning about a potential government shutdown that could really backlog the IPO market again.
Yeah, that's a real problem for us. This should be a record for all IPOs across the board. And you think about it, Stripe, SpaceX, and the crypto companies as well. This should be a record year for IPOs. But if we see a prolonged government shutdown, especially a battle, there's still a path for going public, but it is a very, very narrow path. It is just it'll gum up the works in terms of the market recovery and in terms of the market growth this year, And I think ultimately we got to make sure they don't politicize this thing too much. This particular battle, the SEC and CITC, that's a governance issue we got to get past, and I think we will.
Arjun, do you have plans in place
That's
for this?
crazy.
I mean, is this kind of is something on your radar right now?
All-time high.
Look,
This is
I'm
now
also an
here.
investor in SpaceX, in OpenAI, and a bunch of these companies. The right way to think about it is when the markets are open,
every
and
single
they're
bear
open,
push.
you've got market structure and rule of law
Squeeze.
and stability
Question
on
is
both sides
today's.
of the house as well. Everyone looks to America
Currently,
for that type
yes.
of stability. So the plan really is how do we get closer there, and how do you make sure that the companies have the ability to be able to
696. Holy
compete
fuck.
at a global level? That's really what it's at sort of at the mark.
Holy fuck. All right.
So the
1,
ability
2,
to go
3,
public
4
is more
people
about, again,
saying
getting
yes.
access to capital, but
We
more
have 16
importantly,
people saying
everyday
yes.
Americans
One
having
person
access
said
to that
no.
innovation and that growth as these
16
companies think
to
about what's
fucking
next
1.
in
What
their
the
stage.
fuck?
Real quick before you go,
I want to
we
vote
obviously
no,
have this
but it's
pullback
so
in crypto.
fucking
I
bad.
showed the boards at the beginning of
It's
this segment.
16 to
Bitcoin's
2.
down more than 20%
All-time
over
high
the
is
past
breaking.
3 months. What's your
Holy
outlook here?
fuck.
Look, there's crypto assets and there's crypto rails. In terms of crypto rails, that's continuing to grow and proliferate. So if you look at USD or dollarization and circulation, that's happening at a faster and faster pace. That's great. In terms of the assets that are either digital commodities or equities, et cetera, you see some oscillation back and forth, and they're highly correlated with even tech and tech innovation. So if you see a pullback in any of the crypto assets, BTC, ETH, or the altcoins that are related to AI, it's very similar to the pullbacks that you see in the public markets that are tech-oriented.
Arjun Sethi, thank you so much for being with us this morning. We're going to be watching what happens
Look
on
at how
Capitol
fast we
Hill.
got to
You will be
all-time
there.
highs.
Thank you, sir.
In 15 minutes. 10:35 to 10:45. What the fuck? This thing is on a fucking nuclear mission.
Welcome back to Opening Bell. Happy to see you all on this Tuesday. Dow today. Well, do look at it.
Talking about memory chip focus. I'm talking about South Sea China Company.
Right now, 18%. So the Dow's down 400 points, but the S&P 500, a really broader basket, it's 500 stocks rather than 30, is up about 11 points right now at 69.61, about 0.1%. Joining me now, Kenny Polcari, partner and chief market strategist at Slatestone Wealth, is with me to give us his thoughts on the market. Good morning. How are you? Your thoughts?
Great. Here I am back at the New York Stock Exchange. You know, it's always great for me.
Yes, you're home.
I am.
I'm adding my last fucking
listen,
SPX to Tuesday here. I'm adding
two. The market is in a really, really interesting place. We're now really smack in the middle of earnings. We got about 100 companies that are reporting this week. Certainly had some big names this morning. And like you made a point about UNH and the Dow. The Dow is down. The bulk of that is UNH because it's a price-weighted index. So the UNH is going to have an outsized impact on the Dow. But don't look at that. You want to look at all the other stuff. And tonight is really going to kick off tech earnings season because we got Seagate and we've got Texas Instruments. Now they're not
I'm
the
going
Mag
against
7,
all-time highs, man.
It's going to set the tone. Seagate
this shit
especially,
feels
right?
fucking
Seagate
going
and
against the
Western
world.
Digital, all in that memory space, which I think
Gold.
is a key space.
Fucking
And you can
bear
tell by
trapped
looking at these stocks over the
everything from
last year, they
yesterday's
have
profit.
skyrocketed because that seems to be where the bottleneck is.
Every fucking time I don't take profit, 100%, literally just reverting
I'm looking
up.
forward to what Seagate says tonight.
Every fucking time. Not even a fucking joke. Every fucking time. This shit expires tomorrow.
Yeah, Texas Instruments, I'm not sure yet, but I still think it's important to hear what Texas Instruments says about the future, because I think it's going to lay the groundwork for then what we're going to hear starting tomorrow with Meta, Microsoft, Apple, and Tesla.
All right. So, I thought right now I'm looking at Texas Instruments, which is down 3/4
HOD is most likely going to break.
The high on the day
I
was
don't know how. I don't know
196.69.
where.
The low is 194.34. It's already had a pretty.
But I mean, everyone in the world
swing,
is thinking
right? Okay, so you'll watch that 195.
More
today.
likely
It's,
than not.
right
why
now
wouldn't the
it's down
market make a
3/4
show
of
that?
1%. Western Dig also on your mind.
Western Dig
More
and
likely
MU,
than
those
not.
three, right? Seagate, Western Dig, and MU are the three. The triple threat, I guess.
Today.
We have the Mag 7, now you have the triple threat. The triple threat is in the memory space because that's where AI, where the bottleneck is going to be in the memory space. And you've seen it, right? We've seen all three of those names just explode over the last 12 months, and they'll continue to do better. I think actually Seagate's already up 30% this year. We're 4 weeks into the year.
So what's driving
But
AI,
you never voted though.
Space, tech stocks.
We have, we literally have 1, 2, 3, 3 people, 4 people saying yes. All bears are being used as a liquidity for all-time high running personal opinion pool, right? Including 14 people, that's 18 people. We have one person voting no, Alfonso. That's it. I haven't even voted no because I don't want to come off as chicken little. I'm going to be upfront. There's 19 people voting yes. All bears are being used as liquidity, all-time high running, and there's one person, Alfonso, voting no.
Which is why
that's like fucking going against the world. I don't know what the fuck. That's if you don't think that's not going against the world, bruh, that's motherfucking called. That's called Chicken Little right there. That is called Chicken Little right there, right? One hen out of the 20 fucking chickens in the farm saying, "Oh, this bitch is not gonna go all-time high and run all day long."
Right, and that's been doing well. He's had some names in there that even on a day where we would sell off, like when you mentioned European tariffs. I mean, he came out that morning and said bye.
That's right.
Human psychology. Our pool times 1 million, probably 200,000 at the minimum.
Right.
Stupid shit. 210 people here, probably times 500,000. That shit is crazy shit, bro. Like sometimes when it looks crazy bullish or bearish, it's literally going against the world. It's some crazy
fundamentally
shit.
are improving and thus will improve stocks. Are you in that camp?
I am in 2026. I am in that camp. I think we're going to see double-digit earnings growth certainly this quarter. And I think we're going to continue to see earnings growth as we go through the year. And that's going to really form the basis of kind of the broader market move, right? Because ultimately, the market's
as they pull back, more bears get, more bearish, and then they can do it. But sure, I mean, I'm just saying, we're at the tippity top is when we did the pull. While we were running,
is not falling off the edge.
This green candle,
at all-time lows at 4.4%. That's considered full employment, and the data continues to be strong. And so I'm very bullish. Now, I think the last time we were on,
bullish.
I am very bullish.
There's not a reason right now, right? They're not showing a reason, but the moment they show a reason, right, 40 to 35% of the people are like, oh, now it's bearish. Oh, now it's coming, and then now everything changes.
Right, and I think we're going to have it because it's a midterm election year. So nobody should be surprised at all if we see suddenly mid-year the S&P down 12 or 15%.
There's a lot of time though going into tomorrow. There could be a lot of shit that could happen while going into tomorrow. Why? Because a lot of things have already happened from today, 9:30 into 9:45. It's in 15 minutes. That's literally no time. That's like it's like 15 minutes and 4 hours. I mean, you divide 6 hours by 15 minutes, right? You can do the calculations. That's like
dry powder there to take advantage. Meaning you have cash on the side that you're going to be able to take advantage when that happens.
Understood.
That's what I'm saying. We ran up super fast. Look at 9:30 and look at 9:50. That's 20 minutes. We went from 694.4 to 696.4. That's $2. All-time high territories in 15 minutes.
Are more worried about the geopolitical.
That is some fucking shit.
They're worried about all the
we
other
are at
factors
all-time high
that create all
territories.
the noise, and that's just the point. It's
shit
noise, right? Yes, I understand
it
creates sometimes chaos in the market, but for the most part, it's noise. That doesn't price stocks in the long term, and so you try to you discuss it, you walk them in off the edge. But look
at the MACD though coming in bullish into the tippity top, the 3
who you are and where you are. So you're not going to be way out on the risk scale at all.
I don't know.
And so
reject
they feel
back
better
to the purple
understanding the way the portfolio is diversified.
That figure it out.
Much more conservative at that point.
Do you ever look outside of just U.S. stocks? Are you looking to fixed income? Are you looking to commodities?
Yeah, so for retired,
our pool is not
for all our portfolios, yes, we're looking at European names, looking at emerging market stocks, India, Brazil, all that, we play it, or I play it, using the EEM, only because I don't live in those foreign countries, and it's easier for me to play it using an ETF, and the EEM has acted very well.
Right, this is why we do the poll, because Wacharya just said, well, what I felt was right, LOL. It pulling back to go higher, man, even though I voted reject, right? We do the poll so that you can vote on your personal opinion poll in that moment based on what you want to, right, make that opinion or deduction on. Whether it is what you feel or what you see or what you, a combination of both. It's literally just a test of your personal, whatever, at the tippity top or the tippity bottom in the most crucial moment. And you realize that, oh, this is why I was thinking this, this is why I was feeling this, this is why I was seeing this, this is why blah, blah, blah.
Just because I'm not interested
That's set up, blah, 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 blah. Shows me that, blah, 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 blah. All right, there's trying time is 10:55. Let's see what happens. HOD rejection.
And
for
I've
now.
always been so conservative. Every
We did
time I
not
start
break
a
the
new job
HOD
and they say, what do you want? I say, oh, a lot of bonds.
No, but you
and then
dollars
of course,
on
I look like years
SPX.
later
That's
and
about
say,
14.
But
That's
you know
about
what?
40,
I don't know what to do. I'm too
40 cents,
conservative.
50 to 60 cents on SPY.
Kenny Placari, Slate Stonewell, thank you for being here. We'll see if we have him back. No, I'm kidding. Thank you so much, Kenny.
At all-time highs. Choppity. Do we see? Or they're saying some bullshit about government shutdown.
Is this President Trump is going to visit Iowa today, touting his economic agenda while putting focus on affordability ahead of this year's midterms. The trip also expected to hit on the president's energy policy. White House Chief of Staff Susie Wiles says she has advised the president to, quote, campaign like it's 2024 this midterm season. The president said to visit a local business in Des Moines.
All right, here comes the Chicken Littles.
Later this afternoon. I want to bring in Missouri Congressman Jason Smith. He chairs the House Ways and Means Committee. Mr. Chairman, good morning to you. Thank you so much for being here.
It's always great to be with you, Cheryl.
Yeah, so let's first talk about the president later today. He's going to be going to a local business. He's landing in Des Moines. He's going to be giving this major address. Affordability and energy are the topics that we're hearing from the White
Anything
House.
can happen
This
here.
is
There's
President
a lot of
Trump
fucking
going
bulls
out there
up
to
there.
sell
There's a lot of bulls here.
you and your message,
got
your
let up here.
Republican
There's a lot of bears
message
trapped
to the
down here
American
too.
people.
That's why
Something he
we
does
did the
really
poll.
well when he gets out there. What are your thoughts?
It was showing HOD to 95% of the population.
Does a phenomenal
but
job.
options
Anytime
says there's a
you
lot of
can
fucking calls
get
up
out
here
of
and there's a lot of
Washington
butts
and
up
be
here.
with
Why? Because
real
we went to
America,
all-time highs. We were at
that
all-time
is
highs.
what's important. We've done that with the Ways and Means Committee. The president does that extremely well.
Cycle
Yesterday,
dictates what's about to happen.
yesterday was the
10:55
start
bounce to
of the
11.
tax
Time is
filing
10:57.
season.
11
and
is the first.
because of passage of the One Big Beautiful
I need
Bill,
water.
the working families tax cut
10:57 is the first
provision,
candle of
we
11.
will see the largest
11 a.m.
refunds in the history of America.
Bearish
In
volume
fact,
is
more than
trying to
$91
turn
billion
bearish from
of
bullish
an
territory.
increase.
It is in the
That's
bullish neighborhood.
26%.
Blue
on
line
average.
is still
It
above the
projected
volume that is turning red. That is
every
called
single
bullish
American will
neighborhood.
face about
Bull
$1,000
environment,
increase
bull
in their
control,
refund.
trying to turn
this is
down
very
the
helpful
Chicken Littles
when
are.
people are struggling to put food on their table, clothes on their
Until
backs, and
10:30 breaks,
gasoline
I
in
ain't
their
gonna say shit. That's
So when
like,
the president
oh,
goes out to
super
Iowa
bearish.
today,
Oh, bears
the
are
other
coming.
component
Oh, so
is
like,
energy policy.
it's jack shit.
And you know, these moves. Look, I
It's
mean, we
purple
had,
box
you know, the
playing
capture of
from the
Nicolas
bottom of
Maduro.
10:30
We
to
may be
HOD
opening up,
all-time high.
production and
That's the
refining
most
capacity
fucking
from Venezuela.
logical
We've got
say
this
shit I could
armada,
clearly say
you know,
right
the
here, right
president telling,
That's the
Axios,
most logical
excuse me,
shit I could
last
say
night or
clearly
something
right
about
here,
the
right now,
armada that's, you know,
without
moving towards
positional
Iran.
bias,
I mean, that
without
global
positional
energy
thinking,
story is changing.
based on
But how does the
cycle and
president
time
sell that to the
confirmation
American people? Gas prices
alone.
are incredibly low right
10:30,
now, near historic
I really
lows.
thought it was going to break
What's the next
LOD, but
leg
I
in
mean,
that, do you think?
it fucking
Especially when it comes
100%
to, say,
reversing then
electricity
HOD
prices.
all-time high test, so
Anytime you pull up at the gas pumps right now in the
Truly.
Midwest, they're the lowest they've been in 5 years. So that's a step in the right direction.
I mean,
and
shit,
that's
am I wrong all
because
day?
Of
Fuck.
the actions of President
Could be,
Trump
I don't know.
and
The
this
market's that crazy.
administration.
It really
And
could just be
so
going fucking
he's-
flying
but
to
he's
800.
not going to settle for that.
I'm getting
The
7,000,
president is not
so
someone who just is okay with getting by. He wants to make sure that there's jet
I don't
fuel
wanna
on this
fucking be
economy. And one way that you do that is making sure that you have low
Furuji Guruji, right? I just want to be fucking
President Trump sat down with Marie Bartiromo
safe with the shit I say, the deductions that is coming because the market is crazy almost.
So we're having a great year, but Democrats have had good years as presidents too, and they lose the midterm. So for whatever reason, I mean, I think I saw where it's 2 out of the last 50 years.
We're leaving it blue since we're near all-time highs. This is bull territory.
So there's something psychological that if you're president,
cycle is coming in crazy. Crazy as in scary, but I mean, it could do anything. I don't know.
It doesn't make sense.
10:45, there's a divergence at the roof. They left the divergence at the roof. No one knows if it's going to go clear the divergence. No one knows if it's going to reject with the divergence again and then go break it later. No one knows if
this country is
not clear tomorrow.
It's doing better than it's ever done, and you're going to see that. And you know, we inherit a lot of debt, 36, but growth will make that a small number.
Gold is squeezing up to all-time highs.
You know, without a doubt, the odds are
fucking
against
using
us.
my
If you
puts
just
too
look
on
at history,
gold.
I think only 4 times in the last 100 years has a party that was in power actually picked up seats. But I'll tell you, under the leadership of President Trump and what he has done in his first year in office, which is more than any president I've ever seen in their combined 8 years, that's phenomenal. So expect the unexpected. There's no one that's going to work harder.
10:55 getting bounced on and trapped in 2 minutes. Right? This is why I hate candles going slow shit and nowhere because it is most likely to not.
I mean, you know, talking about whether it's potentially another
fucking
shutdown, which the
bounce
president
or
also addressed with Maria. You know, Congress is racing against the clock right now to pass this government spending package. Current funding expires 12.
It's showing show north. Oh my God.
Senate Minority Leader Chuck Schumer is warning Democrats they're going to vote no unless DHS
I mean, if they lose it here, though,
and
then they can't come back. So,
after that second fatal shooting by a federal agent in 2 weeks that happened there in Minneapolis, Congressman. So the White House is rejecting Democrats' demands to strip DHS funding from the measure. First off, do you think there's going to be another government shutdown? Second, how do you handle or combat the issue of funding for DHS and these threats that are coming from Schumer? I mean, are we looking at another Schumer shutdown? Because
we're there by 40 cents.
On the Democratic side.
All-time high breakout. If they bounce it for $1, breakout for $1.
I sure hope Chuck Schumer
new all-time
learned
highs.
from the last 43-day shutdown, which resulted in accomplishing zero, except hurting numerous Americans. When you make the statement that
President said it best. We went all-time highs 58 times in 52 weeks.
That you are not going to fund FEMA.
I don't know. That's what he said yesterday.
I
don't know if that's true.
Right now, with those natural disaster storms going across more than 2/3 of our nation. You're not going to fund TSA agents. You're not going to fund the Coast Guard. Why Chuck Schumer would want to play politics with that is unacceptable. Just before Saturday, Cheryl,
do you believe that we went 58 times all-time highs in 52 weeks or less? I don't know. I don't even know if it's true, but that's literally what he said on the presidential live stream yesterday. We have President Trump coming live today at market close 4 p.m. I don't know if I'll be on that long, but presidential live stream is at 4 p.m. today. Just letting you know.
About air travel. When people can't get their planes, they can thank Chuck Schumer and the Senate and House Democrats for that.
Well, let's talk about Minnesota.
I do have to head on to work earlier today, so I don't know about 4 p.m., but I'll be on.
What has become a very explosive situation in Minneapolis. Listen to this.
4 p.m. though is literally, you know, he gets on 20, 30 minutes after the 4, so it's 4:35, like 6. I can't fucking do that. I can't do that. I would love. I mean, I'm gonna watch it. Our WhatsApp group's gonna watch it. Hopefully, on mobile or at work or something or home.
Maybe go to another city and
but,
let the people of Minneapolis decide. Do we want to continue to have all of these illegals? Are we going to allow our governor, attorney general, and mayor to get away with this?
I don't agree with that. The push to abolish ICE.
Look at the RSI turning back up. This is bull territory, bull neighborhood, bullish neighborhood. Bull neighbors are destroying the fucking bears right now.
Defunding ICE.
11 a.m.
Preventing federal officials
blue line above the
enforcing
MACD. I call that bullish neighborhood, or whatever you want to call it, bullish squeeze or whatever the fuck. Until that shit turns down like QQQ.
Defunding ICE or abolishing ICE, you are allowing this lawlessness to continue.
Look at
Let's
QQQ.
remember, ICE is in a lot of
SPY
places
is
around
looking
the
way
country
more
and
stronger
Border
right
Patrol,
now.
and you don't have these problems anywhere but
I don't fucking
Minneapolis.
know.
That's because
You tell
got
me on
very
what?
failed
I don't
leadership
fucking
on the
know. You
ground
tell
there.
me.
And President Trump laid it out
What
really
the
well.
fuck is IW
He's
doing?
offered a path for these
Below yesterday's
cities
low.
to be more cooperative, to make things
Burning
easier,
bulls
to
and
not
bears.
have incidents and chaos. They need to turn down their violent rhetoric.
Congressman
Turned
Gargano
down for
has
what?
been
HOD into 11:05, 11:03. There's a
is gonna be
divergence at the
taking
roof
over
now
for the
again.
administration. What are your thoughts on all of this? And what is the path forward to de-escalate the situation there?
Well, first, without a doubt, it's tragic when there's a loss of life of any in these kind of situations. But it's incredible to look at President Trump's leadership. Yesterday, for him to take time to call the mayor of Minneapolis and also Governor Walz, which are two people that have not said very nice things about the president, but he's doing that to try to bring down the temperature. If you look at other cities that ICE has went into, whether it's New Orleans, whether it's Memphis, Chicago, LA, you haven't seen these kinds of interferences during the ICE procedures. So, like, I think that local, state, and federal people can work together for the common good to enforce our immigration laws. That is what's important.
Chairman Smith, it's always great to speak with you. We're going to be watching all of your work here. It's so important. Thank you for being here.
It's great to be with you, Cheryl.
All right.
An ounce. Gold is up, get this, almost 20% in 2026. Deutsche Bank out today saying gold could hit $6,000 an ounce this year, provided the dollar stays weak, which is normally a conducive backdrop for trading commodities to the upside. Silver gave up almost all of its insane 14% intraday gain yesterday before resuming its rally today. Get this one, silver is up close to 60% this year. That is an absolutely massive move for silver, totally out of the blue. Yesterday, retail traders poured about $171 million in net buys into the iShares Silver Trust ETF,
put the call ratio in the group chat.
Vanda Research. That's SLV on the Outperformance platform. This is the largest single-day net retail investor inflow on record. This isn't just an ETF trade, though. Retail investors are rebuilding broad exposure to real assets. Just look at metals plays. Hecla Mining and Core Mining both have surged into the top 50 most actively traded stocks. Bottom line here, we are smack in the middle of a metals price bubble that is showing no signs of easing up. If you aren't partaking in it, ask yourself this and be real. Why are you sitting this dance out? Real quick on General Motors earnings, here's what I liked and why the stock is moving higher. One, a 20% dividend hike and a new $6 billion share repurchase plan were both revealed. Both were unexpected. Two, the company is over its EV push and is locked in on driving more margin gains this year, no pun intended. Three, GM calling out 12 million OnStar members and new AI features arriving to cars suggests it deserves to be viewed partly as a software play. Now, GM is no Tesla on software. I'm not trying to say that, but still, it's doing good things on this front for the business, so it might deserve a higher multiple than a traditional automaker. That is all I'm saying. Don't let me have it on X. I don't want to hear it. Here on the opening bid roundtable, Art Hogan, B. Riley Wealth Chief Market Strategist, alongside Yahoo Finance Senior Reporters Brooke DePalma and Inez Ferre. Inez, I want to start with you because what we're witnessing in the metals market is it's stunning. I think that's the word I want to use here. Last week it was a rally, and we were watching the buying activity emerge. It's just flat out stunning right now.
It is stunning, and Robin Brooks of the Brookings Institute called it breathtaking and profoundly scary, what we're seeing with the precious metals market. Look, I think in your opening comments, I mean, you laid some of this out. Geopolitical issues, you've ant resource stockpiling.
There's a fuck ton of puts and a fuck ton of calls. More calls here than puts.
Something that has been accelerating since last year.
Margin.
And if you
Nearby,
take a look
there's
at
a lot of puts
gold
down
at
south,
5,000, I mean,
6946,
Brooks
970, that's
from
already
Brookings
destroyed.
Institution was talking about this is much
I didn't
bigger.
even draw
The
6946,
gold rally is
970,
part
so
of
I guess you
something
could redraw
much
the
bigger
shit
because you are
all the way
seeing
fucking
all the metals
which are rallying. And you are taking a look at now a dollar that has started to decline because it was consolidating in the second half of last year. And so this debasement trade is expected to even now accelerate it with the dollar declining because that gives more purchasing power to non-dollar buyers.
We're almost chopping at all-time highs right now. Someone said all-time high shop going nowhere earlier. We're going a little bit chopping higher, but they're doing that classic.
Scared that governments will have to inflate away their debt. So there's a myriad of issues that are going on with this entire bubble that we're seeing in the precious metals market. And yes, yesterday you saw silver that was at 115 an ounce at one point. And you are seeing, of course, a silver squeeze to some extent. And you are also looking at, you have strategists that are saying, watch out, because you are going to be seeing this going lower at some point. But nobody wants to call a top yet because it's very hard to call a top at these prices.
Art, hot potato to you. You want to call a top on precious metals?
Hot potato,
I don't.
chicken
You know,
little,
what's interesting here, Brian, is that the gold breakout happened 2.5 years ago, and that was after breaking a 45-year inflation-adjusted base. So momentum players started to notice that. Not surprisingly, 2.5 years ago or thereabouts, the SWIFT system froze assets because of Russia's incursion into Ukraine. And then central banks and governments and oligarchs started saying,
into a single
well, if they can freeze these
DT,
assets, perhaps we need to have more hard assets on our balance sheet. So central banks, for example, went from buying 17 tons a month to 25 tons a month as of last week. So central banks are a big driver here, and that's not slowing down. But to Inez's point, neither is geopolitical uncertainty and fears of inflation. So I think all of the drivers are still intact. We could certainly have some pullbacks here, but I don't think we're going back to anywhere close to what last year's lows were. And I think the momentum players and certainly the fundamentals continue to move the precious metals higher.
Julie here, quick short story. A couple days ago, I went to get my eyes checked, needed some contacts, totally ran out. I just forgot that I even needed them. My eye doctor said, Brian, I sold my gold 3 or 4 years ago, and I'm just out. They didn't want to get back in.
All day long showing, I don't know. It's really up there.
How would you, if you're not investing in gold or silver right now, what is a rational way to go about it?
Well, 3 things to answer that question. First and foremost, he sold his gold. He might have held the precious metal. ETFs are a perfect way to play this. And certainly expect some pullback in both gold and silver and use that as a buying opportunity. So the gold-silver ratio, which is about 1,000 years old, is a ratio of gold to silver that sits somewhere between 50 and 80, right? And silver was out of whack. That's why we've had the explosive move. Now, the gold-silver ratio is above 90, so silver's probably gotten ahead of itself, and that may be one of the precious metals that has the first pullback. I think the fundamental drivers are still here, but I would use pullbacks as an entry point, and I would certainly use ETFs. You don't need to buy the precious metal and store it in your basement in a safe.
Brooke, full disclosure, I'm reading that General Motors slide deck this morning, and they note in their guidance for this year, commodity cost headwinds, and I thought, oil prices are down, and I'm guilty of thinking when a company calls out commodities, it just means oil. And then I'm like, hold on, Brian, well, that's not the case. I mean, a company like GM is using a lot of metals. So I imagine this is one of the first indications, this move in various metals, this explosive move you've seen really across the board is going to impact large companies.
Yeah, well, we're hearing from GM this morning within their presentation under their 2026 guidance under headwinds. They specifically pointed out that commodity inflation, including higher memory disk cost, DRAM costs, and FX headwinds of roughly $1 to $1.5 billion as a potential headwind. And this really goes to translate how these higher commodity costs are really impacting real-world things that you and me, beyond just investing, are purchasing, out and about, new vehicles, new cars. And they also mentioned within that headwinds is that onshoring production to the U.S. supply chain investments and higher software expenses also resulting in $1 to $1.5 billion of additional costs. And the last thing that we noticed is the potential headwind for 2026 guidance is also
I refuse to believe this is going to fucking go all-time high and break out North Rocket when we already did.
Are slightly higher, primarily due to additional
before a significant pullback at least.
So definitely this guidance, though, not really seeming to impact investors, slightly
shrugging
this off as the call is still underway.
And as I'm looking for the folks that for the past few years have called Bitcoin digital gold. Where are they, Inez? Because we're not seeing Bitcoin rise in concert with gold or silver. Where are these folks? Tell me where they are. I want to find them.
They're still burning calls and puts on IWM. Nothing has changed.
Sean Farrell of Fundstrat keeps saying that the fact that gold has rallied so much, this will eventually be good for Bitcoin because it tends to precede a rally in Bitcoin.
Well, look at this fucking MACD on.
Nevertheless, they are getting taunted by the precious metals holders who are basically saying you should be buying precious metals. You should have been buying precious metals. And look at what's happening with Bitcoin. It's hard to see Bitcoin rallying at this point, especially because of that market structure bill. It really needs to pass in order to, that needs to really be the next catalyst for the crypto space. But just getting back to what you were talking about with Art earlier as well. Look, there are some strategists that are pointing to this structural shift that you are seeing away from U.S. Treasuries and with portfolios that are starting to look at like a 30% part of 30% of your portfolio now
20 cents
in
on SPX.
Gold.
That's like 10 cents on SPY.
There is a structural shift, and this has to do with also demand for U.S. Treasuries that is happening. And part of what we're seeing, part of that reason of why we're seeing gold at these levels as well.
And as Costco, you know, they sell those pizzas. They also sell gold bars. They got to come out with like a gold leaf pizza. Limited time, it is.
Yeah, and those are... Those gold bars, they sell out, but I will note that there are some people that are trying to sell at least their silver bars.
I want to see how long
if you go on social media, you will see that some are trying to go to their dealers, and they're getting lowballed for those silver bars. It's harder to sell bars than it is to sell coins. That is
you can see how they're painting a picture live.
Hold your Costco gold bars. I want to go back to industrials. We talked a little bit about General Motors here. We've seen a rotation this year into industrials. Everybody thinks these are now value names, but I look at this General Motors report. I know the stock is popping. I didn't like they called out commodity cost headwinds. Didn't like they called out billions of dollars another year this year of tariff impacts. Are investors forgetting about the risks in some of these value areas or perceived value areas like industrials?
That's such a great question, Brian. But I think when you look at the General Motors itself, and
there's so many calls up here
even with today's pop, you're looking at a company trading 7 times forward earnings. So
I mean, they could hurt
the proposition is still there, and this broadening out we've seen in the market, which started in the fourth quarter of last year, and certainly has played into the first quarter of 2026, I think is going to continue. So therefore, investors are saying, where do I get a better value for my investment dollar? And industrials and materials
either a fucking really fast drop out of this
and
knife.
Financials will eventually be
really
the other
fast
two groups
drop out of
that
this
follow
knife.
along in this value trade. It's just a case of looking at multiples. And if you look at the industrial sector of the S&P 500, you're looking at a group that trades at about 10 times versus obviously the technology sector
everyone in
that
the
trades
world
closer
bullish,
to 30 times.
all-time high running.
Rick, it also caught my attention that slide deck, and you mentioned this too as well. I think it was in Slack. Another win for Google Gemini with General Motors, and I was imagining myself. I have a Cadillac Black.
Zero DT calls probably good.
Love the car. It's absolutely
amazing.
This shit,
like every single candle is just chopping a little bit down, up,
and talk to Google Gemini and craft my text messages. I'm not there emotionally yet, Brooke.
Well, I have to say that this is another win for
Since
Google
about
Gemini
10:30.
for
If
sure.
10:30 did not,
We haven't heard too much from OpenAI
this shit, I
since the
really
start
like
of this
two
year.
tests.
But what we did
I was
hear this
feeling
morning,
it was gonna
as
go,
you can see on your screen, is that they
I
are
can't even
launching
call
this
this an
partnership
extension
GM
cycle
with
because
Google
it's not.
Gemini,
It's just like
and
running
starting
for
this year, as you
45,
noted, drivers
1 hour.
can use
This is literally just
this
real
Google
direction
Gemini
to
AI
all-time
technology
highs,
to draft
all-time highs.
messages while driving.
You can call this shit bugging out. You can call this shit whatever you want, but this is options gaming at its finest. What is this red box? It's showing every single out of the money calls on SPX. All the red box is showing every single out of the money puts on SPX. If you want to see how badly it is on each price, then you have to go join the WhatsApp group. You can see it in the WhatsApp group.
I mean, it kind of makes it seem like it would be easier to text friends with a suggestion as opposed to, I mean, texting and driving definitely don't do that.
I never changed that
so
for
maybe
reason.
a way of the future, indeed.
From here.
All right, I know you like Google. I think
when
we last talked to you, you were bullish on Google, right?
Yeah, Google's got multiple things going right, not the least of which it appears
IWM is actually going
the leader of the packaged large language model
I want to
race,
see if they break
but also
HOD.
all of its deals
If they break HOD,
which continues.
yes,
So
all
obviously
bears
Gemini
are
is going to be
trapped
the part
again.
of
Double
Apple
dip
Intelligence
down.
that actually brings forward Apple's AI strategy. I also think that the fact that they won a case with the government
for the 2 hour to turn up, it would take a lot.
Their browser to be
1
the
hour
dominant browser on
is turning up,
billion Apple
technically
devices
the 1 hour is the thing
continues
that's
to be the
bullish
driver
with the
there,
15,
and even
with the
with
30
the
and all that
best
good
outperforming, I guess, of the Mag 7s year to date. But I think even with that run, I think there's a lot of runway in front of these guys.
I gotta be honest, though, I just miss good old crappy 80s cars like my parents' white Ford Escort. I mean, you just got in it, you put the seatbelt on, and you drove. Maybe it drove, maybe it didn't, but at least you know you were getting out with those technology.
We changed
hang with you guys. We'll be right back. Lots more coming up in this show. We're just getting warmed up here. We are coming in hot with some sharp stock analysis next and a spicy final thought on your favorite dying retailer. ... GameStop.
It's a little bit farther out than not. We are at all-time highs. So if they do reject, I'm expecting it to be violent, but also maybe everyone in the world. So I don't know. The poll though was majority bullish, and they did some sort of chop and did not even pull back. All-time high break. This is gap up on the 1 minute candle now. Alright, all-time high broke. New all-time highs. New all-time highs. Literally all it did was destroy 0 DT puts, cause since open, I guess since this ride, breaking the U up, never ever looked back. The spike up was crazy, but again formed the W. IWM, complete W. Gold, complete W. Market, all-time highs. Alright, time is 11:20. Yeah, I am still in, but I'm not patient enough to hold or not hold, but wait for all-time high breakout and then get a perfect short. So holy fuck, but this is showing all-time highs now. We could stay up here for the next day or two or into the week. FOMC could be volatile too, but here we are 1 day before FOMC and we are at all-time highs. FOMC. Daddy Pow. Daddy Pow. This fucking crazy V and rally on QQQ, gold, even IWM. I would call this shit rising from the gutters, but I mean honestly, crazy open, crazy chart pattern, huge W for those anyone that was able to get from 10:30 to 11:20, even though it looked like it was chopping everything up. It literally looked like, that's crazy, right? 11 to 11:05. What did that do on the market? 11 to 11:05. It did jack shit on the market. Make it make sense. Thank you. Makes no sense.
Also, just big picture here, just goes to show this
all-time high breakout,
Trump,
folks.
Affordability
This is
remains a
new all-time highs
topic
for
ahead of the midterm elections as they tried to
as
ease
the
Americans'
president likes to call it.
That
market broke all-time highs 57 times in the last 52 weeks.
Could increase, albeit
W.
based on the latest University of Michigan Consumer Index. We have seen that year-end inflation expectations tick down just a little bit, but it seems like
fuck it. Let's all send rocket emojis in chat. We call this Trump
to try to get that
rocket. We call this American
rocket. And this is the last thing I would argue the U.S. economy needs. We're right at the beginnings of an AI infrastructure build-out. You have potentially to spring some very large tax refund checks coming. This is reducing credit or contracting credit. Doesn't equate to a rip-roaring economy.
We're at that point, folks. New all-time highs today is, I gotta change my title. Volatility, Trump,
and look, like what Art was saying, this is a populist sort of move. It is part of President Trump's affordability push, but probably there may be a compromise. I mean, you have a report from Reuters talking about Bank of America considering a 10% card as a competitive
54th president.
product,
I'm going to say this is the 54th new all-time high, right?
Is President cap.
Trump.
I mean, this to do this would really upend the entire industry. So there may be some solutions that these companies may be saying, look, we can come up with a product like this, but not putting a cap
Trump's new all-time highs
on their products in general.
All right, let's keep it moving here. I'm calling my chart of the day the grand rotation. I love whipping up random terms to capture the essence of the market. I live for it, actually. After several years of tech giants getting bigger and bigger market caps and dominating the makeup of the S&P 500 like never before, a different dynamic has emerged this year. The weight of the top 10 stocks in the S&P 500 has recently seen some major weakness relative to the rest of the stock market. Thank you, RBC Capital Markets. Lori Calvasino for the chart you are looking at
crazy.
Right now.
Bullish.
The chart is primarily made up of the Mag 7 tech giants. Sentiment on tech has soured as fears of overspending on AI infrastructure ratchets up. Expect many of the tech companies this week reporting earnings to hike their CapEx plans, believe it or not, much to the dismay of investors. I am most concerned about what Meta will say on this front. Investors have rotated out of tech and into more value sectors such as healthcare, energy,
down
industrials.
To 1 minute and gap filled into 1125.
Let's put it to the old B roundtable. Art, it's in one respect, it's good to see a more rational market, but you look at these 7 stocks, you can't argue their importance, but you also can't argue that the next series of quarters are going to be huge from top and bottom line perspectives. Maybe not for Tesla, but the rest of it.
For historical chart.
Yeah, for sure. And I think one of the things that the chart highlights is just how much the move has been on a 3-year stack. So I think it's important to say, have these things gotten ahead of themselves? No, they've consolidated nicely. NVIDIA is basically where it was when it reported earnings last quarter, and the rest of the group, Alphabet, which has been the top performer, has really moved sideways. I think that can be healthy. That consolidation can be very healthy. If we think that we're in the late innings of the artificial intelligence revolution, then perhaps this move is sustainable. But I just think that as we work our way through earnings and the hyperscalers talk about how much more they need to spend to get to that agentic large language model dream, I think this company rates higher. And certainly, if you look at the average multiple of the Mag 7 Tesla, you're trading at 30 times for companies that typically are growing their earnings between 40 and 60%, and have gross margins that are north of 60 to 70%. So I think that
look at yesterday's trend line actually holding
creating a group that looks much more attractive as we head into earnings this week.
And as outside of the move in precious metals, which has been, in my view, the story of the year, the second story has been the broadening out of investors. So they're thinking beyond these 10 large companies, which includes the like of a Berkshire Hathaway and a Broadcom, and dare I say, that's healthy. Hats off to them that there are 490 other stocks to buy in the S&P 500. Good for them for finding them.
Yeah, and this is what strategists have been talking about, that this would happen this year, that you would see a bit of a broadening out. I mean, you are looking at year-to-date energy stocks are the biggest gainers. You're looking at materials, industrials that are higher as well. You also have the big, beautiful bill, the tax benefits, tax incentives, and this is also what's driving some of these more cyclical stocks as well. So they are going to be saving tremendously from this big, beautiful bill and all the infrastructure that they're also building as well.
Art, last word to you on this front. I know you mentioned previously that you like Google. What are your thoughts on NVIDIA here?
I'm going to update the SPX put-to-call ratio right now.
Yeah, so obviously we're in the earnings Super Bowl right now. The NVIDIA's reports like the earnings Pro Bowl. It comes after the season.
Let's hit the like button on the stream, folks. Thank you so much. Give me 1 second while I update the SPX put-to-call ratio.
Trading at 25 times forward, which is going to go down after the report because they're going to raise their guidance. They're the tip of the sword for artificial intelligence spend. So I just think that anything NVIDIA is going to reinvigorate the trade. I agree with Inez on the broadening out, which puts us in a much tougher place. But the consolidation in the Big Ten certainly sits in a place where they're getting a whole lot more attractive in real terms.
Big thanks to Art, Brooke, and Inez for being on the roundtable. Always great to see you all. I appreciate it. Stay warm out there. Final thought before I head out to de-ice my car. I continue to watch GameStop, a company I've criticized heavily, I mean heavily, the past decade for horrible execution by management and an outdated business model. Michael Burry, the investor made famous by his bet against the U.S. housing market ahead of the great financial crisis, has
There's so many fucking puts below previous all-time high now.
Crowd-favored GameStop. He apparently is a big fan
There's
of
literally calls
Cohen,
at 70, 15,
whatever that
70,
is,
25.
Details have been minimal
that
at
is
best, with an emphasis at best. Cohen is GameStop's largest individual shareholder. Here's what I say to Burry and other GameStop stock pumpers. GameStop stock is up 45% since Cohen took over as CEO on September 28, 2023. The S&P 500 is up 62%. In the past 5 years, GameStop shares are down 70%. The S&P 500 is up 87%. So let's chill out in anointing Cohen the next Warren Buffett. For buying into a company that is dying, building up cash reserves, and figuring out ways to deploy it all. Look how this praise worked out for money manager turned failed Sears leader and investor Eddie Lampert. Sears no longer exists, and Lampert is nowhere to be found. Have a great rest of the day. Julie Hyman is up next.
Why is this shit an arrow? What the fuck? I just realized it's an arrow. Butter knife up.
I think it depends on where you're looking for exuberance. If you're looking at institutional investors, you are absolutely correct. There's really no signs of exuberance. We can see in that Deutsche Bank consolidated equity positioning, we're just slightly above.
Let's see if the RSI goes into bear territory or not. We are still at all-time highs.
Who are just trend followers have been sitting more on the sidelines of this market, not going all in. The contrast is with retail investors. Retail investors are very much all in on this market, whether
just frustrated ever since this push up all-time high break gap filled. There was a gap here and they gap filled already.
Has definitely pushed all the chips to the center of the table.
Starting to get into the teeth of earnings season this week, Cam, what have you seen so far? What do you think the market maybe needs to see?
I think one of the key stats to watch, and as it progresses, we've only seen about 13% of the names report, but of those 13% of names, what we're seeing is
up and gap filled on all-time highs.
That's effectively equal to the 8.3% that people expected going into the quarter. That's a contrast from the last two quarters where you had beats that were so large that you ended the quarter with effectively double the growth rate than what you expected going in. So that's probably why we're seeing this market more shrug in the face of these beats versus dancing with joy like we saw in the past couple of quarters.
All-time high pullback is trying.
That's why I'm in the triple leveraged all cash fund. And Nathan just mentioned Kimberly-Clark. So I looked it up, Irving, Texas. We all know the name. Last 10 years, it's gone up at 3% per year. It's basically, to be polite, a failure. Okay, fine. Institutional ownership of Kimberly-Clark and the Bloomberg, 87%. Institutional ownership of Apple, 68%.
Yeah.
That doesn't make sense, does it?
Well, you know, I think part of that is the function of people going down the list and checking the box and owning everything in every single sector, where just because they're having to benchmark to a certain index. And consumer staples are one of those things that we think that you should think of them in
bullish neighborhood with the RSI.
And what I mean by that is they provide protection to portfolios in a short period of time, meaning when things really start to get squirrely in markets, that's when you see consumer staples outperform, but then they give it all back up. So when you think about retail investors who might be wanting to shoot for growth, that's probably why you see that
Okay, but is Apple under-owned? I mean, we're going into major tech. Paul, you said Apple's like this week, right?
No, they're coming up a little bit. Yeah, they're this week, along with Meta, Microsoft, Tesla.
They're all under-owned. I mean, that's a fact, right?
So not necessarily. If you go back to November, late
Zero
October,
DT is a
what
dream
you
right
saw
now.
in
This
the
shit is
positioning
dangerous
data
stuff.
is that mega cap growth in tech had some of the highest positioning exposure by
Fucking
institutions
going down and spiking up.
going back over the last few years. And what they were really underweight was cyclical areas of the market. And that explains why you've seen this weakness within tech and big, huge rallies in industrials, energy, materials, because here's the kicker. A lot of these tech areas have very deep liquidity and they have very large positions, but the smaller, more cyclical areas aren't nearly as liquid. So a little bit of money coming out of tech going into these smaller areas is causing these big
no
upsides.
calls up here. They fucking went up and burned all the puts down there.
It's a cyclical.
Oh, yeah. Well, he's all in there, that household.
My God. Options
so again, we're going to get a lot of the big tech names, Meta, Microsoft, Tesla,
Zero
Apple
DT,
this week.
SPX
How important
options
are those
gaining
names to
almost.
this market here?
Incredibly important simply because there's such large weights in the index. And the question will be, does the top line growth and margin expansion of their core businesses still allow them
second
and
pull of
give
the
them
day,
the free
folks.
pass to make such large
Third pull
investments
of the day.
in AI?
In your personal opinion, are we going for it? Staying
Yet.
above
You
HOD
can't argue
higher,
that Microsoft's
or are we
making a lot of
chopping here,
money
or are
off
we
of
going lower
AI
from
at
here?
this point. We've all used Copilot. We all know it doesn't work very well. So
Based
I
on
think
candles.
that it's the core business that we have to watch really closely because that's effectively what's allowing them to spend so much other money in these newer areas.
We're going to hear from the Fed this week. How does that factor into kind of how you're viewing the market here? It almost seems like, yeah, the Fed's 1 or 2 cuts this year. That's kind of it. Let's focus on earnings and other big things.
Look, I think think that if there's one chart that could
I gotta take a
surprise
phone call.
people
I'm
the
getting a
most,
phone
and this
call
is not our
from
base
some
case,
commercial
the
lines. So give
one
me a
chart
second.
is the 2-year Treasury yield. The 2-year Treasury yield is, of course, very sensitive to
I'll be back in like
expectations
5
about Fed policy, and it has been in a very, very clear downtrend over the course of the last 3 years as we pivoted from a Fed that was tightening to a Fed that was easing. That has added to market liquidity, that has
All right, before I go, I want to see what people said.
Lines, but let's get to Kevin Green, who joins me now, because obviously not a huge week. Or
One person said higher, 3 people said chop and stay, 3 people said lower. Right, in YouTube, we have 2 people saying higher, so 3 people saying higher. One person said chop, so 3 higher, 4 chop and stay,
we actually did see a pretty sharp drop
3
to
lower.
the downside when it came to consumer
I'm voting lower,
confidence.
so 4 lower.
Reading for January came in at 84.5. Street was looking for 90.6.
We have 4 people saying higher now.
And the previous number was
4.34.
That was actually revised up here a tad bit. We know that there's a lot of volatility when it comes to this report, and it's based on obviously inflation expectations could be priced into this.
Oh, actually, Chaya voted chop, so it's actually 4, 4, 5 now. 4 higher, 4 chop,
the S&P 500
5
is also a
lower.
factor within this report as well. So a dramatic drop. Now that actually could be conducive for equities moving a little bit higher if consumers are not as confident on spending money or the economy at this point in time. They actually could pull back on spending. That could have an impact when it comes to top line revenue growth for maybe some consumer discretionary industries and things of that nature. That also could lead to lower inflation over time here. We also had the Richmond Fed, once again, having that number coming in lower than the street's expectations. So the market's reaction right now, I would still say, still positive on the day's session. You are seeing the markets trading at relatively the highs of today's session, but overall, once again, a very volatile print and an aggressive move to the downside based on what we just saw and on December's print.
Yeah, it could be a case of that sort of cliched mantra in the markets this morning, a bit of slightly bad news, good news for the markets, because it could mean that the Fed moves faster, at least as to what they're going to say tomorrow about the future path of rates. Obviously, we know that they're going to sit on their hands as far as what's being baked in here tomorrow, but it's obviously about that commentary. We've seen the memory stocks doing some of the heavy lifting today, very earnings-driven kind of morning for us. As I said, we've got a few Dow components that are weighing on things as far as the mixed picture is concerned. But let's take a look at some of the industrial earnings. You're looking at Boeing, RTX, for instance, Northrop Grumman. What have you seen there? What are they telling us?
Well, we are seeing Boeing down about 2.5%. I think this is more of a buy the rumor, sell the news type of reaction for the stock. It has actually had a really decent run over the last couple of months here, and they were able to exceed the street's expectations, and even their guidance moving forward for the most part was actually better than the street's expectations here. But once again, very high bar going into this. They are continuing to reiterate their guidance for being cash flow positive in 2026. That's obviously going to be looked at by a lot of analysts as a positive, as they have seen some headwinds over the last couple of years or so, and they're really looking for additional approvals and ramp up in production for a lot of these aircraft. So Boeing, not really a surprise here. RTX also seeing a situation where we are backing off. We're still up about 1.3%, but demand continues to be fairly high. Their guidance moving forward was also aggressively higher than the street's expectations in some respects here. Now, technically speaking, we are kind of getting closer to the area of resistance. We have seen the stock pull back here a tad bit, but overall, fundamentally, they are still seeing very strong demand, not only when it comes to new orders for the F-35 engines, but also servicing of the existing engines that are out there as well. That's a tailwind for them. And overall, I think the industrial space in general has had a pretty decent run, but you are kind of seeing a little bit of a rotation because of the valuation for a lot of these names, especially if you're looking at a name like a Caterpillar or even a GE Vernova.
Yeah, a bit of a mixed post-earnings as we see across the defense names, industrials this morning as well. Let's just switch gears to obviously some of these trade headlines. I don't know about you, but if markets were people, I'd like to be the South Korean Kospi today. What trade tension? just shrugging it off, a record overnight. I'll get into that later in the program, but let's talk about the EU-India trade deal. I mean, what's the significance of this other than the fact that they're talking about this as the mother of all deals, and it took about 20 years?
Yeah, you are seeing some progress being made, and let's see if this deal is actually going to be, signed and approved by their parliament in India. I think that's going to be a big hurdle. We have seen some, issues when it comes to our trade deal with India because of their parliament. But at the end of the day, this is to reduce tariffs to zero over time, excluding some sectors like agricultural as well as autos. But you are seeing a lot of countries and conglomerate of countries, if you're looking at the EU, looking at other places in order to do deals instead of the United States. I'm not sure if this is completely trying to get away from the U.S., but they are making some strides. And you talked about that KOSPI index. It moved over 1% overnight. You are still seeing a lot of optimism in the international markets, and they continue to outperform us here in the United States. Now,
we really are burning puts since
from President Trump
11:30. I really think a drop is imminent,
and if that's
but
going to cause a little bit of volatility in our markets, maybe a re-rating higher when it comes to tariffs on the
showing
EU,
every single time
India.
lower, it's bouncing,
overall,
showing
this is actually a really monumental deal. This also comes on the back of China and Canada trying to work out some form of a trade deal as well. Once again, trying to diversify themselves away from the U.S. So this seems to be a trend. I think you are also seeing the dollar moving to the downside because of this trend, especially over the last week, given the geopolitical events that have taken place as well.
Yeah, certainly, and we're hearing that Keir Starmer is likely to go to China as well. He's looking to try to straddle both sides, the US and China. And I mean, commentary aside, the facts are that the administration wanted 90 deals in 90 days. I heard this morning we've got 2 in 10 months, which are out of Southeast Asia. 27% of tariffs now have been enacted, which herein lies, I suppose, the lack of visibility for some of these companies when it comes to these earnings, what they can say about tariffs, maybe the inflation picture as well, as far as some of that pass-through. But let's talk about the commodities space. Obviously, we're seeing the metals taking a bit of a breather this morning off the back of these records. Still up. Obviously silver 106 right now. Gold manages to hold above that 5K level. But just talk us through the price action here. I mean, is this just obviously some profit taking off the back of the big run up we've seen? Does this continue, after this?
It might. I mean, if you're kind of looking at silver, the future contract here, yesterday was actually very interesting from a technical standpoint. We obviously saw that move to the upside to $117.70, and then that sharp reversal. So that's actually kind of a bearish reversal candle. But what's also complemented with that is the volume. Yesterday's volume exceeded 318,000 contracts for the front month. That's the highest amount of volume that we've seen since the August of 2020 or 2011, if I'm not mistaken. So you are seeing a significant, or 2020, my apologies. You are seeing a significant kind of reversal actually taking place just in-house here when you're looking at the futures contracts. There's also a lot of commentary right now between the difference of the spread between the futures and where they're trading at and spot. This is where you are starting to see more of a premium taking place, and that's because the physical demand is still outstripping supply at this point in time. But do we actually see a breakdown when it comes to demand over the next couple of months, as these prices obviously will have an impact on the industrial segment as a whole? Now, could this be the reversal? It could, but we've had a fake out before. Actually, back in middle of December, late December, we kind of talked about, once again, another volume spike, a bearish engulfing candle that took place. We saw some follow through for about 2 days, and then we started making new all-time highs when it came to silver. So right now, we kind of wait till the price action really confirms, but yesterday's candle is notable.
Yeah, absolutely. And I think you were on the money when you said 2011, because I was actually just looking at the SLV, the silver ETF, and it was pointed out that as far as that volume is concerned, the prior records were May 2011 and February 2021. So that just gives you an idea, obviously, what we're seeing as far as some of those flows are concerned as well. KG, really appreciate you getting us across some of the data and the key stories and movers for us this morning. I'll speak to you a bit later on.
President Trump about to come out swinging at 4 p.m. saying new all-time highs in the market. New all-time highs in the market.
Front, the EU and India have reached a free trade deal after nearly 2 decades of negotiations. The agreement comes as the two powers look to offset President Trump's trade policies through economic ties. Now, European Commissioner President Ursula von der Leyen posting on X that they have concluded
2-decade deal went through with
Joining us
EU.
now is Seema Shah. She's Principal Asset Management Chief Global Strategist. Seema,
Do we have any
so
Team
much for
Indias
this morning.
in
Lots
chat?
to get to.
Let's get some flags. European Union and India. No,
From Washington this morning. What could it be? What could we possibly hear from the administration in response to what said this mother of all deals here?
Well, it's going to be interesting how they respond. But I think just looking at the reasons for Europe and India to have this trade deal, I mean, firstly, this has been a long time in the making, so it doesn't come as a surprise. But I think it does tell us that you could see increasing a number of alliances between other countries around the world as we get used to this kind of multifaceted world where economies can't be completely dependent on the US anymore and really need to start thinking about their trade relationships with other partners.
Now, Seema, this also comes a week after we've heard those threats on the EU over the potential, buying agreement to buy Greenland. We then heard the framework of a agreement has been made, and President Trump pulled back those tariffs. You say that Washington's growing reliance on tariffs as a geopolitical tool suggests here that trade policy volatility will remain within this administration as part of the framework or feature of the investment landscape. Do you think that this sort of plays out into the future narrative? Will we continue to hear different threats, tariff threats, after we heard that they're making this other trade deal on the sidelines here?
Yeah, I think we can expect this to be part of that geopolitical playbook. Tariffs being repeatedly used. We've seen them
here. Time is 11:45. 11:40 pushed up with IWM.
But I think the key thing is that markets are really adjusting to this. I think they're learning a number of things. They're learning that
I don't even know how much they might go lower here, but
on growth or inflation as much as
if 11:30 breaks, there might be some sort of
very strong U.S. profit margins, which meant that companies can absorb it. But also that the Trump administration doesn't always follow through with those threats. So I think there's a number of things which are enabling markets to look through a lot of that noise, which has been the right trade. And remember, we have seen this play out last year, where we had a number of very serious
now there's some correlation between
and yet the economy and the market performed very, very well. So I think markets are learning a lot from last year.
And Seema, one of those latest announcements that we got, another tariff threat, was that threat on South Korea, increasing that tariff from about 15% to 25%. Large implications there for automakers, pharmaceuticals.
There's a divergence at the roof. That's the most craziest part right now.
Could fall out into the economy here.
Well, it's interesting that the South Korean market hasn't really reacted very much. I mean, there was a knee-jerk reaction, which was very quickly corrected. As is the case with a lot of these things, we need to wait and hear what the details are. Of course, if they are actually going to be followed through, there could be some impact, of course, for a lot of these markets. But ultimately, a lot of these companies have adjusted to the idea that tariffs could come through. They're adjusting their supply chain, so that dependence again on the US is declining. There will be an impact certainly if those tariffs go through, but I don't think that they would be as severe as maybe we would have feared this time last year.
And Seema, this is all happening as we're set to get some earnings from major U.S. companies, Microsoft, Meta, Apple, Tesla this week alone. You say that earnings remain the anchor here. Walk us through how investors should be going into these reports and what they should be listening for.
MACD and RSI.
I think to your point, we've had an incredible run up for markets. Valuations are quite stretched. So when we're looking at how total returns are going to perform for this year for equity markets, it really does come down to earnings growth. So that has to be key in terms of predicting where things are going to go. So specifically for these big tech companies, there is increasing dispersion. Investors are looking at the tech company, the tech trade, on a slightly different idea, suggesting that there's more focus on the balance sheet strength, on cash flows, and of course, what are the intentions on AI Capex and how it's going to be funded. So we're expecting to see a lot more dispersion within the sector. That doesn't mean that the AI narrative is being challenged very much. It just means that investors are maybe starting to think through what are the differences between the companies. It's going to be very important how these tech companies perform, how their earnings announcements go. That's really going to set the tone for the market. But I would also say that, look, we are looking at a really strong macro backdrop for the US. That does suggest that earnings growth, not just in the tech sector, but along a number of different sectors, should be performing well this year. So from our perspective, tech can do well, but also we do think that there's a potential for broadening out to other sectors and actually to other countries for that matter too.
And Seema, on top of all this, we're also expecting to hear from Fed Chair Jerome Powell on Wednesday afternoon, expecting a decision on the latest potential rate cut hike or potential rate cut. It doesn't seem like they're expected to cut rates here, but you say that eventually
HOD tested, 11:30 is testing
from the Federal Reserve. How should investors be going into Wednesday meeting, and what are some key things that you would like to hear from Fed Chair Jerome Powell?
Yeah, I mean, I think there's a lot of focus on tomorrow. We're just wondering how Jerome Powell is going to be, if there's any kind of response to the DOJ probe. We're not anticipating Powell to really talk much about it, but really to be focused on the interest rate decision. You know, the market is I think, predicting with zero chance of a rate cut tomorrow. So I think that's our perspective too.
Previous all-time high breakout point. POC.
Maybe taking on a slightly
Support,
more
rejection,
positive tone on the
bounce,
economy
I don't know.
and the labour market.
It's here.
But we do think that as the year progresses and maybe some of the tariff caution around inflation does start to fade around mid-year, that would open the door for
11:45 bouncing into 11:50.
So I think
QQQ
it's
as well.
keeping that door open.
Trying to cycle
whilst
again.
Also conveying some optimism about the strength of the U.S. economy.
Fed Chair Jerome Powell in the past has also weighed in on productivity gains, kind of alluding there to the impact of AI. Do you think we could hear anything on that front as well?
I mean, certainly I think this is going to be a key topic for the Fed over the coming months and years. Now, I think even if he doesn't mention it himself, there'll certainly be a question around it because the AI thematic and around the
so
productivity
bullish
gains,
on
the impact of
QQQ,
labour
it's
market
deciding
inflation, it's going to be so key for central bankers to try and navigate when it comes to their policy decisions. Already we're seeing evidence of productivity growth in Q3 and Q4 already. So certainly that's a part of the narrative. It's probably quite early days for the Fed to be basing their policy choices on it right now. But I would suspect that this is a subject of a lot of research for
no
the Fed,
significant
for the Bank of England,
breakdown at
for the
all.
ECB, for a number of
It's
central
crazy.
banks.
This is why I feel it's
Thank you
crazy.
so much for joining us this morning. I really appreciate
Break
it.
it fucking down! The VWAP. VWAP. WAP.
Well, taking a look at futures this morning, as you can see, the Dow is down 266. This is United Healthcare. Earnings coming out, and that is pushing the Dow lower.
Bears are coming.
This is an
This is the
escalation
3/3
there.
bear
We also got
cycle.
Dow
They might
component
push the
Boeing in
VWAP and they might
last
trap it all.
mixed
I don't
story
fucking
kind of
know.
there.
If they
Let's
break
take a look at yields
11:30,
right
I
now.
would
The
say
US
the Bears are
economy
here in
did
the
expand
3/3.
at its fastest pace in 2 years in the third quarter. That was driven by strong consumer spending, AI investment. Right now, as you can see, the 10-year is at 4.233%. President Trump rolling out his 2026 affordability agenda.
These candles are so damn slow.
That's
That's the problem. It's so damn slow. It's like showing everybody. I don't want it to show everybody.
Larry, it's great to see
I want
you.
it to
So
drop
let's talk
fucking
about
through.
this because
Through.
all of these different moves that the administration made, not just from the big beautiful bill, which those advantages will come into play this year for businesses and individuals, but then also
1150 might algo range on IWM, or it may go lower into 1155. 1155 is here in 2 minutes.
The 50-year mortgage, dealing with investors, taking up
Bears are here.
American homes when it should be Americans and small families buying those homes. I mean, all of these policies do seem
From here to VWAP is 330.
point to a strong U.S. economy for 2026. What is your outlook?
Well, we agree completely with that view. I think what people are missing is just how big a productivity surge we've had.
Someone said, what are the numbers you are typing? Just watch the live stream for a little bit and you'll understand. It's just time.
Enormous. The average for the 21st
Alright, let's
century
hit the
is
like
just
button on the stream,
2%.
folks. If you're here for the first time, please hit the subscribe
we're
button.
likely to come in with a
What we do
real
is
GDP
try to best
growth
analyze
in
the intraday stock market
2025
using
of
cyclical
something over
analysis, time
3, slightly
confirmation,
over 3%.
fundamental analysis,
I
and
think we're going to
technical
have
analysis,
roughly
and
the
more
same
to
kind
find the
of
real
growth,
direction, trend
in
direction,
2026. This
and the
productivity
setups,
surge
and
is
what they're
everyone
doing
talks about
smart
a
money.
soft
So
labor market. Well,
if you are
we may not have a lot of job gains,
interested
but we still have very
to
fast
learn
growth. And the
what
definition of
that is,
productivity is
you
more
are at the
output
right,
with less
right
input.
place.
Well, Commerce Secretary Howard Lutnick joined Maria last week in Davos to talk about the
What technical, what fundamental, what right now,
the work that is ahead.
just bullish shit at all-time highs. Yep.
What would be your expectation for
Stupid
economic
or
growth
great?
this quarter,
Yep.
first quarter?
So I think this quarter, the first quarter
Exactly.
of 2026, the United
We're
States of
chopping,
America's
going
$30
nowhere.
trillion economy will
Trying to
exceed
go lower, but we're
5%
chopping.
growth.
That's for sure.
Exceed 5%.
11:55.
And
Burning
if we
all
get a
puts
new
and
Fed
bears,
chair, which
and
we'll get
the
this
burning
summer,
calls a little bit
and they cut
since
rates, which they should, because why is the greatest
HOD breakout.
credit in the world
SPX 1
paying
minute
the
gap
highest
up.
rates?
That
You
is
saw the 10-year,
around
right? We just looked at it, 4.25.
11:20.
We are 200
11:20
basis points
HOD.
higher than anybody else in the world, and we're the best credit. If they cut that rate, you're going to see the end of 2026.
What's gonna happen
You're
here,
going to
man?
see
1/3,
6% growth
2/3,
from the United States of
3/3 up.
America.
So the Federal Reserve does kick off its
How
first
much
policy
lower?
meeting of the year today. Central bank is expected to
It
hold
may
rates
not
steady
even.
after 3 consecutive cuts at the end of last year.
It's been
and then
up since
any
yesterday.
guidance we get on future rate cuts. And then, of course,
Trend
the
line.
comments from Federal Reserve Chairman
Trend line.
Jerome Powell. Your thoughts here?
Just fucking trend line.
First of all, I think Secretary Lutnick is doing his
Technical
job,
analysis
which is to
traders
be
from
a little bit
yesterday
of a
with
cheerleader
support
there.
is
We
winning
have a
and
chance of
smiling
getting a
and
5%
happy.
quarter, but I don't think the productivity surge is quite enough to sustain that for the whole year. Again, I would look for roughly 3%
Those that are requesting to
growth
join
this
the
year.
WhatsApp group,
As to
we
the
ask
Fed,
that you stay
when
active.
you have
Like
rapid
VC Ninja
growth,
just requested to
you
join
have
and
much
say hi in the
higher
WhatsApp group and the
demand
YouTube chat here and
capital.
there.
And when you
Just
have
to
higher
show that
demand
you
for
are active
capital,
first
the
and you will be
natural
active.
tendency is for rates to go up.
Wolf
And
from England,
I think that
49
it's just
international
the
number.
Fed's math,
We do not
right? They
accept
have
international
what they call
numbers
an
unless
R-star,
you
which is
prove
a
yourself that you are
neutral real
actually
rate of
dedicated
1.
and
They hope to get
watching the
inflation
stream,
down to 2,
not being
which
in the WhatsApp
suggests
group
that
for
they
whatever it is.
should have a
So
3%
that's
floor
two.
on their Fed funds rate. That's just 2 cuts. I'm sure the next Fed chair will bring in 1. They may bring in 2. But once you go beyond that, you're getting into extremely accommodative territory
Bears are
at a
trying
time when you have
11:30
very
support is
rapid
breaking
growth
just
and
slow
very
as
rapid
shit.
demand for credit. And I don't think that's a wise move.
Well, but that
3/3.
seems to be the consensus. I want to bring in Ashley
11:55
Davis from
time is
Washington. Where
IWM
you sit
gap
in
down
Washington,
from
I mean, we've
11:50
kind
and
of
went
narrowed
lower.
it down to it was the tale of 2 Kevins. Now it's it's Kevin Warsh, and then you've got Rick Reeder. Obviously, that decision of who's going to be the next Fed chair. But either way, Ashley, we've had several guests already this morning say that person is going to be dovish, and you're going to get more cuts. Your thoughts?
QQQ literally went
and
nowhere.
Larry and I used to actually work together back in the Bush administration days. I was in awe of him at 26 years old. So, Larry, I love you. But listen, and we both know Kevin Hassett from those days as well. But, my big question to you, Larry, is what do you think about the regulation that has been cut by this administration? I mean, in my days, we weren't able to do that when we were in the White House. But, I mean, what's been able to be done?
Chop flash candles are expected here. IWM is gapping down, gapping up, trying to fill gaps and whatnot.
Well, I think the deregulation pace will continue. There's a lot to do, particularly in the housing and construction sectors, and the energy sector is continuing. But again,
5 minute is trying to grow
I think
and grow
is driving
and grow.
the market now is the very natural tendency of firms to want to economize. They now feel they don't need to have.
Let's see if the
excess
POC
workers
helps
like
it go
we
down.
did after COVID. They're letting them go, so employment demand is down.
IWM trying to go
AI
north
has
since
certainly affected
11:45.
the number
SPY
of
going, trying to go
supervisory
lower
workers
since
in the economy.
11:45. Went nowhere.
Non-supervisory workers last year, I hate to throw so many statistics
went
out,
nowhere.
but non-supervisory employment or hours went up by a full percentage point, which is significant. But supervisors went down by 0.7%. Because what AI is doing is it's very good at statistically analyzing what's going on in the firm.
Slow.
And
Just
so
changing the
number
psychology
of
basically with the
supervisors, I
candles.
think, will continue to drop.
I don't like this shit at all.
And
I wanted to drop quick. I wanted to drop to 694.
Tomorrow in the state of the U.S. economy.
0.46.
Lindsay, thank
Fuck.
you for being here, Larry.
I'd be happy with the top of the purple box, but 0 DT. I have no idea. This shit is just a whole different fucking universe out. And I have no idea if they want to switch hands and drop it. I don't know if they want to just one tap, fucking just up. I don't know. I don't know if it's a 2 tap, 3 tap. I don't know if it's a chop cycle. I don't know. All I know is it looks fucking crazy different. That's all I know. QQQ looks bullish, SPY looks bearish, and IWM doesn't even look bearish. It's like fucking bearish and bullish. It went bullish, it went bearish, and it's like in the middle. The fuck is this, right? Out of the money calls getting trapped on IWM, and it's just all over the place. Market's at all-time high, so IWM, why isn't it running? Why isn't it running? QQQ's running. Different things, different times.
Us now, Senate Appropriations Committee member, Oklahoma Senator Mark Wayne Mullins. Senator, it's always good to see you. Looks like we're in shutdown territory here. You got your colleagues
Spies
on the left. I think they're always looking for
bear territory. RSI MACD is bearish. This is 3/3 bearish to VWAP
Are we
trend.
just headed straight for a shutdown this week?
Well, Brian, we could shut down on DHS funding. There's a couple options here. We could pull out DHS funding, fund the other 11 bills. That'd be 96%
for the first time
of the government's funded.
Since
however, they've been looking for this fight
10:30.
Because they really want
Bearish
reforms.
3/3 cycle.
Those reforms are. All they say is we got to have radical changes. Or we
Happening
gotta have
right now.
changes to it.
SPY.
I spoke to a Democrat
IWM
colleague today.
did
and
not
the
fill the
three
gap
things that they
yet.
asked for, we could
SPX
probably
is
work
rejecting.
through some of it.
Back at the trend
but
line.
We've got to be able to come with good
The one
faith.
above
We want every
since
agency
yesterday.
to be accountable, but DHS is doing their
I don't
job.
think that's
They're
a fucking
enforcing
joke,
our nation's laws.
but,
Tell me
we'll
what
see.
they're doing. I mean, Chris Murphy goes out there and says they're murdering
Bears
American
are here
citizens.
finally. Holy
Well,
fuck, just
these
water
American
slide, man.
citizens are
Come
actually
on!
preventing federal officers from
Water
doing their
slide.
job.
Give me a
We're
water
terrorizing
slide,
kids, and we've already
super.
debunked that story of the 5-year-old
What's the
that
damn
Democrats
word?
ran
Six
out with.
Flags,
And so they're
Water
not
Park,
being truthful with
King
American
the
people.
Car
They
ride down
just,
south.
Their
Fuck.
hatred towards President Trump and
King the
anything
Car
he
ride.
does, they're willing to hold the American
love
people
VWAP.
hostage for it, which is exactly
Bull
what they're
trap
gonna
fucking
do here
everybody.
with DHS funding.
Correct me if I'm
Okay,
wrong,
now we're going to draw the
Senator, and I
SPX put
might
to
be
call ratio
wrong,
and
but
send it into the group chat
ICE
while it's
has
happening.
already had a large amount of funding secured
New all-time high
through the One
territory.
Big
They
Beautiful
broke out and
Bill.
rejected.
So if they're going to hold up
See what happens.
funding for the Department of
SPX
Homeland
put to call
Security
ratio
would
is being
impact
updated
FEMA,
right
would it
now.
not?
All the bulls are
So
being trapped at the
whatever
HOD
happened to them caring
since
about
the gap
people
up
who were
since
impacted by
11:20.
and I'm just climate
There
change.
is a lot of fucking puts.
Yeah,
That's
well,
an issue.
DHS also does FEMA, but it also does TSA. The airports security.
Right.
DHS does a whole lot of other things than just ICE.
SPX
But keep
put
in
to
mind,
call
ICE
ratio
wouldn't
has been
even be on the
updated. This
street
is the
saying
3/3. Time
if
is 12
local law
p.m.
enforcement was doing their
Let's see
job.
how far they want to
If
go
local law
lower.
enforcement
How
would simply
fucking
just
fast?
be able
I
to
don't
go
even
to
know.
the detention
They could
centers
chop it here.
to where these criminals should be held because local law enforcement, being the police, the sheriff, and the state police, was arresting these individuals instead of having ICE go out there and do it, then all ICE would be doing is going there, picking up the illegals from the detention centers like they've done in the past, like they did underneath Obama, like they did underneath Trump, like they did underneath Biden, and simply take them. But because they created these sanctuary cities, and the
Bears
local
are
law
pushing.
enforcement, the federal government is obligated to go in and get these federal fugitive, which, by the way, if you're entered the country illegally, you're a federal fugitive. You didn't break a state law, you broke a federal law. So ICE has
We're going to go watch the SPX put to call ratio.
If they want to play around with
that we just
funding,
sent
if
in
the
the
left
group
wants
chat.
to play around with funding, how about a deal? How about you get some reforms to ICE if we can pull money from sanctuary cities that don't work with federal law enforcement consistent with the law. Maybe there's a deal there, Senator.
So
Who can
fucking
play
big, sorry.
at the funding game? How about that? That could be interesting.
Well, Brian, what you're talking about is common sense negotiations, but then you're saying that you're referring to Chuck Schumer and Chris Murphy as having common sense. That's a far reach. The fact is, they don't care about America that you and I care about. They care about the Democrat Party and what the agenda of the far left is all about. It's obstruction. How can you get upset with
Chart is
with
kind of
ICE
fucked up. I
and
gotta
tell me
fix that.
what law they broke? They're not breaking any laws. They just don't want the criminals to be removed. Why don't they want the criminals to be removed? That's the bigger question. They're criminals. So you're telling me you're putting criminals in front of law-abiding citizens. But yes, that is what the Democrat Party has become. We know this. We see this over and over and over again. And so you can't negotiate in good faith with deranged individuals like Chuck Schumer has on his side of the aisle.
No, I never heard Chris Murphy talk about Laken Riley or Jocelyn Nungaray or how Biden laid the foundation for cartels to profit from human suffering and misery and all the women and children who were being raped or murdered or drowned in the Rio Grande.
How about the 300,000 kids that are unaccountable?
Still, right.
Yep.
Before we go, $16 billion in pork, in earmarks, included in the spending package that the Senate must pass by Friday to avoid a government shutdown.
Third bear cycle.
Would you
Just one
like me
VWAP.
to name some names?
Below VWAP.
And Brian and I were talking about this.
Zero
Why do we
DT
have
might
earmarks?
switch everything. I don't even know,
Because-
but it is looking like this right now.
The funding, like, okay, here's one. Brian Mast, Republican, Florida, $750 million for Everglades restoration. And I could go on. There are a couple for Guy Reschenthaler in here from Florida, from Pennsylvania as well. But why?
Third bearish.
Why is this back? Why did it never go away, Senator?
Well, earmarks are a way. What you're seeing there is line item appropriations. And Dagan, this is a long conversation, but I want to jump in it really quick.
Time is 12:05.
Every state in the union does line item appropriations. People ask, how does Congress not know about the waste, fraud,
I
and
want this
abuse
whole
that
fucking
Doge
move in
uncovered,
2 minutes.
That USAID was spending? It's because Congress got away, when they did away with earmarks, they also got away with line item appropriations. And when we got away from line item appropriations, it
Fuck.
became bundling.
I almost wanted to say
And
they
when
could
you
trap it
bundle,
here,
you
but
just
like the
give
candle
these
turning green, they really
a
could.
large
This
chunk
is.
of money. Congress loses the
This could be
authority to
turning
know
into a
how that money
Wyckoff
is spent.
distribution.
Do we yield
What
it
is a
to
Wyckoff
people
distribution?
like
Going
Joe
fucking
Biden,
lower
when
on
he was in
purpose with the
office,
price to go
those
fucking
that
bring
he
it higher.
funded to
I don't
those
even know.
agencies.
Option says.
That's why there was so much fraud, waste, and abuse. What we're trying to do is bring back appropriations.
Whatever
so that
happens,
this,
I'm gonna call
this
out.
dollar amount accounts for 1% of the total appropriations. But we have to get control of the dollars. If we don't tell
Trying
the
for
agencies how to
one literal
spend
minute. It
then
could
how are we
change in
being
2 minutes. That's the
accountable
thing.
to
Like I have to
taxpayers?
fucking call out everything
Because earmarks,
until they
which we
don't.
think of,
Until
which
they
is
do,
the-
I'm not really sure.
Well, I mean, honestly, the bridge to nowhere is what most people think about.
Zero DT fucking throws everything out the window. It's just so different world.
No longer controls
What
the
does it
purse
show?
strings when we
A
bundle.
fuck ton of puts from 6985.
No, I was just going to say, and
Two,
there's a bunch
6955.
of Democrat earmarks as well. I just
All
call
the way
out,
down there.
if there's spending, I'm calling out Republicans.
What's the
'Cause
call
I play-
showing?
I'll talk about both sides. Go ahead.
6990 trapped all the way to
But Dagan,
6930.
Let's look at wasteful spending.
6990 almost
here.
here.
Wasteful spending. Line out appropriations,
Trapped
like
all
I
the
said,
way to
every state
6930.
in the union operates off of line out
Really,
appropriations.
really
And guess
extended
what?
calls, but this
They
is
have
there's
to
a lot of
balance the
extended puts
budget.
too.
Congress doesn't do that, and we have a huge deficit.
Bearish
All right,
neighborhood
Senator,
though.
we gotta
Look at the
leave it there. Good
RSI
to see you,
turning
by the way.
bearish on
Chuck
the
Schumer
1.
wants
Look
$1
at the
million
RSI
from the
bearish
Metropolitan
already on the
Alpha
5,
Elevator.
right?
I
I
think
said the
that's
5 and the
where it's
RSI is
there.
cooking and
Senator,
cooking and cooking,
always
right?
appreciate your
And they were gapping up on the all-time high, and they what? Candle trapped. So candle trap, candle traders versus right MACD RSI fucking basically right now.
International economics professor at Bielefeld University in Germany. It's great to have you, Professor. Where do you come up with these numbers?
Thanks, Anne, for having me. So the numbers are coming directly from U.S. import transactions data. So we analyzed millions of shipments, and the message is quite clear. So if you look at the data, import prices have not changed at all effectively, and that means that someone needs to pay the tariffs, and that's the U.S. side. So if it were also borne by the exporters, that would mean that they would lower prices. They haven't done that. That means that almost everything is paid for by the U.S. side, whether that's importers or consumers. That's something that we cannot say.
I was going to say, because if it was consumers, if it was a high number of consumers, you would see that reflected in higher inflation rates and a little bit of firmness in categories like coffee and jewelry and furniture. But overall, I mean, it's really been a story of services inflation, not as much goods inflation.
Yeah, well, there are colleagues from Harvard Business School who are looking at that part. So
that
what
would be the
happens
purple box
behind the border in the U.S. And so they see that roughly 20% of the impact of the tariffs has been passed on to consumers until now. And so 80% are with the importing firms. And so that eats into U.S. companies' margins.
Right. So I guess what you're seeing is that foreign suppliers are not. I mean, because the argument the administration made is that foreign suppliers are going to eat it because they want to preserve their market share to sell into the U.S. market. You see that that's not happening?
that is really not happening. So the data does not support that trend at all. And so we've looked at this with the US data. You can also take Indian export data, and you see that the line is flat. They have not changed their prices. They have not tried to eat into their own margins to cover some of the tariffs. That is not happening. What is happening, though, and that's why tariffs are still bad news for the exporting countries, is that volumes go down. And so if you're an exporting firm and you want to sell in this big market, the US, it's more difficult now to sell to the US because US consumers, US importers are buying less because of the higher prices due to tariffs.
Which countries are getting hit the hardest on that front?
That varies really by how hard they're hit by the tariffs. And so India and Brazil currently are paying the highest tariffs. So it's 50% statutory tariffs. Effective tariffs are a little lower, but they're paying the highest tariffs. And then you have China somewhere. And so these are also naturally going to be the hardest hit countries.
Well, and where do you come down on whether, I mean, is the impact fading? In other words, do you think we've seen the worst of it?
Stop saying some stupid ass shit, Vinny. Stop saying some stupid ass shit.
Then I think it's quite clear that at some point it's going to be passed on to consumers because U.S. firms are.
I'm deleting that chat,
they like their margins.
I don't care. I'm deleting that chat, bro.
Is that
what the fuck are you talking about?
The exporting firms are going to say, well, we have these long-term
that's
contracts
funny as shit.
Until now, but now we are willing to renegotiate and bear some of the tariffs.
Come on now.
What we do know from the earlier tariff period,
alright, spike candle is coming. Zero DT dangerous right now. I don't even know. This shit could be a fucking trap.
There were much more selective tariffs on certain goods. But the tariff pass-through was effectively unchanged.
I'm in no zero DT right here. I'm in Friday. Got cooked. Still grinded. Tuesday. Gold I'm into tomorrow. Gold I'm into Friday. Huge. Right. NVIDIA got cooked. Literally fucking 95%, 90% down from last week low. I ain't gonna lie, I never imagined that shit on NVIDIA too, doing the same shit with Tesla, but it did. So it's a cook. It's a fucking cook. Fucking worst fucking dips ever to rally up, worst pumps up to dip down. Like, it's just unbelievable on NVIDIA. Tesla, I could have seen it 2-3 weeks, a week and a half it went bearish, but NVIDIA, that thing literally turned around in 2 days. Like, the fuck? Maybe not 2 days, that's cap. NVIDIA, I was playing in the 3/3 too, that's a fucking lie. Alright, I was literally playing 1/3, 2/3, 3/3, and then I literally just got caught in the 3/3. This is actually fucked. This is actually fucked though. Who imagines a W inside a W? I mean, fuck, I guess some people, but I mean, never in my life would I ever have imagined NVIDIA back at 190 from 180 within 4 days. I don't even feel like there was good news pushing it up too. It was just
Texas Governor Greg Abbott wants the Trump administration to
It's just nonchalant news helping it up every night.
Boeing is moving lower in the pre-market despite this revenue beat and this increase in airplane deliveries. Best in 2018. Let's get to Phil LeBeau with Kelly Ortberg. Busy morning, Phil.
Very busy morning, Carl. Kelly, thank you for joining us today. I think people might be a little bit confused by the Q1 earnings. 992 is what you guys posted, but you've got the Jeppesen digital sale in there. Strip that out. It's a loss.
IWM still bearish. Time is 12.
Where do you assess where
never
you are
filled
right
the gap
now as
on
you
purpose
head
here.
into 26?
Yeah, we had a really good close to 2025. I think the important thing is that we saw free cash flow positive
3/3
again,
SPX is
in the
playing.
fourth
They want to
quarter,
go
so
lower.
that's really
They're
good
extending
news
the
as we're
bearish
starting
cycle
this
into 1/3,
recovery.
2/3,
And we
3/3.
also
Somewhere
saw
here is
increased
VWAP.
rates in our
Somewhere here is
commercial
the
programs,
horizontal slope and
particularly
support.
the
Let's see what
737
happens.
and 787. So I feel really good about the
They're bringing it down
backdrop from
super
25,
slow right
setting
now.
up a
That
pretty
is the
successful
reality. I don't
2026.
give a fuck
you look
what
at
the
free
candles
cash
make
flow,
anyone feels like,
you had two
what the
quarters in a
candles are,
row,
oh, candles
third and
making
fourth
people
quarter,
bearish, oh, it's
positive free
bearish.
cash
I
flow,
don't
but
know. It's
negative
just
for the
candles are
year.
going super
What
fucking
are you
slow.
expecting
Candles
for
are chopping
26?
down from the
Can you
top.
put
That's
a
the truth.
parameter out
Look
there
at
that people can say,
1120. Look
okay,
at
that's what you're
1130. Look at
expecting?
1140.
Yeah, we're
Look at
expecting low
1205. Look at
single-digit
1210.
billions
At every
in
single one of those
positive
moments,
cash
there
flow
was a
a
bull.
year.
Every single
Yeah,
one of
1
them.
to 3
Every
billion in
single
that range
fucking one of those
for,
moments, there was a
this
bull
year,
and a
and
bear.
that'll
That's
continue
guaranteed.
grow
Every
as we
single
ramp up
moment
production
since
and
10,
deal
10,
with some of
10,
these headwinds that
52.
we have
So
to cash flow in the
that's
near
a fucking
term.
fact. This
So
thing
we're
has been
marching to
chopping,
this
chopping
$10
up,
billion
unless it has been
free cash
blowing
flow
up
number, and it's
since
going to take us a little
10:30
bit
to
of time, but
10:50,
we've got
or
a
like 9:40
methodical
to
plan to get there.
9:55 in the morning.
The other
Calls
story
is
that's
really
going to
good,
get
right?
attention
But there
today
was also a
is the
big
tanker
push up,
program.
tiny,
We've
like,
got
I don't
another
even know
charge
what the
in the
fuck this
fourth
shit is.
quarter. I
Smart
use the
money, I
analogy
guess.
that this
Minority
is
though.
like,
Majority
the crazy
chasing
uncle
to
in the
that shit,
basement
and then they
who
got
comes
cooked
out
off
every
it.
once in a
Like, look at
while,
this.
and you guys have to take a charge.
All-time
But
high
investors,
rejection again.
I think they're asking
Oh
themselves,
my god.
is this it?
All right, based
Can
on
you
setup,
honestly say this is the
literally
last of the
people are going to
tanker
be like,
charges,
why are we
or
rejecting?
is it
What the
possible
fuck
we
is
could see
going
more
on?
in the
All-time
quarters ahead?
highs. Why aren't we
Well,
bullish
Phil,
again?
let me
Like it
put a
was,
little
we
bit of
were.
context
It's just
around the
we are
tanker
super.
charge.
There's
First of all,
setup
it
saying there's
won't
a probability and a
derail our
possibility of a
recovery in our
pullback, and the
March,
market is doing that
the
in the
free cash
3/3.
flow
They
that
don't
I
give a
just
fuck
talked
about
about.
no
In
candles.
this quarter,
They
or
care
in
about
last
setup.
year, we built
The
14
setup was the
tankers.
SPX. I don't
We're
even
going
know.
to build
There's a
19
lot of setup.
tankers for delivery next year.
Things are adding
As
up.
we're ramping up,
3/3
we've
bearish. VWAP
taken
is
a look at
testing.
our estimate to
VWAP is here.
complete, and it's just taken more resources to build the airplanes than we had
Time is
anticipated.
12:15.
You know this Department of War is
I
very
am not
focused
leaving.
on delivery,
I
on-time
expect them to
delivery,
chop here
and us
somehow. I
investing in
expect them to
ramp-ups, and
bounce
that's
or
what we're
test
doing here.
VWAP
We
somehow,
put additional
and then
resources into the
chop
program
into
so that
close
we
but
can
go lower.
successfully ramp up and deliver to our customers, and I think
Chicken
that's
Little.
going to be a good investment.
Right, those
Jim,
that
I
did
know
the
you have a
poll,
question
remember
for
earlier
Kelly?
in the morning, remember
Sure. First,
there
Kelly,
was 22 people
congratulations. You got
bullish.
the stock back to
Before, this
where
was
it
before
was,
the breakout, so technically
for the
speaking,
Alaska
everyone that was
blowout,
bullish
which is
won,
quite an
right?
achievement.
At 1044.
I wanna be sure
1044 was
people
right here, our
understand
second
that you
poll, right? There
are
was 23
increasing
people that voted
your
yes.
rate
All
of
bears are being
production,
used for
not just for the
liquidity, all-time high
737,
running.
but for the
There was one
highly
person,
lucrative
Alfonso, that voted no.
787,
So
and
we
that
will
you're
see what
even
happens into
expanding
close, but I
capacity.
mean,
Can you
it for
tell
sure did go
viewers
up
who may
north,
be
and it for
focused on the
sure used
tanker
all the
charge,
zero
which
DT
was
puts and
discrete,
plus
I
to
believe,
go up.
and had to do with
It's
a
just
CEO, two CEOs
into
ago,
the rest of the
that
day. There's a
focus
fuck
might
ton of
be
time.
here other
Into
than
the
free
rest
cash
of the
flow.
day is a whole
The
different world and a whole different story.
acceleration in
Like this shit
737
bugging
and
out.
787.
So, yeah.
Yeah, Jim, I mean, you're right. I mean, underlining
IWM
our
is still
recovery
bearish.
is the
Right? I
rate
said in the
increases
WhatsApp
on our
group,
commercial airplanes,
IWM
and
is still
predominantly
bearish.
the
It went
737
12:08
MAX
a.m.
and
12:08 a.m. was right here.
So we
IWM
moved
is.
from 38
Oh
a
my god, I
month
can't
to
talk
42
about a
a
burp.
month
Sorry.
here in the last part of 2025.
My Coke
on
earlier
737
from earlier
MAX.
is kicking
We
in.
will move to 47
Tesla
a month.
is coming
That's our
in
next
crazy.
increment here in 2026. And then on 787, we started last year
S&P
at 5 a
500
month,
rises
moved
to
to
record
7.
high, led by
We
gains in
finished the
tech.
year at 8 per month.
Technologies.
And on that program, we're also moving
Holding
to
strong
10
still.
per month
Technologies. QQQ.
in 2026.
Time
And in
is
both
12:15.
cases,
This
we've
is the
invested
3/3 bear cycle.
in expanding
I
our
expect
production
lower than VWAP,
capacity.
but this
We've
is
got a
literally
north
VWAP at this
line,
point. Price
in
level, price
Everett for
target,
our
whatever the fuck. There's so
737
many people.
MAX, which will
There's
allow
about
us to
80,
go to
80% of the majority of the people in the world
47,
rely on price
and we've
action and
also
price target alone as a
invested
deduction
in
or
additional
as a
capacity
point of
in Charleston,
exit
which
and
will
entry,
allow
and
us
that's
to
just the
take
truth. So
787
I don't do
above
jack shit on
the
price
10-month
target. I
rate.
don't do
So
jack shit on jack shit.
backlog
If it's
is
nearby,
at
it's
record
nearby.
levels,
We
Jim,
were at
so our
HOD
challenge is not
nearby.
in booking
At
orders. We've got
11:10,
tremendous
11:40, 11:50,
backlog
we were at
here.
HOD.
We
Now
booked
we're near
almost
middle.
1,100,
This is the middle
over
of the market.
1,100 airplanes
What am I talking
here
about?
in this
Am I
last year.
smoking?
So
No.
the challenge
This
for
is
us
the
is
halfway
to
point
continue to
almost.
increase production.
From the
And
bottom
as you say, with the increased
to the
production
top,
will come
pulling back,
improved
market
cash
is.
flow.
Let's see what happens. I'm curious as fuck. I know it's gonna pull back, but like, I'm scared as shit. This is all-time highs. To think it's going to pull back is to be Chicken Little. I'm telling you, that's the truth. It's like going against the whole fucking world, and the whole fucking world not catching on the SPX 1 minute gap, whole fucking world not catching on the cycle analysis, most of the world. You have to think about it like that. Like, bigger things are happening, and it's just the candles help options push it to the fucking max fucking tits, and then they fucking do some crazy shit. Still bearish, all right?
Here to discuss it all.
Still bearish. I'm scared as fuck. It's coming all back, but I ain't gonna lie, I'm scared. This is scary. Oh my
I
God.
think the most important advice I can give people is that trying to time the market makes you an enemy of your future.
Oh my God.
Because
Tom Lee! Tom Lee!
And they want
Tom Lee! Folks!
But when we look at the
Tom Lee
stock
coming in
market,
with a crazy video. Tom Lee coming in with a crazy video,
the
folks.
only people who really make
Tom Lee,
money are those who are investing for the long term. So as much as I'm warning about 2026 and the possibility of a lot of turbulence, they should view the pullback as a chance to buy, not the pullback as a chance to sell
want to stop or go lower or not. This is all
we
bearish
still
territory.
like the Mag 7
Bears are in
because
control.
we're confident
Calls
of
got
their
fucking
earnings
cooked
growth.
in the 2/3, 3/3.
And
Now
so,
finally,
as long
after
as they
a
don't
whole
derate,
fucking day's ride up,
they should
I literally sat at the
perform
tippity
better
top,
than
right, in
market.
the WhatsApp group when
But
it was super
this
bullish,
year,
right?
our
What?
top sector
Right?
pick is
Pullback is imminent, right?
energy and basic
11:35. The drop
materials.
is
I
imminent,
think it
in
means
my
gold
opinion.
should
This was
be
my
sitting in
personal
a
opinion and my
portfolio.
personal
I've
opinion
seen
alone.
folks like
11:35
Ray Dalio
HOD
recommend
right here.
up to 10%.
6,986.
15% on this podcast.
Let's get it done! Let's get it
Most
done!
people are at zero
Done!
for gold. So that means gold is still under owned today. Crypto still has a, I think, future adoption curve that's higher than gold because more people own gold than own crypto. But the path to getting that adoption rate higher is going to be very jagged, and I think 2026 will be a really important test because if Bitcoin makes a new all-time high, we know that deleveraging event is behind us.
And your price target for Bitcoin this year is
Time is
250,000.
12:20.
Yeah, so we
12:20
think
is right at VWAP.
Bitcoin will
I
make
expect
a
a
new
little bit lower,
this
and
year.
then maybe trap fucking everybody. I don't even fucking know. It might happen.
Welcome
Tom Lee!
Tom
Lee,
I've seen
folks.
that you've predicted
Talk.
quite
Tom
It's
Lee,
a good.
Tom Lee, Tom
There'll
Lee.
be a new front, and millennials,
Tom Lee, Tom
while
Lee, Tom Lee,
others
Tom
are going to be,
Lee,
of course,
folks. TUMLEE,
living their
Tom
life
Lee.
and accumulating their
Tom
own
Lee.
personal wealth. And then with regard to AI, I would
12:20.
say that
Holy shit! Look at this
know,
fucking all-time high
evidence that we
rejection
could be
drop now.
moving
Oh
towards
my
super
god!
intelligence is
Come on!
accelerating, and I think there's
Go
a
get
lot more
Phil down
progress being made
below.
on
Come
robots
on,
and
get the
integration
fuck
with
down there.
robots. So
What
those
the
are all
fuck?
things that are going to favor the U.S.
Bro.
And then on
That's the most
blockchain,
craziest shit I've said
you know, it's
in a year.
it's not just BlackRock and
What the
Robinhood anymore.
fuck
You know,
is this?
Jamie Dimon has publicly stated
All-time
that
high breakout
he thinks
today.
blockchain does fix a lot of problems for financial services. So I think the banking industry is starting to embrace the efficiency of blockchain.
Oh my god.
So clearly the
All right,
long-term bull
SPX
market
put-to-call
thesis
ratio
you're
is
still
going
a
to be
big
set
believer in
now. They're
after a
cycling.
pullback. How do we
bottom of the
sort of try and
horizontal
get as
sloping
good a
support.
feeling as ever about when that initial pullback comes? I was
IWM.
listening to one of your recent appearances on
Tests in the floor.
CNBC, and you pointed out that
SPY.
markets peak on good news,
Above VWAP.
somewhat
On
counterintuitively.
Sunday.
Have we got
SPX put
that
to
good
call
news at the
ratio
moment
for
that would point to a short-term peak?
the group.
It's hard to say.
I haven't
and
even
this
watched
is
it in the
somewhat
last
anecdotal,
15
but
minutes, 5
our
minutes. There must be a
institutional
fuck
clients
ton of. There's not
aren't
even a
that
fuck ton of
bullishly
fucking puts
positioned
right
at
now.
the
There's a
moment.
fuck ton of calls. Crazy.
And
I'm gonna send in the group chat
until
right
we
now. This is
get
fucking
to the
crazy.
point
Look at the fucking group
where
chat
both
right
the
now.
public
What
and
the fuck? The
institutions
mountain actually went
have
higher call
positioned the
side
way
since
that
12:02 p.m.
good news
Fucking
doesn't make the
imagine
market
that.
go up.
Look at
I
this
think
shit,
stocks
right?
still
I'm
have
gonna
upside.
I'm gonna
That's
share
why
what happened to the
the fact
SPX
that
put to call
stocks were
ratio
good in the
live.
first
This
week
is
of
literally
January is a
right
good
now.
omen,
Right,
and
that's
it looks
fucking
like we're going to
crazy.
finish the month
Calls went
positive.
up at
That
6,000.
suggests strength in the early part of the
990
year.
to
Margin
fucking
debt is something we can
12,000.
watch, and we've
It was
been
at
tracking it.
6,000.
NYSE
What the
margin
fuck is
debt
going on
is
right
at an
now? I
all-time
don't know.
high,
Puts are increasing from
but
6,000 to
it's only
8,000
risen
at this
39%
exact
year-over-year.
SPX level right here at
Usually for a
1220.
local
Volume is
top for
growing
markets, you
crazy.
want to see that
Volume
rise
and
60%
volatility is
year-over-year.
going
So there's a
crazy on the
chance for
options chain too.
essentially leverage to accelerate, and then that marks a local top.
Can't imagine what the fuck is going on in the market and the futures too. Things are volatile as shit.
This podcast is sponsored by.
And
Thank
fell
you.
sharply.
Totally on the
The
Fed.
other sort of big macro question about the Fed. Ironically, when we
are at
spoke in
VWAP.
August, it was in and around attempts to indict
Purple
Lisa
box is
Cook.
coming back into play on
Obviously,
QQQ
more
from
high-profile
earlier.
attempt at indictment this time round.
Purple box is coming into
Generally,
play
your
on
view then
SPY
was
from earlier.
Fed cutting is a good thing for markets, but
Chris
questioning
says it
Fed
gets
interference
interesting from
is
here.
a bad thing for
For
markets.
sure it does.
But I don't think you
For
took
fucking
the idea
sure
of
it
interference
does.
that
It did
seriously.
not break the floor in
How do you sum it up
IWM.
today, that
It is
outlook?
very, very interesting.
I think
SPY,
it's still
SPX
the
is
same
at the horizontal
situation,
sloping support from
in the sense
yesterday.
that
Bullish trend line.
there are implicit
Interesting.
threats being made against the Fed.
Market is moving.
Including this DOJ
Finally
inquiry.
Moving.
But I think
holy shit.
There are still
it's all
voices
back to
in the White House that
my
are
levels
kind
now
of saying, let's not
where
undermine the Fed
into Friday and Tuesday almost.
because
on Friday puts
markets
yes,
know
my Tuesday
and
puts
market
are
history knows that the Fed is still the most important
green, just,
entity in the world. And to
bounces
undermine the credibility and the independence would,
heavy.
would unleash a lot of uncertainty. We also know Fed Chair Powell's term is up this year, so there's a bit of like let the clock run because we know that there'll be a new Fed chair. And I think once we have that in place, I think the White House can
more calls coming
be
in on
satisfied.
these bounces too now.
As you know, who the next Fed chair can be, I mean, the odds keep shifting. Now it looks like
there are more puts though,
has
for
dropped
sure.
as the probable, and Warsh and even Rick Reeder are ascending. So,
and I guess everyone expects slightly more cuts than maybe the data would purely suggest once that change happens, and/or a few more cuts this year. Is that a good thing ultimately for equities?
Yeah, I think it is good for equities in the sense that
hold up,
inflation has been the market's fixation since 2022. Part of it, of course, is because the Fed has been fighting an inflation war, and the Fed wants to maintain credibility by being tight. But when I look at the economic data, and I'm not an economist, I think the underlying inflation is actually much lower than the printed.
Calls are growing too.
A simple thing to point to is something like Trueflation, which is showing 1.8. If you look at median inflation, it's at 1.8. And the thing that's keeping inflation high is housing costs. But housing prices are falling. So the way that housing is measured in CPI is with a lag. So to me, I think there is cover for the Fed to cut. And if housing, as you know, affordability is a problem, we need to do something about mortgage rates. And that is helped by cutting. And even things like consumer installment debt, those can come down.
So fucking interesting.
So I think burdens on
look at the IW gap. It is so high up.
Fed cuts.
So let's talk about how people should be positioned sort of under the surface.
So they were really trapping bulls and bears on IW, but it looks so bullish into
the biggest stocks overrun, and are they
SPY
not the right
HOD
picks for 2026?
1140, 1150.
Like the
That's crazy.
Because we're confident of their earnings growth. And so as long as they don't derate, they should actually perform better than the
trading
market.
off the VWAP.
But this year,
is testing.
our top sector pick is
I want 1220 to break
energy and basic materials. So in early December, we made that our favorite sector ideas.
Oh
Part
shit!
of it is
Did I not show?
a
Okay,
mean
I
reversion
am showing the
trade.
SPX put the call
Energy
ratio.
and basic materials have underperformed so badly over the last 5 years that if you look at their performance in the last 75 years, it's usually
1225 now.
marked a
Bounce
turning
coming
point,
in
the level of
crazy.
underperformance. And then I think some of the geopolitical things that are taking place would favor both groups. But I think another thing this year is that ISM is likely to break back above 50, and along with Fed cuts, that means industrials, financials, and small caps.
Fucking crazy.
So I like
candle.
Mag 7, but I think cyclicals could be
anyone
the more
waiting from 1120 on VWAP
So just
and the
let's do
purple
energy
box is
first,
now getting
because
bounced
I
for
think I'm
5
saying you're
minutes, and
also
the 5 minutes
not
literally
constructive on
halfway
the oil
of
price
the options
in the
profit
short
at
term,
least.
but you're bullish on the energy stocks.
At least.
That's right. It's
HOD testing 1220.
I've learned oil prices and energy stocks don't correlate. Part
I
of it is
still
that
want the
energy
shit to turn
stocks
down.
price the future levels of
It's
oil
coming in
prices.
crazy
And
though.
I think
Bulls are coming in
that
crazy
we may
off this
see
trend line.
weak oil prices or volatility in the near term, but everything from data centers and this shift away from alternatives is going
no
to
fucking
be
clue. Look at the
putting
5 minute
upside
coming in crazy.
into the future prices of oil, and that's why energy stocks can outperform.
Better watch this in the 5
Basic
minute.
materials, obviously, for those exposed to metals, have had an unbelievable run.
Those that want to learn the time confirmation and how to read the 1 minute into the 5 minute, which is what most people avoid because that's the hardest thing to do. I highly suggest you open the SPY chart on the 1 minute on the right, and you open SPX on the 5 minute on the left.
Yes, I mean, if gold and silver and copper
what these 1 minute candles do
negative returns this year, then basic materials is not going to work as a trade.
In relation
but part of our belief is that gold has made a big move
to the cycles.
But it's going to be silver and copper that
in
have
relation
good years.
to each other is the
and
most
as you know,
important
copper is an industrial
most important
metal
part
I think linked to the
But the
ISM.
1
So
minute
if copper
reading,
has
the
upside,
5
I think
minute into,
it leads the
people
basic
avoid.
materials
Why
stocks
am I
higher.
saying avoid?
Financials,
I
you
used
were
to
very
avoid.
bullish on when we spoke in
But
August.
I
So
realized
great
if you
call on
do
that.
the
They've
things that
obviously
you
had a
avoid,
great run.
you used to,
Kind of
right?
can't believe the
You
charts of
find
some of them when I
major
look at them
success in the
compared to
things
when
that
I
you
used to
avoid.
cover them very closely.
Why? Because
Do
we as human
you still like
beings
them at these levels? They're
like
not
to, and we tend
cheap,
to
are they,
find
anymore?
things,
Price to book?
and
Yeah,
we are
they're not cheap, but
we're
they're,
magneted
I think,
and
in the midst
we're
of being
pointed
reviewed in
towards
terms of
things that
the
are easy,
durability of their
right?
business
That's
models in a
just you know
favorable
how
way.
we are as human
You know,
beings.
I think the
But
banks have invested
best
so
thing
much
to
in
do
tech
in an
and
environment
into
where
AI
people find
that
the
they are
comfort and
really
want to
big
seek comfort
beneficiaries
is to
of that
seek
super
discomfort,
intelligence
right?
coming.
And to
And the bank's
seek
biggest
the
expense is
hard things
compensation. So
and
I
the
think
truth
banks
in what's
can
going on.
reduce their
And
reliance on
what's going on
employees
right
in the
now,
future,
in my
which
opinion,
means their
is
margins go
QQQ is
up, and then
bouncing
the
from this purple
variability of their
box at the
earnings
top.
drops.
IWM
I
may
think
be
they're going to
also
get
bouncing
re-rated
here too.
more like
They're
technology
creating a
stocks.
cycle
And when
for
I
the zero
started covering,
DT. Right? They did go
when I
1/3,
started
2/3
research in
lower
the
on
90s,
IWM
banks
since
used to always just
1140
be 1 times
into
price to
1220.
book or 10 times
That is
earnings.
why it's
And I
showing
think
a
that they
divergence
should
on
get a
SPY right now,
market
probably too.
premium multiple.
Right? That's literally 40 minutes. That is 40
This
minutes on
episode
SPY
of the
showing
Master
too.
Investor
That's about an
Podcast is
hour
brought to you by
showing on
LSEG, the
QQQ.
leading global financial markets, infrastructure, data, and analytics provider.
Bro.
To learn more about
sector, for instance, when we look back at internet, if you looked at a basket of stocks, let's say in 2000, so 25 years ago, I think only 2% of all the universe's stocks actually survived. But the return generated by that
majority
2%,
puts down there at
and then
1220,
let's say
and
you
now they're
lost money,
fucking cooking the majority.
the other
bro.
98%, you still outperformed meaningfully the S&P 500. So I think in the AI sector, a basket of the entire universe of stocks,
Rejection out of nowhere, not looking at IWM, right? Bounce out of nowhere,
investments,
not looking
but
at
the winning
SPX.
investments more than make up for it.
As
and I guess
deduction
the difference perhaps
proof
today is
as
that
it could
not that
be.
many of them are
This shit
listed.
is literally
I don't know if that
anti-candle,
increases the jeopardy or
anti-fucking
reduces the
chasing
jeopardy for people
at
playing.
all-time highs. HOD.
The average investor's not going to get exposure to all
This is
of it.
fucking market deducting at its fucking finest with SPX, zero DT options, and
companies IPOing
everything.
are more
Nvidia,
mature
Tesla, gold,
in their
fucking
later
everything.
stage.
IWM, fucking everything.
And but it does
Shall
seem
we
like
do our
that's
poll
changing.
now?
I think for the
Last
first
poll of the
time
day.
we're seeing
New all-time highs.
companies now more interested in going public, not
Right,
all through
new
IPOs,
all-time
some
highs.
through SPACs. I think that's coupled with the fact that the
Right,
alternative
last poll of
world,
the day.
which is
I'm
venture,
gonna
private
stream this on
equity,
the WhatsApp
private
group so
credit,
people can see too.
the investors
New
in those
HOD.
LPs, limited partners,
Mm-hmm.
they haven't really
Or
received distribution. So I think
chop.
that there is an allocation
There's no way we
away
chop
from
here, but yeah,
alternatives
reject.
into public markets, and that it's kind of now pushing more things to go into public markets. But you're right, like it's
This is a personal opinion, pulling
as
nothing
much
else.
as we say that, in the last 12 months, I've seen many publicly traded stocks have big moves. So I think that there's still a lot of opportunities.
Mm-hmm. And in terms of the sort of
this WhatsApp.
hyperscalers, the sort of mega cap names, it's really interesting when you think of the multiples that they've got, which for the most part I think have been justified because of growth rates. And again, a conversation you had on another podcast I was really drawn to, which is the idea that these companies evolve to a sort of staples company, which can have a premium multiple for a different reason. And I guess that got me, I mean, basically, is that Warren Buffett kind of sniffed that out before the rest of us with Apple? Is that kind of what we're getting at with some of those mega cap names?
Isn't this
that
interesting now?
Look
at the poll now. Isn't that fucking interesting now?
Yeah, that's right.
You can see live.
I think that some of the
based
listeners
on candles,
should think
right?
back to
the
Apple,
poll going up and down.
which
isn't
Apple
that bitch
analysts
interesting now?
that cover
now
the stock from its IPO
now we're getting interesting.
In the 80s,
right, in the YouTube chat,
insisted Apple was a hardware company, and they couldn't get over the fact for many years that Apple shouldn't trade more than 10 times earnings. And yet they had a services business that was growing. They, of course, had created a whole ecosystem and retention model that really showed Apple was not just a hardware company. But I remember even in the 2015, 2016, 2017 period, I'd meet with institutions and say Apple's a hardware company. And now, of course, Apple's re-rated.
Are they?
Completely.
Or all fucking? Are all things
I think
cooked?
people look at NVIDIA as a cyclical hardware company, and that's why they're giving it grudgingly a 26 multiple.
6 people voting
Whereas
new
Nvidia,
all-time
as you
highs.
know, essentially is
1,
a
2,
company
3,
that
4,
has
12 people
high
voting
visibility
reject.
on future earnings, and yet trades at half the multiple of Costco. I think there's a lot of room to re-rate those stocks higher.
If the sort of macro outlook is worse than expected, well, either way, as and when we have this market correction that you foresee, let's assume it's 20% for argument's sake for the S&P 500, will those stocks act like a staples company and fall less than the market? Or are they still in the growth company high beta stage such that when we have this correction this year,
making it easy.
The Nvidias of this
It
world
ain't
will
making
fall
it
more
easy.
than the S&P 500?
SPX coming in with a
it's a
crazy 5-minute candle. It ain't making it easy.
What will lead in the correction are
It ain't
crowded
making
trades.
it easy. Nvidia flying up,
Because
gold flying up,
people have to de-risk.
squeezing
So
on all fronts.
It makes sense that
except
the
SPY,
Mag 7 are the large
bit.
holdings.
And
If people
SPX,
de-risk.
tiny bit
But as
for
you
me.
know, when people
I'm
get nervous,
squeezed
maybe
as
they go into the
fuck
Mag
on
7.
gold too now. Like I ain't gonna lie, I am.
So to me,
This shit was
it's possible that the
100%
non-US stocks
puts
could
that I
be the
got
ones where you see
yesterday, and
correction,
I
'cause
added,
that's where
and
there's
now
a
they're
lot
all
of
fucking burning. It's
money that's
literally
been
lower
made.
than yesterday. It's fucked.
I mean,
I'm scared.
non-US stocks did far better last year than US, and so
Market
if there's
goes lower,
trade
gold stays higher. I don't
escalations
fucking know.
and
Man. This is
uncertain
fucking
about the
scary.
global economic
I'm
outlook,
scared.
maybe
Personally, I'm scared.
that's where the correction could be greater.
Why? I'm in
And so
gold
that
heavy
you mean
into
across
fucking
the
tomorrow.
piece, or do you
It's
mean
close as
specifically
fuck.
tech, like ASMLs
It's close
and
as fuck. If it
TSMCs
does
of
not
this
turn
world?
down today or tomorrow,
More broadly. So it
it's
could be
fucked. On gold.
MSCI ACWI.
Yeah. Interesting.
Half my shit is into tomorrow. Like it's actually bad. It's really close. And the last time I was
This
real close
episode
on
is
gold, they burnt
sponsored
the
by
fuck out of me by going
BNY
north 2%
Investments.
overnight over the
BNY
weekend. So
Investments is part of BNY, a global financial
know, I'm
services
scared.
company supporting investors and institutions around the world. This
shit
sponsorship
just
does
drops and
not
pumps in the middle of
constitute
the night like
investment
nothing
advice.
This is just futures options moved like nothing.
Let's touch on gold and then crypto. Why did gold perform so well last year, do you think?
I think there's some very visible reasons and some invisible reasons. To me,
SPX
I think
gap down trend.
the visible reasons for gold
down. I don't know if it's not a
doing well
gap.
is one, I think that there's a lot more political and geopolitical uncertainty in the investment environment. Because we have wars
10 people voting new all-time
and of
highs
course we have a president in the U.S. that I think has actually done a good job on the economy,
11
but has raised
11 people voting
divisiveness
HOD.
and uncertainty about
We have
trade
1,
globally.
2, 3, 4.
The second is
13
that
people voting reject
global
VWAP
central banks
and
are
below.
generally easing. And in the U.S., we're finally getting an easing cycle, including QT ending. That should support gold.
Interesting. More bears.
The invisible reasons are, number one, I believe Tether, which is the largest stablecoin provider in the U.S., has become the largest private buyer of gold. Because Tether is
Time is 12:35.
Sufficiently collateralized with Treasury backing every stablecoin unit, but they generate income.
Tom Lee.
And with that excess return, they're buying gold.
That's me
so I
in
believe
20
that
years.
they've been the net buyer, the largest net buyer since July.
When you say you believe that, you know that? Or
Yeah, I think we've seen the data.
That's me in 20 years.
and so how big a buyer are they relative
It's
to the
crazy.
central banks of this world?
Yo,
Big buyers
oh
of late?
my god.
Wilfred,
Is that a good thing? Is that a bad
sorry,
thing?
I
Fuck.
don't know how to scale
I
it,
don't know.
but I believe it's
That's
there's
me in
only
20
maybe
years
one
though.
central
Fuck.
bank that might
I
have
say
bought
that shit
more
proudly.
than Tether.
Wow.
Respects Tom
Because
Lee.
that's not talked
Respects
about
Tom
very
Lee.
much.
T-U-M-L-E-E.
No, it
Say
hasn't.
the
But
name
if
Tom
you
Lee.
look at
Tom Lee.
one
Tom
way
Lee.
to simply look at it is look at Tether,
No, I'm going to the bathroom for a minute.
USDT outstandings, and gold price since July, and they've been highly correlated. But I think a second factor is we did a study in 2018 showing you that investment preferences skip a generation. So baby boomers loved gold. Millennials liked hedge funds. I'm sorry. Baby boomers like gold. Gen X liked hedge funds. But now millennials who are entering their prime working years like what their grandparents liked, which is gold. So I think that there's renewed interest in gold. So those are the two invisible reasons.
I liked gold. I'm just a millennial, but I sold too early. So there we go. Interesting snapshots on that. So my question on gold, is whether you think of it, I guess generations will have different answers to this, as the ultimate currency or as a commodity like some of the other metals you listed earlier, like copper and silver and many others that have industrial use, because it can suddenly change the way we think about.
I guess I'm going to Disneyland.
The returns we were looking at last year, you know, JP Morgan had a great year. Nvidia had another good year. The stocks were up 20% here or there. If you consider the ultimate backstop currency gold, then they were down.
Correct.
Is that how you think about it or not?
Yes.
5 minutes.
We don't make explicit recommendations at Fundstrat around gold.
Man, we're going to compare the picture I sent in the WhatsApp group earlier to now. You have to see the picture I sent earlier at the tippity
trying
top
to view it as a
to
commodity
now. You
metal,
have to see this
because
shit. It's fucking crazy.
total gold sales last year.
Yo, does anyone see this shit in the WhatsApp group? Please compare the fucking picture from earlier
and
to
it's
now.
a 30 trillion
it's crazy.
network value. So price to sales doesn't make sense.
What are we talking
and we know
about?
gold is not
12,
scarce because
11,
it is
20.
There's a million times more gold
11, 20
underground,
right here.
and all gold is extraterrestrial. So
When I was saying,
SpaceX
hey,
might
let's put
discover
some
a
rocket
gold
emojis in
meteor,
chat and we're
you know,
going to
and
rocket.
suddenly gold supply would be huge.
11,
Yet gold
20.
has worked as a store of value
11,
for
25.
centuries, and it's as the reasons I explained.
Drop is
it
imminent
acts
in my
like
opinion.
you said,
11:35.
an alternative to the dollar,
is in bearish volume. First
which
time
means
since
maybe we
10:30
should
in
view
bearish
it
cycle
as a
12
dollar
p.m.,
alternative,
12 p.m.
and by
lower
that
to
measure,
12:20.
everything else is debased against
VWAP
gold.
is here.
And what are the implications of that?
Well,
do you think more people will come around to that point of view, and what would be the implications?
Yeah, I think it means gold should be
bearish.
sitting in a
are in
portfolio.
control.
I've seen
bearish
folks
control.
like Ray Dalio recommend up to 10%. I don't think
he
most
said 15%
higher time frame.
Okay, so let's say it's 15.
Higher
most
time
people
frame
are
on
at 0
IWM still bearish.
for gold. So that means gold is still underowned today.
Bullish on the higher time frame, but it's pulling back on the medium. So,
by the way, the other thought of SpaceX finding a gold meteor in space that would be a story.
1 hour didn't even turn down.
Claim
Elon,
ownership
45 minutes.
Well,
the shareholders of SpaceX, if it had IPO'd by then.
That's right, because it's international. It's not internet. It's galactic.
Didn't even turn
so
down.
There's no sovereign claim on it except for
15-minute turn down,
which I guess applies to Mars as well. Lots of complicated questions
bearish.
ahead.
Yeah.
Why did crypto not perform last year in a way that gold did?
I think there's a time-based answer. So crypto was outperforming and keeping up with gold until October 10th. And on October, Bitcoin, for instance, was up 36% and Ethereum was up 45%. So Ethereum was outperforming silver. But on October 10th was the single largest deleveraging event in the history of crypto, bigger than what happened in November 2022 around FTX. And after that, Bitcoin lost more than 35% of its value and Ethereum fell almost 50%. So I think crypto lost its tracking to
Is this 3/3? I don't know.
because of deleveraging within
cycles
crypto.
are creating
Crypto
on top of
has
each other. Smaller
periodic
cycles are
deleveraging
bigger,
events.
turning into medium. Medium
It
cycles
really
are turning into
impairs
larger
the market
cycles.
makers, and the market
we are
makers
now all
are
within
essentially
a
the central
cycle.
bank of crypto. So many of the market makers, I would say maybe half got wiped out on October 10th. So until we get to the day where crypto is widely mainstream supported by institutional investors, the internal deleveraging events
If the low breaks,
kind of knock it out of
bearish
knock it
control.
out of the sky.
I think the low's going to break.
Does
I
that,
mean, it
by
could
implication,
clearly
mean
not.
that you
What if it
accept
does the W?
that Bitcoin is not digital gold?
Who the fuck knows?
It's,
what the fuck do I know, right?
Bitcoin
what the fuck
is
do I know
digital
at this
gold,
point?
but
IWM is
the
still
universe
bearish.
of
That's
people
all I
that
know.
believe
12:30.
that thesis is not the same universe that owns gold.
That's all I know. Fuck.
And so,
Tom Lee, thank you. Come back to you later. Appreciate you, my boy. Appreciate you, my boy.
And joining us exclusively today on the launch, Intercontinental Exchange President of Fixed Income and Data Services, Chris Edmonds. Chris, appreciate this very much. Good to see you.
Good to see you. Thanks for having me.
It sounds
Fuck,
fascinating. I mean, there's
Reddit
so much
comments as
intelligence,
market
or at
signals?
least arguably insight that's in there, and you got to harness it somehow. How long has this been in the works?
It's been a few months. The biggest thing is in a world where everything is moving at a greater frequency and a higher velocity.
Keep trying to go bullish again.
You're going to get caught in at any moment in time.
Oh my god.
So being able to process the level of data and the
actually stopping at every
data
single fucking momentum down.
usable has
oh
really
my
been
god.
a challenge facing the industry. So for us, by applying both AI and our data science capabilities and having access to Reddit's massive, very deep conversations going on across their platform is really what led to this innovation here and what we're proud to put out into the market today.
Look at QQQ going higher. Look at IW not. This is crazy now.
That you can pull and what you get in
Only
return?
thing that makes sense is horizontal sloping support, but like that still looks crazy.
We don't determine trading strategies at the end of the day. What we want to do is empower them. So if you have a trading strategy on your desk every day, you're using our data in order to make decisions.
Why is no one talking? Chat is stuck on am I tripping from Chaya? Does this not feel crazy for anyone else? Is this not fucking terrifying as shit? What the fuck are you talking about? This is terrifying as fuck. Candles are just coming in. Red and green. We are at Six Flags right now.
Along the way. I'll give you one example.
They ain't waiting to go to Six Flags tomorrow. They're at Six Flags now.
Before Christmas.
Red, green, up and down, King the Ka, up, left, right, fucking center, right, punch, left, fucking down, up. Oh my god. Please. Like, everyone's silent as shit. Everyone is silent as shit. It's just, everyone's just speechless? Like, what's going on here?
Who are you selling this to?
What's going on here?
Investors?
It is for institutional capital markets. That'll be the primary. That's who ingest our data today. And all
no comments. Everyone's just speechless. Everyone's just looking at the candle green and red and just like, is this bullish or bearish? Alright, cycle is trying to break down. And look at the crazy chop though. I mean, this is serious. This is seriously some silent moment. You know what I mean? Some silence needed moment, I guess. Like, I'm not even trying to be funny right now, but it's just 1240 bounced to 1240 and 1240 rejected. This is algo range trading in the middle of the box. That's how crazy the market setup is right now. They're creating setup, but the setup is 1240, 1240 bounced, 1240 rejection into 1245. This is crazy. I don't care what anyone says. This is crazy. I'm gonna call this shit crazy. Now there's a real algo range here. Whether it breaks this high or low, I'm not sure. But now we need to draw this in the white line too. We're now within two technical boxes.
Chris, is this hard to do? Is this a challenge? And are there innovations that's going to let you do even more?
Thank you. Someone said this is insane. Like, seriously.
It is a challenge. I think managing data across the board has been a challenge because there's so much more that my earlier comment about both frequency and velocity. There's so much moving around.
The candles are actually speechless for all sides. Bulls or bears, they're just speechless right now.
As data science has become a bigger part
I'm speechless right now. I mean, I want the shit to go lower, but like not like this. You know what I mean? Maybe like this. I don't even know. Like, is this shit gonna go higher? Maybe the bulls want it to go higher like this, or maybe not like this. I feel like both sides are like not like this or like this, which is I guess all sides. So, fuck is this shit?
How do we provide that next level data?
Kevin said nowhere to know which way going. Yep. To be fair, that is fair.
Right now, we're excited about being able to put this out there.
Showing north, IW, I'm showing south. SPY is literally showing.
Is Reddit still as active as it was
at the middle
5 years ago during the height of the GameStop?
Or above the middle.
not only is it very
above the middle, but we are closer to the midpoint than the roof. That's something to psychologically think about, right? We were showing the floor. Think about it. If you think about it as midpoint, showing the floor, roof, showing the midpoint, showing the roof, showing the midpoint, showing the roof, showing the midpoint. We're near the midpoint.
Given opportunities, I'll throw out one
technically speaking.
Yeah.
That's why it looks more confusing than not.
One other example
could go to the middle. It could trap everybody. It could, but it hasn't. It hasn't done shit.
Hazard risk and things of that nature, and impacting local municipal bonds' ability to raise
could trap every bear here. It could trap every bull because there's so many bulls and bears. Like it could trap everybody. It's fucking trapping everybody. It's for now. It's trapping everybody for now.
Yeah.
We said this shit as a joke 40 minutes ago, 30 minutes ago, but like right now it's zero DT wise.
I mean, different world now.
Crazy how they waste time here for basically 20 minutes too.
Organically, Chris, it's
in the middle of fucking nowhere in a crossroads. Call this a crossroads. Algo range box is the only thing that makes sense. Fuck the horizontal sloping support now. It's like, oh, you're gonna go bearish off this? You're fucked. You're gonna go bullish off this? You're fucked. Bearish off this? You're fucked. Bullish off this? You're fucked. Like, this is just from here to here, and then once the target is reached, now a cycle and setup is creating clearly. The market is deciding live. You get what I'm saying? Like, this is what I mean by the market always creates cycle with time confirmation, with algo range, with setup somehow, some way, before it even does anything more. Because if you really look into the nitty gritty, there's a cycle and time confirmation inside the setup bullish or bearish, and it's just, it looks wild to the naked eye. It really does. It looks fucking crazy and it makes no sense, but once you see it and then once you start doing it, you're like, what the fuck? Like, oh, but it's just like, yeah, every day. I'm not gonna lie. I may say that, oh, you're gonna be like that, oh, once you know, but like, it's literally every fucking day you come and you're like, what the fuck is this shit? New shit crazy, in some different way crazy. Right? The pros say that, and I used to doubt it, but like, bro, seriously, like, probably after 20, 40 years, probably new shit every day. It's just some way, shape, or form. Some way, shape, or form. Zero DT environment, so probably. This is like some fucking 1920 shit, 1989 shit. We are. Market is so volatile. So volatile.
They have a lot of power because if they come in, intervene, and move their currency, strengthen it, they can weaken the dollar. They can get the U.S. Equity market doing better. If they intervene enough in their bond market and stabilize long-dated JGB yields, they can probably push down 30-year Treasury yields.
6980. So we are at right now. 6978 has not lost. 6982 has not broken up.
The challenge they have is their economic problem, that they have a debt level that's way too high, and if they try to solve that by coming in with really tight fiscal policies, cutting spending, raising taxes,
IWM is not trying to go up on the W since 1245 and 1252.
This is really important.
Never
folks.
broke the floor
I'm not
on
make this a history
IWM.
lesson from
I feel like if IWM went to go test the floor, it maybe would have broke through, but really, IWM isn't even going full out south. Like, it could have right here, and I guess it did, but you know, this is not enough. The 1 minute gap is so damn close too. I don't know. It's like the same distance as literally. If you really look at the floor and the 1 minute gap,
on its
we're
own,
really in the middle.
Days.
That's the most crazy shit.
Right?
You can fucking say, oh, you're literally just drawing fucking Fibonacci's everywhere. Oh, blah, blah, blah. But honestly, make this shit make sense. Like, it's chopping, not breaking the floor. Something with some sort of something somewhere. Always. Why am I drawing this shit? Because this is while it's going down, you gotta think about it. There's bulls thinking and hoping on this shit's gonna fill sooner rather than not. There's bears thinking and going lower, and bears, even the majority of bears are here saying, oh, IWM gap, the IWM gap. They could literally trap this, or they could gap this, or they could not gap this. They could gap this tomorrow, next week. Like, it's just
had a very short shelf life.
What it is doing is creating cycles, creating liquidity in the middle of fucking nowhere, using some sort of algo range, using some sort of Fibonacci level from the bottom to the gap, and it's making people bulls hope on all things, all fronts, at all times, and it's just cycling.
Impact your outlook for just currencies going forward.
This is what I mean by, like, it ain't just one shit with cycle and setup. And like, I don't know if you've ever seen the setup I'm talking about right here, but like, you do realize this shit I've never shown on stream too, from the LOD to the 1 minute gap, right? Who the fuck in their right mind would do this shit? The only people that would do this shit is only people that do the things after that have happened, if that makes sense, right? Only after it has happened can you see the setup. After the setup has created, you're like, oh, it's bearish, it was bullish, oh, it created something. Oh, this is weird. You find shit out by fucking around and finding out. That's how I learned this shit. Right? Has anyone else done this shit in their lives, right? Marking a fib from the LOD to the 1 minute gap, and then just like, I'm not saying this happens all the times. I'm not saying this happens on QQQ or SPY every single time it happens, but I'm saying sometimes when it happens on things like IWM, or more likely IWM, SPY, and QQQ, and nothing else, like no other stock names, you really truly do see.
That's not a very stable.
You truly do really see algo ranges and little gaps and fucking being whatever the fuck. Like, remember this SPX 1 minute gap, right? Who the fuck is using? Who in the fucking world is looking at that 1 minute gap, right? Imagining it, me. Because why? I literally said if they break out for 30 cents, 40 cents, $1, they could literally break HOD all-time high, and they did in that candle. But there was a 1 minute gap saying what? It could go higher for 10, 20 minutes, 1 hour. It can never come back to that. Or it gaps. It gaps filled, pushed up with IW.
That was it. I think we can have a weak dollar through the first half of this year. We have forecasts of 120 Q1, Q2 for euro dollar. I kind of thought that was mad on January the 1st and didn't change them because I'm too lazy.
Never broke the floor. I don't even know if it's bullish or bearish on IWM. I could not say.
For a while.
Right.
I think the dollar
Chris says IWM could still go crazy. Yeah, for sure. Up or down, that's the real question, for sure. The question is, it's going to go crazy. Yeah, that's for real.
For you right there, folks.
It's just
dollar strength end of the year.
Market kind of
Kit, let me finish with this. I'm standing in the news
building
bureau,
hella
Bloomberg
liquidity
News
though,
in
chopping
Tokyo,
at the middle.
and I'm on the phone with Matthew
I wonder if they're
Winkler,
going to drop this shit
who,
off
is the one
somehow.
that
If
brought
they
me to
do, it would be an
Bloomberg.
insane
You know,
fucking
he's
bull trap.
editor-in-chief,
Why?
and
Because
he's like,
QQQ is so damn bullish
explain
right
to
now,
me
above the purple box and everything,
sterilized
all day long.
intervention. So,
All
Kit,
day long
I
since
was a
when?
C student, I butchered it.
10 a.m.
But
drop,
my
spike
basic
into
idea here
10:05,
is
created
none
an
of this
algo range
works
10:05 and held
without
it
this
all day long.
fancy
That's
phrase
just
Dr. Krugman and Opsfeld
until they go lower than
called
that purple box.
sterilized.
They
And
ain't
if
really
you
dropping it, or they ain't
intervene,
really doing the real
you have
move.
to go
If you
over to
feel
your
me,
bond
if they do it
market
from the
and
top of the
make
purple box to the
adjustments.
bottom, then maybe it's a part of the
Japan
2/3.
doesn't have those degrees
I
of
think it's the
freedom, do
3/3
they?
that's below
They can't
but
sterilize,
we'll
can
see
they?
that.
No, but if so, what Japan, what
We
you
are at
need to do
all-time
is to
highs,
create
so
a
the indexes are
situation
diverging
where
too.
Japanese
Indexes
investors
are doing
who
different things.
today
You could best
hold,
believe and you could best
I mean,
expect and you could
huge
best
quantities of
anticipate the
US
market's going to
treasuries
be doing
because the
some
yields are
crazy
so
ass
much
fucking
nicer than in Japan.
quote-unquote
They
market
don't want to
rotation and
support
then some
the yen
weird-ass index
with
moves, right?
higher and higher bond
IWM,
yields in
QQQ.
Japan. That's
What is
not
the
going to
news
do it.
right
It'll
now
kill their
on
economy.
CNBC?
So they
S&P
have to find
500
a
rises to
reason
record high led
to
by
get
gains in
investors
tech.
in the near
Did it
term to
change?
believe
Let's
in
see.
the long-term
S&P
story
500.
and to sell, for example, their U.S. treasuries to buy Japanese
S&P
equities, or
500
their
rises
U.S.
to record highs
treasuries
led by
to
tech
buy
gains.
to
This
buy
is
some
updated
Japanese short
12:30,
not really
20
super
minutes
long
ago. I don't think
dated
jack
bonds
shit changed.
necessarily, but to believe in
Right, that's the
the
reality.
policy
This is
changes
the
they're
setup.
making
This is the
and
real
get
world,
money
right?
to
I don't
move.
want to say,
It's
oh,
a
QQQ is
tall
going to
order.
lead down or
They've
QQQ is
got a
going
new
to lead
government
up. Like
to
what
do
the
it, but
fucking real
that's
world
what
and
it'll take.
what the real truth is. And the news is actually showing after the setup has happened, not before. After it's happened, is saying they're saying the QQQ let up everything. IWM is doing whatever the fuck, right? So IWM in its own world, a Lulu La La Land, and QQQ is now the most important thing to watch. Is it going to the top of the bottom? I don't fucking know. It would be a speculation for me. They're going to the top to the bottom.
Greetings, everyone.
I'm kidding. I'm kidding. I just wanted to be funny as fuck. I don't know. I just wanted to be funny as fuck. We have 122 people here. Let's hit the like button. Let's hit the subscribe button. Let's get the likes up, folks. Algo range is breaking down. Algo range is breaking down.
Really, almost all the teams at ARC, especially
Let's see if
Katie,
6977.3
and Walker,
breaks.
who
This is the
spent
bear
8
territory
hours
on
to
the
16
5
hours
minute.
a day in the last few days to
15
really
minute.
make this the final push. So
Algo range
very happy to introduce
trapped
it to you
every
again.
single bull here
And
since
so I'll
1220
go
to
very
1225,
quickly,
maybe
through,
1220 to
what
1225
hit
could have been a
me,
spike up trap bulls. It
as
could have
we
been
have
a.
been going through our
I don't fuck.
research this
It looks
past year
bearish.
and how we crystallized it
Looks
in good
crazy.
ideas.
Look at the
I've
zero
come to
DT cycle though.
with,
Right, that was a deduction
a
from the
section we're
top,
calling
all-time
the
highs to
Great
date. Right, then we're gonna
Acceleration.
cycle this bitch down, even if
And
they go
what
lower.
we're
They cycling this bitch
trying to
down like nothing.
communicate is
Cycling
that
this bitch
AI
down like
is
nothing.
in early stages still,
I'm sorry, I'll shut up.
and that it has
This is
miles
Kathy
to
Wood.
go.
Kathy Wood's big ideas
Sure,
for
it
2026
feels like it's
recap.
a hype cycle. 1800s, early 1900s. Of course, we had the railroads.
Do up for Levi.
We had telephone, electricity, the
She's talking
internal
about the
combustion
1800s,
engine,
1900s.
technology revolution. That 0.6%
We do have a
real
technology
GDP growth
revolution right
went
now. We
to
do have a
3%
zero
for the
DT
last
modern
125
deduction
years.
revolution going on right
And so
now
that
in the
was a
world for sure.
five-fold
Education,
step up in
education,
GDP growth. We're saying
education,
maybe a
right?
2.5
Deduction,
fold step
candle
up,
traders
but I
versus
actually think
deductions
that's
happening
conservative,
every single day,
given the
every single
5
all-time highs,
innovation
every single
platforms
week,
evolving
every
at the
single
same
Monday,
time.
Tuesday, Wednesday, Thursday,
Robotics,
Friday, up or
energy
down.
storage, artificial intelligence,
Up or down, I'm
multi-omic
feeling it. Why am I
sequencing,
so
and
fucking talkative
blockchain
crazy right now? Because
technology.
I'm fucking feeling it.
And those innovation
the craziest
platforms
shit
are
right now, I'm feeling it.
converging. And that's what's causing the great acceleration here.
Why is IWM
So I'll
going
take
up
you
and rejecting?
through
Why is
a
IWM
few
going
of
down
the
and bouncing?
stats
Why that? Why?
and
Why?
the aha
Makes no
moments we've
sense, right?
had
It
this
actually
year,
makes sense.
As we were
IWM
doing
1
our
minute gap. It's
research.
making
So
every single bear
Frank and
hope on this
Joseph
1 minute gap
the,
on every single
AI
bounce up.
infrastructure side.
It's making bears.
So
it's making bulls hope on every
we
single bounce up on
believe
IWM.
that
It's
the
making bears hope
data
on every single
center,
rejections. This is what 1 minute gaps do.
cycle which
on QQQ,
is
SPY,
at about
SPX,
500 billion
IWM,
now,
wherever the fuck you
up
see it,
from
right?
up
NVIDIA,
2.5
Tesla.
times from
The gaps make
chat GPT.
both sides hope
that
like
is actually going
crazy.
to $1.4 trillion
That is
per
why
year.
gaps happen most
by
likely than not when they're
2030.
pushing
Thank
down or
goodness
up
we
near
had the
pivot points than not.
ChatGPT moment
And they
because
make a
that was
liquidity.
the
Where did they
aha
push
moment
down
for
from?
all
The
of us,
HOD pivot
as
point
we were
trading,
saying,
right?
wait a
And they
minute,
fucking
look what
pushed
I
down
can
crazy.
do
What
with
if this
this
what if
is
this
a
bounced up?
miracle.
It could have bear trapped
And
everybody
now
and would have been
you
pivot point
see,
trading.
as
Oh,
we've
no
done the
confirmation, blah blah
analysis,
blah.
and you'll find this in
This
with
is like
ideas,
confirmation too low here, but then
that
from here to here,
$20
1150, right? How does anyone know
that
1150 is not going to
each of
bounce
us
from
pays
1150 to
here
1155?
at
No
ARC,
one knows unless.
well, actually, ARC pays for it, but the $20
1155
per
push.
seat subscription, and in
Someone said,
a
how many
few
1 minute
cases,
gaps?
the
I don't know what you mean. There's only one 1 minute gap.
per month subscription.
I don't know where you see so many
for
1
those
minute
heavy
gaps or
users,
IWM, yes, but this is
the
temporary.
$20
The
we're
only things
paying
that exist
off
are
in
things that
about
exist
a
for
half day's,
longer than 5 minutes.
work. So the payoff time is almost
When you see these
nothing,
1 minute gaps down, those
as
are
we are
nothing.
able to do
Those
our
are almost
research and leverage our time
jack shit to
enormously.
think about. Just candle trading.
We also
Why?
think, and this
Because
is
the 1 minute
this is
candles
somewhat
need to decipher
controversial
into the
because
5 minute candles,
software
right? The
stocks
1 minute candles
have
actually mean
been
jack
going
shit.
through a very
What's most
difficult
important
time,
is to watch the 1 minute
ironically,
candle
through
and
this
to decipher
AI
into the
boom.
5 minute
And
candle
it is
and to
because
decipher
of the
that into the
disruption
15 minute
that
candle
AI
and to
is
watch the
going to
MACD
cause,
volume with the setup on
to,
everything.
in
On
particular,
God.
SaaS,
Bears are here.
but all legacy
3/3
software.
bearish.
We think that
Auto
software
hours.
will grow.
They're about to
the
break
market
6.
will
I
grow
was
at
gonna say they're
roughly
gonna break this at some point
19%
later,
on
but like I didn't want to say it
their
until it's being
pace
done. But
to,
it's being done now.
I think
VWAP
it's
is flipping down.
54% per year
Right?
in our
VWAP,
bull case.
I don't know floor,
Up
but
from
somewhere here is gonna
14%
test.
per
In my
year
opinion,
over the last 5
695.06
to
is
10
testing.
years.
Bears are in
But
control.
you have to get on the right side of
Bears
change.
are in
A
full
lot of those
control. Calls
software
are being wiped
companies
out now.
are in the
SPX
private
put to call
markets.
ratio showed a lot of fuck ton of calls
OpenAI
at
and Anthropic
1225.
and XAI.
Those calls are being wiped out.
And
What
in the
calls am I
public
talking about?
markets, the real
All
success
these.
story, of course,
I can't even
has
show it.
been in the platform as a
Oh, there
service
it is.
part of the tech stack. And that, of course, the poster child
1225.
there is Palantir. So again, have to get on the
Last
right
poll
side
of
of
the day
change.
says
I'm not
we
saying
are
that all the SaaS
new all-time
providers
highs.
are
VWAP
going to be
reject.
crushed.
Right?
It's going to
10
be
people
like
said new
all
all-time
legacy
highs.
players.
HOD.
You'll
12 people said
probably
reject
have,
the VWAP. We
the
are now
market
at VWAP.
consolidate,
The
and there'll
majority
be
of the people in the
one
WhatsApp group
very
seems like
big
they voted
player, Walmart in
real
retail,
direction
for example,
for now at the minimum.
Is how we're thinking about this. Or as we
Time
get
is
into
1 p.m.
fintech
Is it a
and
coincidence that
blockchain
it's 1 p.m.?
technology and
I don't think
DeFi
so.
disrupting
1 p.m. is
the
at the purple
traditional
box. Purple
financial
box is about
world,
to break down
JP
fully on
Morgan's
SPY.
probably going to
Purple
be fine.
box is
It
testing
is
on QQQ.
harnessing these technologies,
IWM
and
is
it
probably pushing lower
will
on this,
consolidate
most
the
likely,
market.
right? 1 minute gap. Why is it? Oh, there is
I'd like
another
to
1
flip
minute gap
back
now.
to the
Okay, another 1 minute
consumer
gap holding.
side. So I've just given you more the enterprise
Did not fill
side.
in 5 minutes.
On the
Why?
consumer
It bounced
side,
at 12:20, 12:55
Nick
into
and
1. 1
Varshika
p.m. did
have
not
done
fill.
this
1 p.m.
work, and
rejected.
I think they might have been
Bears
2 years
are
ago,
here.
the
I don't
first
know if they want to
ones
go lower for
even
5,
think
10,
about
15
this
minutes and pop up and
concept
fill that
of
IWM
an
gap. That might be a
AI
possibility,
purchasing
but I mean,
agent,
for
or
now,
now
at the
we're
minimum,
calling them
for
AI
now, they're not filling this
assistants,
bitch
and
on IWM.
other such things. But based on their work,
This thing
and
could
we
go
can
lower
see it
5,
in
10
big
minutes and fill.
ideas,
This thing could
they
fill now. I don't
believe
know. It would be a
that the
speculation for me to say,
advertising
oh,
market
IWM candle's
is
going to go
going
down
to
here and bounce
go
here and go up here and do
to
this and do this and go on a fucking goddamn ride and a fairy ride. It's going into
in
0.5
this
Fibonacci right now,
AI
SPX.
space, AI-generated space.
0.5 Fibonacci on
And
SPX.
that shopping,
That is around
commerce will be
10:25, 10:30 a.m. levels.
25% of it will be powered by
Oh my
the
God,
AI
excuse me.
space.
I
So
haven't left jack
stay
shit.
tuned
Friday
to,
puts,
or
Tuesday
definitely
puts,
take a good look at their blogs and their
gold
big
puts.
ideas
I'm
chart.
fucked.
David, in the Bitcoin
gold,
realm,
I'm not down pat, but like this,
it's
there's
been
not time, there's
controversial
not
this
that
year
much time.
because
This shit expires
we
Wednesday.
had
And
the
it's holding today,
drawdown
so
after the flash crash, 1010.
I don't know. I'm kind of.
In October. We
KG
think
said
that
hella
a
fucking
lot
volume
of the
yesterday, and we hold it
deleveraging
today. Like this is
associated
literally
with,
a make or
really,
break
that
moment.
was a software
I might have,
glitch. I think
I
at
might be probably,
Binance,
I should probably be leaving on
that
gold today. I'm not gonna lie, but like I low key want to take the chance. Like it's fucking Now or never though
caused
today on gold.
$28
Market
billion
going lower
of
and
carnage.
gold is holding.
We think
Time
we've
is
worked through
time
that
is
now,
101.
and I think the
All right,
main
time is
question
105 in 2
on,
minutes. Let's see if they do truly go below
Bitcoiners'
VWAP. This is
minds
below
is,
VWAP.
okay,
All
are
bulls
we
are, all calls are being washed out
finished
now from
with
the HOD.
the traditional 4-year downdraft? Every 4 years a downdraft.
Time is still 1
in,
for
the
3 more
cycle.
minutes. I'm getting
We're
ahead of myself,
beginning to
drawing
think
105.
we are,
I can't
although we
talk.
could base here in the $80,000 to
Jimmy Hodges says this is
$90,000
mental.
range for a while.
It truly
but we
is,
do
right?
believe the next
Truly
inflection is up.
But for deductors,
And while
this
I
is
know
God-given.
we
For deductors, this
got
is
a lot
a gift
of
from the
publicity
market
this year
because it went
because
HOD
we
anyway,
talked
all-time
about
high anyway, and now it's
stablecoins
rejecting. So
usurping one of the roles we expected
candle
Bitcoin to
is
play.
insane.
Now
Cycle
we
is
expected
fucking
this 10
insane.
years ago
Why? Because of
before
zero DT.
stablecoins
But
happened on the scene. But in terms of
in a
remittances
deductor's world,
and
this is
emerging
mental.
market
As in
activity, we're seeing
unmental.
stablecoins
It's like
usurp that
stable
role
for
that
them.
we thought Bitcoin
Does that make sense?
would
Like, this is some
provide.
crazy ass shit,
That
and we've been
doesn't
saying,
take
right,
away,
while I'm
though,
literally
from
in
what
the
we
cycle
think
with you in the
ultimately will
fucking
happen
candle,
to
I'm saying this is some
Bitcoin.
crazy ass shit, but
Bitcoin's
the
role
only
as
reason
digital gold
why I'm
has
being excited and
miles
the
to
only
go.
reason
Interestingly,
why
and you'll
I
see
am
this
like
in
this right
my
now
New
is
Year
because
letter,
of
the
setup. If
correlation
not, I'd be a
between
madman.
Bitcoin and
If
gold
not, I'd be
has
fucking
been
really
almost
chicken little.
non-existent
If not,
over Bitcoin's life.
right?
0.14.
Someone in the
Nonetheless,
world
we
would be
do
like, you're
think
smoking on
it
something. Like,
is
what the fuck are you
not
talking
only a
about? This is
risk
literally just
on
fucking
asset,
speculative fucking
thanks
jack
to
shit. You're
the
making
new
shit up. But, like, is
technology,
it really?
but
Or
it
is
is
something going
also
on
a
deeper
risk
than candles?
off
Because
asset.
truly,
It's a hedge against inflation.
it's a fucking question against
Its
itself.
growth
It's
rate
not even
is
a fucking fight against
lower
one-to-one
than
on that question.
gold's
It's
growth
literally a
rate, and
question
I'll
that you
bet
gotta ask
gold
yourself, and the
miners
answer that you gotta come up
are
to on
doing their
yourself alone.
darndest to
Because
nail
nothing
that
else
stuff out of the
fucking
ground
matters.
now that
It
they're
doesn't
being paid so
fucking
much
matter
more.
if someone's
That
saying it's
can't
fucking
happen with
perma
Bitcoin
bullish or perma bearish, or
and
we're at the top
Bitcoin
or the
miners.
bottom. It really doesn't matter. What
Mathematically
really
metered to
matters
top out at 21 million
is how you
units.
see things in the
So
setups that's
we do
fucking
think
creating.
it
Because it's
will
crazy
be a
while it's
very
creating. Because
important
it's
store of
every
value
participant
going
in the
forward,
market is doing it live.
particularly
And the only
as
reason
we
why it's
go
going up
through
all-time
the
highs, the only reason why it's rejecting
intergenerational
from all-time highs
wealth
is
transfer
because
that we expect
they're choosing to,
during the
and they're
next
participating, and they are
during the
active
next
participants in
5,
the market,
10,
moving the
15
market, whether
years.
that's whales or
We
skrills
also
or whatever, right?
had a lot
But
more
that's the
on
truth.
DeFi
The only
and
way this shit goes
tokenized
up or down
assets.
is somebody out there doing
Stablecoins
something,
just a little
push
bit
button
more
or not, whatever
on
the hell
that.
or
I
not.
think we've passed $300
The
billion
truth is,
globally in stablecoins. We
it's
saw
crazy.
a very large
Fucking
increase
crazy.
in tokenization.
That's the truth.
On public
Crazy.
blockchains.
I don't even think
up
this is
to
huge compared to
19
overnight, but I
billion.
mean, I'm gonna wait overnight.
That's a
I'm pretty
large
sure
increase.
this is
I think
fucking
that was
crazy.
a tripling or maybe even
Jimmy
more
said this
in
is
the
mental.
last year.
It is mental. That's
But
why
we
I'm going
ultimately
mental, and
think
I'm
that's
trying
going
to
to
stabilize,
11 trillion,
stabilize myself right now. You know what I
highlighted
mean? From
by
going
public
mental
equities,
because it is mental.
sovereign debt, and bank deposits. So it's going to be a very
I'm
big
just trying to
market,
fucking make up excuses and
we
fucking
are
explain
putting
why
out a
I'm not
DeFi
trying to go mental, but like
quarterly
it is
now,
mental.
to
Why
accompany our
all-time highs for
Bitcoin
58th
quarterly.
time in
So
literally
stay
52 weeks?
tuned, pay a
According to President
pay a
Trump,
lot of
not me.
attention
And then
there,
we're rejecting literally
because
28
there's
times out of 20
a lot
times.
of excitement brewing, and there will be a lot of
Sorry, 57 times out of 57 times, every
in
single
the
fucking, very
financial
frequently.
sector,
Every time
because
we
of
get
this
there.
wholesale shift, really to a new technology.
Does this shit feel like deja vu?
And so we're
Or does
pretty
this shit feel like we've been there,
excited
done
about
that before? I don't know.
Um,
You tell me, because we
the
literally
other
been
thing
there,
we'd
done
like
that
to
one time.
highlight
Okay,
is,
let's count.
You know, these companies, their
two,
productivity, the companies that are
three,
emerging.
four. This was
productivity is
FOMC.
astonishing.
5. How do I
Tether,
remember?
for
Because
example, last
everybody
year,
was fucking bullish
we
as shit, and the
believed,
only reason why I was bearish was
believe,
Meta, Google, Tesla, and
delivered
every other fucking goddamn thing in the
$50
market on a
million
week.
per
Bullet pulled back
employee.
crazy. 3,
that
4,
is
5, 6,
unheard of.
7. Like,
but we think
this is not
that,
unheard of. This is actually what the market does on a regular basis.
All of these new technologies is going to drive
This is actually some shit that the market does on a regular basis. It's some crazy ass shit.
Right now. And with that, while many people are afraid,
switching fucking hands to the motherfucking max. Look at IWM 12. Time is 105 and LOD is not testing. Another IWM gap. 3 1-minute gaps on IWM, and every single one of them is pointing south. They want to go lower. IWM is fucking dumping.
You can go
they
to
can't stop this shit.
Or Grok and say,
IWM though. Look, IWM just going and market's not even the LOD. Like this shit makes no sense. Why QQQ?
And I would like to start that business. Boy, when we started ours, I would have loved to have
Why is it fucking going up and down and up and down here? The only thing that makes sense is the LOD and the 1 minute gap. The first one they created today.
XAI.
Setup. This is true. This is truly called candle versus setup. Like I'm not even fucking making this shit up. The only reason why I say this, say that fucking phrase is because I was the fucking candle, I was the fucking liquidity, and I was the fucking gap hoping up and down, and I was the oh my god gap up, oh I'm bullish, oh my god gap down I'm bearish, oh my god gap up I'm bearish, oh my god gap down I'm bullish. I've fucking done it all. It's all a fucking hope. It's all a part of the setup. It's all there for a reason. The reason is to fucking struggle and to learn and to be great and to fucking, you know, feel.
Now, when we get to multi-omics,
this is scary.
Over,
Yo, Charia said slowly going down is hella scary, right? Shit, going up was fucking, getting grinded up was fucking terrifying. Getting grinded down right now is terrifying too.
Sequencing technologies.
For real. We're at the 0.5 fib though. We are now below VWAP. I expected this literally earlier. And they fucking went crazy, spiked down, got hella bears excited, and then trapped everything, exchanged hands, and then went to below VWAP. It's still bearish. Still bearish. Crazy work.
Blood tests. We're collapsing the cost.
That's the fucking most craziest part. This time is 110. It's still fucking bearish.
We think it could drop from 2.4 billion.
If you look at the SPX 5-minute chart, the thing went crazy low while we were fucking talking.
Over the next 4 years.
Right, look at the fucking picture we sent earlier in the WhatsApp group and look at it compared to now. 5 minutes is growing and growing and growing and growing. There is no stopping this fucking freight train. Right? Who remembers a Chicken Little earlier in the day? 20v1. I do. How's Alfonso? Right? Give him respects where respect is due.
On this
22 versus 1. Even I, it was so goddamn bullish, I didn't vote lower, and I was positioned for it fucking lower. So,
HAE, which is a very
bounce
rare
is trying.
disease,
Let's see what happens.
Would be
bounce
worth
as soon as I said still bearish trying. Now let's see.
$11 million.
Look at this though on SPX. Can't lie. This chart.
And you're
compared
done.
to this chart, crazy,
that's
right?
Intelia's
can't lie.
Trial right now,
right?
And it's in
cycled fucking nuts, right? I literally said, let's watch this in the 5 minute, right? Before all this shit even began, while they were going up.
11 million. That's how much it would save the system.
Watch the 5 minute instead of the 1 minute.
Be able to charge $3 million, and believe me, insurance companies, they will have no problem
during confusion times, during
so take a
volatile
look at that
times.
Section. It's fascinating. It's the best thing we've ever done.
1 minute is deciphering into the 5. The 1 minute and the 5 lost the trend line from yesterday. Thing is going crazy.
10 years ahead.
Still bearish as
of
fuck. Bear control. Bear control on all sides. SPY.
Rocket
IWM.
2015.
Completely bearish.
And now
110.
It owns two-thirds of the satellite market. And
oh my god.
Something like
did she just say 2/3?
Of all
she said 1/3, 2/3, 3/3.
SpaceX 10
That's
years
not a
ahead
coincidence.
Of any competitor. It landed.
That is not a coincidence. She said
2/3. 2015. And now it owns 2/3.
2/3. Oh my god, 1/3, 2/3, 3/3.
And something like 85%.
Fucking drilled into my brain.
All of the
1/3, 2/3, 3/3.
Put into orbit. And
1/3, 2/3, 3/3.
We've discovered
where is the 3/3?
A new use case.
All the way the fuck down here.
And it couldn't happen without reusable rockets. Data centers in space. And this is a fairly new introduction to
still.
You know,
all these bulls are in danger of being used. We are at the tippity top of the 3/3, right? 1/3, 2/3, 3/3, 2/3, 3/3. Everything above here is being used right now. Look at what's going on. This is 2/3, 3/3. Every single bull up there is being used at all-time highs to go lower, and the 1/3, 2/3, 3/3 lower. This is one. This is still 2/3. Kathy Wood said it best. 2/3.
There are two new worlds evolving here.
2/3.
Outer space,
right,
a completely new world. All kinds of jobs are going to be associated with
LOD break, let's go.
And then in the digital realm, now,
the most crazy shit ever
blockchain
I've ever said.
technology,
0.5 fib. Look at IWM gap. Though. This is some
rights
nasty
in the digital realm for the first time. The the best way.
I've never even seen this before, though. Maybe I've seen 3 gaps and they fill 1 or 2, but like this is 1, 2, 3, 4, 5, and they're about to create 6. Like this is fucking nasty.
Private property.
I don't know. I feel like it's gonna fill at some point and not cycle before anything.
And
but
it's
LOD
just
testing.
starting. So we're pretty excited about that.
Nasty.
And then we've got distributed energy. We've done a lot with nuclear power this past year. Daniel and Sam Chorus, who've also done
15,
our,
20 people that left the live stream. Thank you
work.
so much. I'm sorry.
It's excellent research.
Candle traders
they
from the top
have done our work
and the bottom.
on nuclear power as
Things
well.
are not going their way.
And
I'm very sorry.
It is shocking.
The market is using setup. It has nothing to do with what I'm saying or nothing to do with what I want. It's just doing it based on what it's doing.
If regulation had not stopped the cost declines for developing nuclear plants from continuing, electricity costs today would be 40% lower than they are now. So we have high hopes that nuclear power is going to
crazy.
help
If it
us,
does algo range
once
truly in
again,
here, then I'm going to say it's
as
absolutely
they
not
scale,
bearish and it's no
drive
direction
down
chopping
the
at
cost
HOD.
of
But if it does
electricity
go
and be
south,
a
IWM
counterforce
filled the 1 minute
to
gap. There's
the
another 1 minute
demands
gap it
that
wants to fill.
AI and data centers are placing on our grid right now. So take a look at that
Zero
work.
DTs are going through it all.
And then, of course, Tasha Keeney and Daniel again on other autonomous vehicles. So we've got robots and rockets, other autonomous vehicles, of course, robotaxis. And we believe that we are in the midst of the birthing of the robotaxi.
Most important to realize the market is so damn volatile and it's so fast and it's
you've seen our
unforgiving
work
that,
there.
you know,
We've
someone may be
updated
right
it,
5 or
to
7
show
times out of
that
8 times,
Tesla's
but that
competitive
3
edge
out of
over
8 times,
Waymo
2 out of 8 times, 2 out of
is,
7 times, whatever the
has,
proportion you think
well,
that
at
number
least
may
according
be,
to our
could
estimates,
turn fucking bad
increased.
or
We used to
real
think that their
dangerous.
cost structure,
So
Tesla's cost structure would
most
be
important thing is to
35%
understand
lower
the exact
than
2/3,
Waymo's.
3/3
But as
of
we
how
have
it's playing
refined
bullish
our
and bearish,
analysis, we
and to
now
risk
believe it's gonna be
analyze best.
50% lower.
That's the
And it
most
is
thing I
very
could basically
interesting,
say because that's the thing
to
I've
watch
drilled and I've
Uber
tried to
and
I've tried to
others,
taught myself in a way that
trying
I'm
to
like, oh, I'm not gonna
insinuate
even fucking think
themselves
about
into
trying.
this space.
Think about
I know
long
it's
or long or
important,
short or whatever the
but
fuck
we have
it
been
is into
saying
3/3
all
or
along
1/3,
and
2/3.
still
But I mean,
believe that Uber and others will
it's
be
just the
lead
most absolute.
generators for Tesla.
I don't think anyone could have
and
imagined we were gonna
Waymo,
pump up
which
though
will
and go
probably be
all-time
number
highs
2,
until we did it,
as
until
they
we were here.
scale
So
throughout the U.S. And
that's
one
why
of the
some
most
people say market is such a
interesting
fucking
pieces
insider,
of
such an
work,
insider news shit.
that
Because
Tasha
how do you
and
know it's
Daniel
gonna do
did
this
this
until
year
it does? But I mean,
was
there's literal
on,
tiny ass
the
setups that literally
percent
marked
of
80 or
urban
70%
miles,
of people
that Uber
convinced, and it's
covers
just
right now in the United States. It's about 1%. And so we did a calculation.
it's absolute.
How many autonomous vehicles would Tesla have to produce, or Waymo?
I'm holding. I have not left
to
shit
cover
based on
1%
what has happened
of
in the
urban
past.
miles.
That's the
that
only
would be
reason.
140,000 units. Now,
It could pump back to all-time highs,
what
yes,
would
today
be
or
the
tomorrow. It
number?
could.
How
There's
many
so much time.
vehicles would it
But
take
the only reason why I'm not
to cover
is because every time we work,
all urban miles?
we see some sort of pullback for a
And
day or two,
that
even if we
number
go higher or come
is
back to the place. So
only 24 million. That is less than 10% of the installed base of
time is
autos
1:15.
In the U.S. today. So that is a U.S.
We did
that
not
is US
go to the
analysis.
bottom of the purple box.
And
This
we
is
know
to the middle and bouncing out of it, trying.
auto sales
Right. This is best to
right
watch in
now,
the
they're
5-minute
at
candle.
roughly
Why? Because a
15
5-minute
million,
candle cannot fake out, or
per
the 15-minute
year.
candle with the MACD
That
volume
gives you a
cannot fake
sense
out
of how much
the box that
the
they're
auto
playing in.
market, in
The
terms
box
of
that they're playing
vehicles
in is a
produced,
temporary
could
range.
shrink, and yet we
Ranges
could
break,
still
ranges
cover
change with time.
autonomous vehicles,
When they
which
come in
obviously
relation,
have
when they
much
don't,
higher
that's not really up to us.
utilization
That's really up
than
to the
personal
market.
vehicles. We drive
But
our cars
when they
4 to
do,
5% of the
right,
day.
what is true is the majority
Whereas
do
an
not care
autonomous
or are not
vehicle
looking at
could
it.
be 50,
The minority
60% of the day.
are,
So you get the sense
and they're
of
using it
how
up or
much
down.
the vehicle market.
That's the
could
most important
shrink,
shit.
and
Esteban,
still
good to
we'd
see
be
you,
able to
bro. That's
satisfy
you, Real, right?
100%
Real, you can
of all
message
the
me
urban
in the WhatsApp
miles
group, and let's get you
in
back
the
into the
United
group, man.
States today.
Or
And we
let me
do
add you back
think
now.
that, and we still think that the
All right, you have proved
autonomous
yourself
vehicle
through a
market
couple of days that
will
you are
drive
actually
30
watching, that you want to
think
be
it's
here for
35
yourself,
billion,
and that you are here
34
when you can,
trillion, sorry, billions,
right?
trillions.
We all have lives and we all work and we
$34
all have
trillion
jobs. So I really
in
respect
market
you
cap
and thank you for really
by
doing what you said you were going to do,
2030.
because
In
that's what you said you
2030,
were going to do a week
30
and a half ago, I'm
trillion
pretty sure.
for the
If that is you,
global
Real, please say that's you
ecosystem,
so I can
not
add the
only
right
the
person. But
auto
yeah, that's what I want, man. People to
and the
fucking
lead
actually be
generators,
active and
but
fucking
most
prove instead of being like,
importantly,
oh,
the
I'm going to
platform
be,
providers,
and
and
it's
they
just,
will get the lion's share
we all
of
say
the
things,
economics,
and it's a
as
lot harder to do
Tasha
things
and
and to
Daniel
really
show you.
try than
And
to
then
really just say
finally,
I am.
autonomous
All right,
logistics.
that is cool.
Autonomous trucks
Let's just forget about what happened in the past, man.
costs
In the
by
past,
60%.
some bullshit, to be honest, right? You
Drones
could
and
post whatever the fuck
rolling
you want in the WhatsApp
robots
group. I got mad at him
are
because he
also
posted a
going to cut
$400
delivery
over the
costs
night when I was in
dramatically.
crazy over the
Did you
night in the
know
weekend.
there
So
are already
I ain't gonna
4
lie, bro. You can
million
do whatever you want,
deliveries
right?
per
We all
year
love you.
by drones?
Sorry for removing you.
Now, to be sure, Zipline,
Y'all work too much. Nah, I know,
one
bro,
of the
but you are
companies in
here
our
when you
venture
are here.
fund,
So when people
is
say that,
responsible
please
for,
just
I think,
show
half of
that by
those.
saying, hey, blah, 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 on the
But,
YouTube here and there. That's all you need to do, to be honest. You know what I mean? We see you a couple of days. Everyone sees you, and then you literally are just
will cut
there.
delivery costs right now.
Thank you.
DoorDash $15
No, I know, bro. I know.
per.
We had a
less
deep
than
talk
$1.
before all
So
this
a
shit happened too.
90%
We're like, yeah,
reduction
just
over
later
time.
on, if you keep watching,
so this
blah
is
blah blah.
another huge
We go from
market,
there. I had this talk with numerous
percolating
people
out
too.
there. And
5 on my hand,
we're
I can
so
count.
excited
4, 3 of
because
them have
we
not come
believe we're
back. 3
now
or 4 of them have given
in
up
the
or have
prime
not typed
time
at all.
for the
So
reason
I can tell you
I
right now,
founded
you are the
ARC.
minority.
Founded ARC in
I can tell you
2014
right now,
for this reason.
you are the one
I
out of the
felt
5, the
that
one out of the
ARC's
6, the
research
one out of the 10.
would
So I
fulfill
respect
an
your time.
unmet need. And I'm
Happy
very
Tuesday,
proud of the
everybody.
research we're doing.
Shout
it's the
out to
kind of
Happy Tuesday.
research
Time is
that investment
1:20.
banks
0
used to
DT
do
is cycling.
when the M&A
Shit does not look
market
bearish because
was
of
much more
QQQ.
vibrant than it
But
has been for the last 4 years.
I'm still in. I don't really
under
know.
the
It
last
really does look
FTC,
bullish. We are
was shut
bouncing from the
down.
0.5 like
So
nothing.
our research
IWM
has
is gap filling tried.
or fulfilled an
1 filled.
unmet need, and we're
2
so
out of 4
happy
filled.
to
Right.
see
So
our
I've never seen
research
4 or 5 go
in
and
the
never
startup
fill. But I mean,
decks
2 out of 4 filled.
so many startups
That's
out there.
for sure.
Because what are startups doing?
1/3,
They're
2/3,
heads
3/3
down,
from
trying
105
to
into
innovate as
122.
fast as
That's
they
15
can.
minutes.
And what
Let's
are
see
we
what
doing?
happens.
We're helping to size the markets they're
Acting
going
volume
after.
is bullish here
I
again.
think
On the
that
1.
the wall of worry that we have been facing in the last few years around.
Kathy. Stop it, Kathy. We all love you, Kathy. I love you, Kathy. Love Kathy. Kathy. Now there are some setups to go higher because of IWM2, or there are some setups to go maybe hover or chop, or I don't know. But it is now building at 1/3, 2/3, 3/3 from the bottom of 105 into 120 until the bottom of 105 breaks. All bears, all 0 DTs are destroyed and fucked. Probably that was the best thing to say at 112, 113 too when we're talking about other shit. And that is what it is doing. It is creating a cycle within a cycle. Hard fucking cycle. Hard bounce cycle is why I'm saying hard cycle. Yeah, I haven't left jack shit. It's reverting.
A New York Times Siena
I gotta
poll
go to the bathroom.
shows that a majority say they do not feel confident in their ability to pay for housing, retirement,
Gingrich
healthcare.
says the economy is
More
about to
than half
surge.
said housing and education are now so expensive.
I'll be back in 5
that
minutes or
both
less.
have become unaffordable. Newt Gingrich joining me now. How does the president turn this around, Newt?
Well, look, I think he's moving in the right direction. First, the bill that was passed last July has very large tax cuts. People will be feeling that in the next 30 to 60 days. The amount of investment he's getting into the U.S., maybe as much as 17 or 18 trillion dollars, is going to create jobs. in the last 2 quarters, we saw much greater growth than people expected. And we also saw that incomes were going up faster than inflation. And that's a big step in the right direction. But look, one example. The biggest single affordability problem is healthcare. If we had transparency in healthcare, so you could measure cost, quality, convenience, and you could decide, not some bureaucrat or some insurance bureaucrat, but you. We think that that would probably bring down, for the average family, from $27,000 to close to $20,000. It's a $7,000 a year advantage. So there are steps that can be taken. The president's already taking a bunch of them. More are coming. But this is a real problem. America became too expensive between regulations and the government and the policies of the Biden administration. Things just got out of hand. So we have to go back now and recreate the kind of economy where, 1, you get real growth, 2, you get higher salaries, and 3, prices drop. I think all 3 are going to happen. In fact, I think by July, you'll actually have a Trump boom, and people will look around. This happened to Reagan. I mean, Reagan at the beginning of '83 was in big trouble. He was behind both Michael Dukakis and John Glenn. A year and a half later, he carried 49 states because the economy boomed. I suspect the Republicans will go into the fall campaign with prices down and with incomes up.
Yeah, booms are popular. Next one, Newt. A long meeting in the White House, 2 hours with Kristi Noem and Corey Lewandowski in the Oval Office. The result of the meeting is that Noem steps aside from running the show in Minneapolis. Tom Homan comes in and will report directly to the president. So she's been shifted aside. Should Trump fire Kristi Noem?
I'm not going to advise Donald Trump on who, he ran The Apprentice, and every week it ended with "you're fired." So I'll let him decide that. I will say that I think that ICE was not appropriately led. I think that Homan is going to be much more professional, much calmer. We have a big challenge. We have millions of people who came here illegally. We're in the process of getting them to leave. A lot of them don't want to leave. And on the left, the Democrats have decided that they're going to make this a huge fight, which is an absurdity. In essence, Schumer says, I'm not going to fund ICE, which means, is he for open borders, which certainly Biden was? Does he want to go back to having Venezuelan
Thank you for that
gangs
insight, sir.
Salvadorian gangs? But the challenge is simple for people, for most Americans. We don't want
Purple
to
box
see
on QQQ.
conflict on our streets. We
Is
don't
in
want
play,
to see
trying to break
people
out,
who are put in a
or
position,
you could reject.
particularly if they're innocent, of having the government operate against them. So I think Tom Homan's
SPX is back in the algo range in bull control.
He's solid, he's stable, he's professional, and I think he will do a dramatically better job of leading ICE to the right kind of behavior than
25
people
minutes.
did at Homeland Security. I was very disappointed
Near the roof now.
In the absence of solid training. You can't put
in between the roof and the midpoint.
To enforce police functions.
In between the roof and the midpoint. IWM gap is filled.
Thanks for being with us this morning. I'll see you again.
That's the most craziest part. IWM gap is filled. All right, the setup upward was there for 3 IWM gaps, and 3 of them is filled out of 4. Market could reject or could go higher on the QQQ box. I said 2 minutes ago in the WhatsApp group, and the market is deciding clearly. Drink my Coke. Reject, come on. Higher time frame overnight into close.
Got more layoffs across tech today as Pinterest plans to lay off 15% of its staff, and Amazon's 14,000 cuts are expected to come any day now. CEO of OpenAI, Sam Altman, reportedly told his staff of plans to dramatically slow down hiring. Deirdre Bosa is looking at all of this in today's Tech Check. Morning, Dee.
Hey, good morning, Carl. So the OpenAI piece, that stands out because it signals something bigger about where the AI race is headed.
We back
Last
to the
year, hiring fast was a sign of
OpenAI
AI,
talk.
but OpenAI is now flipping that logic. So CEO Sam Altman in that Business Insider report, he warned employees that aggressive hiring can actually be a signal of poor planning.
Off of 125. Let's see if it continues for one more minute, 10 seconds into.
Now, that doesn't mean that the AI talent wars are over. In fact, our own Ashley Kaput heard from a source that OpenAI still expects to nearly double its headcount this year. But the key here is that
projection trying off of 125. Time is already 130.
I can avoid the kind of layoffs happening now at places like
125 is trying to create an algo range, or 130 will go lower here in the next 4 minutes, 5 minutes.
Pressure to scale, pointing to a broader shift that investors they should be watching very closely as big tech earnings gets underway.
The next if it goes lower than 125, it won't create an algo range, but if it does bounce right now, right here, it will.
Already have. So, for example, if Capex continues to climb, investors should maybe ask how targeted
no confirmation
the build-out is.
rejection
they should
at all.
Scrutinize utilization rates at those data centers and look for productivity metrics like revenue or free cash flow
per employee
rather than raw headcount or just raw spending. So in other words, who's getting the most out of what they have already spent, or workforces that they've maybe already cut and added to in certain places. So Anthropic CEO Dario Amodei, his essay that was published yesterday, it's getting a lot of attention for its warnings about how disruptive AI could be, but strip away that sort of doomsday framing, and there is a more practical point underneath, and that is as AI systems mature, the constraint shifts from building faster to managing and deploying what already exists. Now, that framework, it lines up with what OpenAI is signaling here about hiring, and one that investors should pay close attention to during big tech earnings. So it's about leverage and efficiency, maybe not raw numbers and headcount.
Leverage and efficiency. Not headcounts right now.
Conversation with the highly respected president of Syria and all of the things having to do with
I showed you a Coca-Cola? What are you talking about? Don said it's the same Coca-Cola you showed me once. What does that mean? What the fuck are you talking about?
In Minnesota now, he's meeting with the governor and he's meeting with the mayor, I think later. And I hear
man, this mountain though, look at the puts just grinding up like that. That's crazy. And then look at the calls. 1, 2. There's a huge wall of calls.
Prices are coming way down, and we have a lot of very positive news.
I showed you a Coke though. I'm very interested now. What do you mean?
Well, you know, we're doing a big investigation.
Did I send a Coke in the WhatsApp group?
I'm going to be watching over it. I want a very honorable and honest investigation. I have to see it myself.
Is Kristi Noem going to step down?
No.
The president of Syria, the president of Venezuela said that she has not taking orders from you. What do you have to say about that?
Well, I don't know exactly what's going on there, but I haven't heard that at all. No, we have a very good relationship.
What about
I'd like to see interest rates go down. Everything else is going down. We have the energy and fuel going down. We have gasoline in many states now at $1.99. Groceries are going down. We inherited a mess.
Oh, I remember. I remember we talked about that was so long ago.
I will tell you, we've made a lot of progress. So we have the groceries going down. We have the energy going down. We have gasoline going down at a record clip. And that's what I want to do. We're doing well. Well, I'm looking at that whole situation. I love everybody. I love all of our people. I love his family. And it's a very sad situation. Yeah, please. I have, yeah. I think she's doing a very good job. The border is totally secure. You know, you forget. We had a border that I inherited where millions of people were coming through. Now we have a border where no one is coming through. They come into our country only legally. So
so you have to remember those things. You know, people forget as soon as you accomplish something,
Never
it
broke
goes
the floor.
into history.
That's crazy.
And nobody ever wants to talk about it. We had a border that caused all of this problem.
Bulls are
Biden
still
caused,
here in
and the
IWM
Democrats
after all
caused
that.
the problem. They allowed
That's
tens of millions
crazy.
of people to come in. Many of them were
What
murderers.
the
Many
actual?
were drug dealers, drug addicts, people from mental institutions. They allowed these people to violate our country, to
5
come into
minute
our
neutralized.
country. And that's what we're talking about. So if you
Volume.
remember, we had a horrible border, the worst border we've ever had, ever in history. People were flowing through by, we think, 25 million people, not to mention drugs and everything else. And that border is absolutely closed. Border is really strong. You know, if you remember, I probably got elected more than anything else on the border. We had a border that was open with 25 million people coming through with an open border policy, which was insane. And that's the policy that caused the problems that we have. With all of that being said, other than, I would say, just to put it accurately,
And they may be reviving some short-term hope right now, but you have to think about this in the higher time frame and in bigger picture.
Has been, like, literally crime has gone down 50, 60, 70, 80. In Washington, it's gone down to practically no crime.
Still bullish on 45.
Is a great example, but you take a look at other
1 hour.
Memphis, Tennessee, the crime is down
4 hours slowing down.
78%. And you know where else it's down? It's down in Minnesota. It's down in Minneapolis, and it's down very much because of the fact that we're there. So we can't lose sight of the fact.
They don't give a fuck. HOD testing again. Maybe IWM gap wants to fill today. I don't even know. It's really showing 135.
Of the Democrats, of Biden, and we're doing a great job.
Crazy work. You destroyed calls on this push down, and another destroying puts on this push up. Crazy. But this is what I mean by you have no idea when this shit's gonna revert up or down. Just literally just hope until it does, but it's literally just cycling on all fronts. Look at SPY back at HOD. Time is 135. This is crazy. My puts are getting fucking fucked around within 25 minutes. 30 minutes. It's being fucked around with heavy. Man, they don't want it to go.
Things are happening on Ukraine and Russia.
Mr. President. Where do we stand on Gaza, Mr. President?
I think Gaza is going very well. As you know, we got the last.
Holy fuck. Look at the amount of polls we did. I want to do another poll, but I can't. This is crazy.
Thought that was impossible. So we got all of the hostages back, both living
what
and
the
dead.
fuck?
And I
Look at the amount of polls. I can't.
Really appreciate it. Who's that?
Alright, now QQQ broke up on the 1 or 5 minute. Let's see if this holds. That's the real question. IWM looking towards the gap.
That being said, you know, you can't have guns. You can't walk in with guns. You just can't. And you can't, listen, you can't walk in with guns. You can't do that. But it's just a very unfortunate
What a fucking way.
Are you encouraging tariffs?
We'll work something out. We'll work something out with that.
Look at him fucking just walking off like a boss. Like a boss. Holy shit. What a bounce.
We're back on Morning Trade Live. Let's focus on health insurers. United Health, Humana, CVS and Elevance are all moving lower this morning after the Trump administration proposed keeping Medicare Advantage rates relatively flat in 2027. You can see how much that is impacting these stocks right now. Down in double digits. We are seeing some heavy selling pressure this morning, despite the fact that actually we heard from United Health with respect to their earnings, but this story is not helping. So These stocks are the focus of the morning trade. Joining us now for a closer
Trade
look at
Hub
what
stocks.
is behind this
You could join the
move is
WhatsApp group,
Marley.
bro.
Very good morning to you. Just walk us through the details.
Paid
Obviously, we
WhatsApp
first learned about
alert
this through the
service
Wall Street Journal.
for a
but
SPY
talk us
or
through,
major stocks
obviously, the
alert room
facts
is
and
not
some of
yet
the reaction
created.
we're seeing in some of
I
these
don't
stocks
feel
today.
that much
Absolutely, Sam. Good morning to you. You just showed on the screen that we are seeing a
pressure.
really negative reaction in terms of
I just
these
want my shit to
healthcare
go right
insurers.
now.
United
I'm
Health
just
down more than 18%
taking it slow.
right now. You also
Let
highlighted
the channel grow. Let people
CVS,
come.
Humana. These are some of the other big insurers here. After the administration proposed nearly flat rates for Medicare Advantage. So Medicare Advantage is a privately run insurance program that now covers more than half of Medicare beneficiaries. So this does affect quite a lot of people. This proposal would entail that the net average payment
Did it create an algo range at 125?
by less than 1%,
Yes.
0.9% for Medicare Advantage plans in 2027. Typically, the
Did it
next
create
year
an
is
algo range
finalized
at
in
135?
April, so not a lot
Yes.
of time to get this one hammered down if there are problems from the insurers. That number is significantly
Unusual cycles
lower than
happening
what
at the
was
roof.
expected from the street. They thought the agency would propose a rate increase of
Algo
between
range
4
creating.
and 6% next year, and it's less than 1%. So a significant departure there from what was expected. Now, this payment rate determines how much the insurers can charge for monthly premiums and plan benefits that they offer, and then, of course, ultimately their profits. But CMS Administrator Dr. Oz came out and said that this is about making sure that Medicare Advantage
Man,
works
I wanted
better
to do a
for the
poll.
people
Is
it
today a
serves. This is
bullish
all
day
tied
or a
to
bearish
affordability.
day? But we have no
They
idea.
say that by strengthening
That's why I
payment
wanted to do
accuracy
the
and
poll.
modernizing risk
It's bullish
adjustment,
as hell for
CMS
now.
is helping
QQQ
ensure
helping,
beneficiaries
but
continue to have affordable plan choices and reliable benefits. Now, you mentioned United Health came out with its earnings today sort of in conjunction
yeah,
with
don't
this
talk about that
announcement.
here, bro.
They're saying that this notice from CMS doesn't really reflect the reality of the cost trends in 2027. And that it's not affected, it's not in line with what medical utilization costs are right now. They say they're going to continue to work with CMS to ensure an appropriate final growth rate calculation, but they are concerned about underfunding. As far as their EPS came in beat by a cent, and their revenue was a slight
Today's
miss,
an
but
all-time
most of the
high
moves we're
day,
seeing
so the
today,
question
Sam,
is
are
hard.
because of this announcement from the
Technically
administration
speaking,
and a potential major
the
hit to
majority
profits for these
of the
companies.
the majority should be saying it's a bullish
on a
day.
day when we get
We're
the
above the
consumer
0.5
confidence out
and
from
near
the conference
HOD,
board
trying
dropping
to show
to a
HOD
12-year
breaks. So
low this month. I mean, it's just how
that's why I
people
want to do the
feel
poll.
about the state of the economy right now, as you say, as the administration is very much trying to address affordability right now. But
Someone
thanks
said
for getting
say
us across
bullish
the
day.
details
Someone said
this
say
morning.
bearish day.
Marley, I'll chat with you a little bit later on. Let's trade it now with Tim Bigham, options strategist at Pilot AI. Tim, it looks pretty ugly out there for some of these names in this business. How are you approaching your example trade for United Health, given that we also had earnings out this morning, but the market's looking past
These cycles are
that and stuck on this
humongous.
Wall
Like, I
Street
can't even
Journal
blame it on
story.
zero DT. It's just like the cycle actually
Sam,
going up and down like
looking
$2.
past earnings, which
Moving up
were,
$1.
tepid at best. Certainly a slight pullback on the revenue miss on earnings. Might have been expected,
Counts
but
as a slight
today's
pullback,
news
like he
trumps
said,
all,
for
no
now.
pun intended. We're back below that 300 support level on UHH, which has held for a very long time. And we're actually seeing implied volatility because of the news and the huge move down of almost 20%, as you were alluding to, spiking IV, especially in the short-term options. So I'm just thinking that, like everything else, probably some negotiation may be coming on this. So I'm taking a somewhat guardedly bullish stance for a move back towards that 300 now resistance level on.
Man, who remembers when United had that crazy ass drop from the top of that political shit? It was like a fucking 20% drop.
Join me now for a look broadly across markets. It's Larry Tentarelli, Chief Technical Strategist for Blue Chip Daily Trend Report. Larry, I hope you are warm where you are. I know it's been like, just storms everywhere right now. And, we had weather volatility. We had market volatility. The indexes look fine overall, especially when you think about where the week ended versus where it started recently. But you say the real strength is outside the S&P 500 and NASDAQ. Tell me about that view.
Sure. Good morning, Diane. So
Good morning.
what we're seeing year to date is big breakouts in commodities, commodity stocks, international stocks. Latin America is very strong. The U.S. dollar has been very weak. We track 95 ETFs on a daily basis, and the S&P 500 ETF is number 72. year to date. So there's a lot of outperformance outside of just the market cap weighted index.
Okay, and then so you track about like 90 global ETFs. Tell me a little bit more about the leadership and what, you know, a lot of our audience, the retail investors, what they should be paying attention to.
So where I would pay attention to is the current leaders. So first of all would be metals and miners. So obviously
today's title should be the Chicken Little Day.
Today. But it's not just gold and silver, it's aluminum.
I am not the Chicken Little. Alfonso is. Today's title
like energy,
should be
the oil
the day
services
the Chicken Little.
ETF is up 19% year to date. So I think we really need to focus on the materials sectors, be sure we've got some exposure to energy, and then still technology. But in technology, there's really pockets of strength. It's really in the semiconductor equipment stocks like Lam Research, stocks like ASML, and also into hard drive stocks like Western Digital and Seagate.
Larry, let me ask you about.
I think rejection at new HOD is the crazy
I'm sure you saw
that's the
move
most
from the
rational
government
shit.
taking a stake or announcing
It's literally
that they're going to be taking a stake in
25v1,
USA
like 23v1.
Rare Earth. There's going to be this combined package of debt and equity. Reminds me of MP Materials. Is that fueling what you're seeing in terms of materials and miners, the momentum there?
To a degree. I think also what you've got is geopolitical concerns. So there's obviously a lot of headline-related volatility around the globe to start the year. We've got Venezuela. We've got a few other headlines that I think are leading to some geopolitical concerns. And rare earths is a very, they're in the spotlight. That's a sector that I think is very headline-driven. You've got the rare earth ETF, REMX, which is up 30% year to date. MP Materials looks like that stock wants to break out. Also, Albemarle in the lithium space is very strong. So I think these material stocks continue to lead, and I would want to have positions there. We've got
125 algo range bottom is testing whether it wants to break. Time is 145.
Are you still bullish on gold?
145 is testing whether it wants to break 140 low or not. 145 is trying to go.
And I'm curious about your take on silver
go where?
as well, because
below
I was just
140.
talking to Kevin Green
below
earlier.
125 trying. Those are two different things happening.
Different than gold, silver looks like this. Looks like my take is that it looks like more of a trade, and that feels like you got to be careful there. But what's your thought?
I think you have to be careful on
Look at
both.
QQQ in the 5. QQQ in the 5 is trying to break out on the purple box and it's failing.
Silver looked extended. Now I think it's $109.
Bull flag on QQQ all day long.
Two views: the very short-term view and the long-term view. The long-term view is the trends are very strong here. Gold is over 5,000. Silver's about $109 or so. So these trends are up. We've had positions since last July. But I will say this, if you take a look at that silver chart, at some point, if there was a very sharp
rejected for 10 minutes
correction, it would not be uncommon. And these charts could still stay in uptrend. So I'm not a very short-term market timer. I never want to fight the trend. So I would be sure to have positions here. But if I didn't have any positions until right now,
all right, guys, I promise, guys, we have 130 people here.
Okay,
let's have 30
Larry,
or 40 people hit the like button. This is the last poll of the day based on personal opinion
this
poll.
Week, including some members of the MAG 7.
What was the question he just asked? Right, the trend, right? What is the trend right now? Up. Trend is up. Trend is down. Trend is chopping. That is the 3 poll. Trend up, trend is down, trend is chopping at the all-time highs. What is the trend?
Curious to know your views on tech and what you see as viable ideas.
There's no fucking way. We have
So
no one voting
the
up.
best
Please.
Mag 7 chart
Please
has
just
been
vote your
Alphabet,
personal
and it's
opinion.
been like that for a while.
The majority
Apple's
should be
been
saying
pulling
up,
back.
I think.
Microsoft, there's been a lot of
I want to vote
weakness
down, but I
in
mean,
Microsoft below the 200-day moving average.
just please
And
vote
I
what you think.
What you've seen here is twofold.
There's
the market is positioned for an extended
crazy.
Fed rate cutting cycle.
No one voting up.
And in that scenario,
I'm voting down. So 0 voting up,
tend to perform
6
better.
voting down.
So
Trend is chopping at the all-time highs. People says
and I think what investors
very
have
bullish
done
on QQQ. So
is
one person saying up,
rotated out of
chop,
these Mag 7
5,
stocks because
6.
in a rate cutting environment, you should be able to get stronger earnings growth.
Time is
outside of these
145.
big mega caps. So if I had the Mag 7, I'd hold on to them.
145,
We've got Nvidia, we've got
695.73,
Tesla, and we've got Alphabet. And I think over
695.72. So
time,
145 is
they'll
higher
be
than
fine,
140.
but they would not be my first place for new
145
money
did
in
not
tech
bounce to
right now.
145. 140
Okay, let's
bounced
talk
to
about the second
145.
tier of AI, for instance,
Minuscule
the picks and
difference,
shovels
but there's
level.
something that
What
you
do
need
you
to know.
like when you're thinking about beyond
To turn into something
the
bigger.
names you just
Or it
mentioned,
might-
like, for
or it might
instance, some
not.
memory names, especially memory had a strong run last year. I'm curious to know if you think that can sustain this year.
Sure, and memory's strong again this year.
is so damn
Micron's
close
a
and
big
it's chopping
leader.
nearby.
Western Digital's
all
a big
day
leader.
long.
Seagate, SanDisk, and I do think those stocks can continue.
I
And one
refuse
of
to believe that no one wants to
big
vote up.
positive
Like,
tailwinds
this is
they've
just
got is if you look at the PE ratios on these stocks, like
damn
Western
social
Digital
pushing pull.
and Seagate,
Like, what
they're
the
in
fuck?
the
Just please vote
20
your personal
to
opinion. We have one person
25
voting up. Now it's Chicken
PE.
Little.
But they've
Who?
got earnings growth over 20 to
Murai,
25%. So we
Murali,
often hear
Krishana.
about valuation concerns with tech.
You are now the
But
Chicken Little.
although these charts might look
Against the
extended,
rest of the world.
this
Derek
AI
voting
ramp
up.
up
So 1,
in
2,
memory
3
and
people
DRAM
voting
is
up.
very strong. We've got
7 people
positions
is voting.
there.
Trend
We've
is
got
down,
Western Digital,
along with
and I would
DSD
continue
and
to
Henry. So
accumulate
that's
these
9.
stocks, whether it's here or on pullbacks.
Chop
Right,
says
Larry,
Dancing Diva,
conversation there for
as
today.
well as
It's great
Trend
to
is
have you
chopping
back
at
with us.
7.
That's Larry Tenterelli, Chief Technical Strategist for Blue Chip Daily Trend Report. Thank you,
Oh,
Larry.
good to see you, Dancing Diva. Good to see you. Time is 1:50. Went higher into 1:50. Cycle is so tight right here that I can't even draw it, but it's I should draw it technically. 140 bounce, 145 confirmation, tiny ass into 150. Tiny ass cycles are building. 150 is at the top of the algo range. Algo range is testing. QQQ is hovering at the HOD. It's chopping and chopping. Statistically speaking, more than not, when SPY and QQQ does this together, they would break the HOD, but this is all-time high territory, so that statistics goes out the window. IWM is still playing with the IWM 1-minute gap. It has bounced below the 0.5 fib, way at LOD test at the 0.78, whatever the fuck, from the 1-minute gap, and it is playing. Big things are happening still. 2 people says trend is up. 7 people says trend is down while we are at all-time highs. That's the most crazy shit to think about. Trend is chopping at the all-time highs. I feel like daily chart shows bullish. Intraday we are bullish. But look at the volume, just dying into today with no volume. That is the best, craziest way to get all-time highs, is it not? So tomorrow, is the volume going to be bullish for 2 days or a day, or is it not? That's the most craziest fucking shit. It really is. All-time highs, fucking madness. All-time high madness. Since when though, they are burning the fuck out of 0DT and all puts too. We are back at all-time highs, so this shit is literally burning puts and calls at the same fucking time. QQQ burning mostly puts, but still chopping and chopping since 632 to 630, and then bounce up to 630, 1.38 near 632. So that's crazy. That's crazy.
The Trump administration is rolling back Biden-era climate spending, canceling $30 billion in green energy loans. Darren Botello joins us now with the latest. Hi, Darren.
Hi, good afternoon, Taylor. So the Trump administration is calling this the Green New Scam. The administration canceling nearly $30 billion in green loans from the Biden administration and revising another $53 billion. So $83 billion in total. For some, it might sound like the Biden administration was just a big fan of the environment and protecting Mother Earth for all of us. But consider this, Taylor. The Energy Department found that more money was dispersed in the final months of the Biden era than in 15 of the previous years combined. And the Department of Energy eliminated about $9.5 billion in financing. We're talking for wind and solar projects, replacing them with investments in natural gas and nuclear updates to make more energy affordability, like reopening the 3 Mile Island that we talked about right here on this program. This was a little while ago, the power plant in Pennsylvania. In October, it canceled nearly $8 billion in grants that supported hundreds of clean energy projects. This was in 16 states. At the time, the Energy Department halted 223 projects after a, quote, thorough individualized review. Just about an hour ago, we spoke with Energy Secretary Chris Wright about these savings for consumers.
As you looked at that $100 billion that was committed to loans, precisely zero of it was going to do something that was going to lower the cost of energy for Americans or expand the production of reliable, affordable energy for Americans. It was driven really in the name of climate politics. The climate activists will celebrate less our activities, but American taxpayers and businesses will celebrate what we're doing.
And after that big storm yesterday, Secretary Wright also pointed out the massive amount of inefficient energy New England was using.
4 people voting trend is up.
Heat and to power those TVs.
We have
to watch the Pats punch their ticket to the Super Bowl.
9.
See some more next month with the Seahawks after they win. And the need for the Constitution pipeline.
We have about 10 saying chop.
Obama and Biden have driven us into a ditch and driven electricity prices up and made energy security right now more of a risk. So I encourage all the New England residents to engage with their local politicians and regulators and express your desire to have more secure, lower cost energy. It's easily deliverable. The Constitution pipeline that's been on the plans for many years is ready to be constructed.
And I can't name names right now, but I was told a majority of high-ranking government officials in the Northeast are in favor of the pipeline. There's only one very liberal
volume and the candles coming in bullish, but it's just a question is since the top.
I have a lot of bones to pick with you, Darren. I am a 49ers fan, and your little Seattle comment throwaway in there.
Oh boy!
You and I have words after the show.
I'm with you, Darren.
He's in trouble.
Let's go, Drake May, baby.
Goodbye, Darren. All right, let's get
video holding at the
back
roof.
to business. Jackie, the standout line to me, not the Seattle Seahawks. The final months of the year, more money was dispersed than in 15 years combined. Should I be relieved that at least in the previous 15 years we weren't blowing all of our money, and at least we can try to undo what was done in the last few months? Or are we more concerned that all of that money was just sitting there unused?
It's one way to look at it, to look on the bright side. But I would say this, we were reporting on all of that extra money that was sitting there and how we were projecting that the Biden administration would spend it. That was their main objective in the last few months of the year, was to blow all that money at any pet project, any cause that they, was near and dear to their heart before Trump could get his hands on it. I appreciate that they're working on trying to cancel some of that and claw some of it back. But the Energy Secretary brings up a really important point, which is that is also money that could be used to invest in things that would help our energy infrastructure. Pipelines, for example, no matter how much oil we have underneath the ground, without the infrastructure to move it around the country properly, efficiently, safely, which we have proven that pipelines can do, it doesn't really do us very much good. And also, you're sitting here and looking at this storm that walloped the East Coast over the last few days. All of these people who were saying, let's spend this money on windmills and solar panels, because that's going to be able to give us the heat and energy we need when Mother Nature dumps 20 inches of snow in your backyard. But also this idea of, climate change in general. If we are experiencing such rapid amounts of global warming, then why would we be getting storms and icy temperatures?
Yeah, it's kind of cold.
Like
I miss
kind of cold.
I kind of miss global warming.
He was trolling since day one, man. Since the beginning. He said 705, 700, and he was trolling.
Particularly
what an idiot.
3 years.
This is the problem with people, right? People don't have money. People don't have lives, so they want to ruin everyone else's lives because they're fucking down bad.
But one of the things I notice is
every day, bro, because they be candle trading. That's crazy work.
So even the global
Mentally,
elite has backed off this climate obsession, green energy garbage, because they know it's counterproductive. It forces them to buy. It forces Europe to buy oil from Russia to finance.
You saw that, bro? That's why that guy was talking about 700, 705. Because he's just mental.
And I think this is key because you said Biden spent 15 times more than the last 15 years or whatever it was. Biden made a crack once, and I'm paraphrasing a little bit. He goes, basically said that Barack Obama, was jealous of him because he's been more transformational than Barack Obama, and this kind of proves it. And what does transformational mean in a lefty's eyes? Well, far more progressive. I mean, the Biden administration, let's face it, was almost as socialist as Zohran Mamdani in so many ways, whether it's culturally with the trans issue and DEI, or on the economy, just how much they spent. Remember, all those bills in his first year, 3 trillion, 4 trillion, 9 trillion. It was never ending. So
you guys all saw that, right? He literally said he's from the other channel. He was talking about the fucking weird ass dude over there that fucking fake scams everybody. He was talking about 700, 705. Ruin everybody. That's crazy.
About using the money, clawing that back. I believe it was Chris Wright who was saying.
What a sad fucking existence,
with nuclear, 3 Mile
There's a lot of
Island,
people
which benefits
like
the
you
US.
over there, man.
Well,
it also directly a lot of international numbers, it seems like, from Australia that try to do some weird shit.
It lends itself to scams so easily. I got a little place up in Cape Cod that I've had for about 25 years now. And Cape Cod was about to put in all of these windmills that the people didn't want. How? Because all these people that were getting subsidies from the government, these people who had contacts within the Biden administration, getting paid millions and millions of dollars, they managed to corrupt, I would say, enough local townships in that area to push through these measures to allow windmills. Of course, remember Obama, you mentioned Obama being part of this whole thing, being jealous of the Biden administration. Remember Solyndra? I mean, you know, and you find that all over Europe as well. Spain
you find out all over the world, man. A lot of jealousness from the fucking Ferrucci fake fucking channel.
So I'm
a lot of no jealous, just pure love from over here.
This administration is
because they don't give a fuck about none of the bullshit, scam ass Ferrucci shit that are going through bullshit over there.
Right?
You go cry your own life out, man. And nobody has the time or the energy for you.
On windmills and solar alone. We have to. Maybe we'll get into the nuclear as well. That could be a good thing, but we need fossil fuels because they are reliable.
I don't know why you need me to say that.
Also need
time
nuclear,
is too.
And I think, belatedly,
1 hour
squeeze.
squeeze.
Make some moves.
105 to 2.
Administrations. And by the way, another
go
thing
higher.
Europe.
We are above all the algo ranges. IWM is near the gap showing.
We need to be able to power our grid.
Because it's real baseload energy.
It is real energy, and it's the cleanest form of energy as long as it doesn't melt out.
SPX went higher into
Brian,
2 here.
Your quick
trap in, small cycle,
you know what? It's great to claw back loans, but that'll
no
get filed
cycle
in the
confirmation
courts, and some of this will get clawed back, and some of it won't. The
above
problem is when you spend
range,
it in the first place.
just
and
like
that's
earlier.
Congress. Thank goodness the Trump administration is going after this, but you got to get to the point where you stop putting the money out the door in the first place.
IWM is spiking since 1-2. We are at POC. Poll is closed. All right, let's see the SPX put to call ratio too while we are at it. No live streams out, no presidential streams, just 2.
NASDAQ holding on to a 100-point gain. Now this, China has been purging senior military leaders, and most recently, their top general has been pushed out. That general is accused of leaking sensitive information to the United States.
All I gotta say is fuck candle traders.
Is Xi still in control of the military in China?
Fuck out of here.
We don't know the answer to that, Stuart. Yes, Xi Jinping did purge General Zhang Yaoshao, the #1 uniformed officer, but we also pretty sure from what little evidence exists that Xi Jinping was not controlling the military last year when a number of his loyalists were purged. You know, media said, oh, you know, Xi Jinping purged his friends. No, he didn't. So really what we have is a chaotic situation. The rumors are right now fast and furious. People are saying that Zhang is no longer in custody. I still think he is, but the situation is fluid. And Zhang, who, by the way, was very popular in the military, you know, his removal is not going to be taken lying down by other officers.
Is Xi Jinping firmly in control of the Chinese government, or is it looking a little shaky right now?
I think he's shaky, and the reason, and there are a number of reasons for that, but one of them is that the Chinese economy is doing very poorly. It is not growing at the 5.0% pace that they reported for last year. You know, maybe it's 2.5%, 3%, maybe it's 0, maybe it's -1. Nobody knows, not even the Chinese themselves. But it's a very gloomy mood in China.
And those are the type of people that want to be in the WhatsApp group without even watching the shit. They're like, oh, life is good.
And that's part of the reasons why he's has had so many problems last year. Yes, he was able to reconsolidate his position by October or November, but this is a situation which changes by the week.
The Wall Street Journal writes that the United States trade partners have been, quote, stung by Trump and are now cozying up to China. I doubt you approve of that, Gordon. Is it accurate, though?
I think it's accurate because, you know, people can deal with almost anything if it's predictable. What they can't deal with is a changing situation. And Trump has made deals and unmade them. And that, I think, has convinced a number of leaders, including those in Canada and in Europe, that they need to come to terms with China. I'm not terribly worried about this in the long term because the Chinese economy is failing, and the American economy, by the way, Stuart, it's booming. Yeah. So eventually people will have to come to Trump.
The shit went higher from 1 to 2. Exactly, not 105.
Things are moving not in the direction that the United States needs them to be.
We always thought that China was racing ahead in so many respects. The Belt and Road campaign was taking support from the third world countries, that they would export all kinds of manufactured goods and overtake us. But they're not looking so hot these days, are they?
No. I mean, from a geopolitical viewpoint, China has suffered setback after setback since last May when Trump went to the 3 Gulf states. You know, and clearly Trump showed China is not a superpower when he took out Maduro, who was a Chinese proxy, and the Chinese couldn't do anything but whine. With the Chinese economy the way that it is, and that really has been the motor of the country's rise, with the motor of the country's rise sputtering, this is a very different situation, especially because Xi Jinping's policies have been accelerating the downward trend.
2 p.m. is doing something. QQQ is going bearish. IWM is trying to go gap fill hard.
To try to invade Taiwan, is he?
I never thought that he would for a lot of internal reasons, but he is likely to start a war someplace else. And the reason is, I think that he believes tensions,
why wouldn't the
high
gap
tensions
fill just
are
do
in
it
his
right now
interest
while it's
because
doing
that
this
prevents other leaders from challenging him. If something goes wrong in the Philippines,
bearish
as it
cycle
could
is
very
building.
well in the South China Sea or someplace else, then I don't think Xi Jinping can de-escalate. He can't act constructively, and war can spread really fast, not only among the victims, because we have military treaties with many of the victims, but also China's going to bring in Russia and North Korea. So this could be very well a region-wide conflict if something happens.
Gap filling right now on this.
Basically says to President Trump, you need to start deterring the Chinese because this is a volatile situation, it's an unpredictable situation, and it's an extremely dangerous one, more dangerous than we've seen in a long time.
Gordon Chang, thank you very much for being with us.
Get it over with.
I know we'll see you again real soon.
Come on. Get it over with. It's like a do its thing. Just trying so fucking hard. Time is 2.
We're back on Morning Trade Live. We'll get a closer look at the memory trade this afternoon when Seagate reports earnings. Check out how much these stocks have rallied just here in January. Do we need to remind you? Seagate, Western Digital and Micron are up more than 30% in 2026. But Sanders continues to be a rocket, up more than 100% in the last 3+ weeks. Wow, look at that. All right, let's go inside out on these memory stocks. Joining us now is Nitin Sacheti, founder and portfolio manager at Papyrus Capital. Hey, Nitin, thanks so much for joining me this morning.
Thank you for having me. I appreciate it.
We're going to get a first look at the memory space this afternoon. What are you expecting from Seagate?
I think it's tough. You know, I mean, I think when we originally bought the stocks, like you and I were talking earlier, there was, you know, the analysis was really looking at channel inventory and figuring out
chart doesn't even look bearish.
Decline when they were going to start growing again, and the stocks were trading at 7, 8, 9 times earnings, you know, 14 months ago when we started to get involved. Now it's really an AI trade for the most part, right? And now it's sort of determining the length of the sector. When I met with Western Digital and Seagate a few months ago, they talked about how now they have long-term agreements that give them price escalators out 12 to 24 months. So I think you probably have more stability of earnings, but we'll see, because even a small hiccup at this point
rejection is
will
building.
Sort of create more volatility in the stocks.
What would a hiccup be? Because, I mean, these guys have tight supply.
Yeah.
They've got the demand, as you say, the AI data centers are sucking the oxygen out of the room. They're raising prices. You've got the South Koreans talking about 70% in Q1. They're trying to build out capacity. They reckon that they've got another couple of years now to go as far as this situation, as far as the sustainability of these high prices. What would be a risk?
I mean, I think it's really just expectations are that high, right?
Right.
That's what's priced into the stocks here. So if, gross margins are slightly below kind of the low 40s as expected, if pricing is slightly below, if they haven't rolled out some of the some of the hammer drives in terms of qualifying cloud customers.
I think
the point is, I mean, we still own the stocks, but the expectations are very, very high. So I think that's what would cause that slight hiccup.
It feels like the theme that's emerging in this earnings season is one of, the demand is there, but just not being able to meet some of that demand. I mean, we've heard it from Intel, we've heard it from TSMC as well.
Yeah, and you hear it from the NAND and from the DRAM companies
too. That's right, and we're going to be hearing from Samsung and SK Hynix, two of the biggest players here, but internationally as well this week too. Can these companies justify the triple-digit gains we've seen last year?
I mean, I think it really, again, depends on the length of the cycle. And so we're really focused on kind of the data center builds and when those slow. I mean, you're not seeing any signs yet of that slowing happening. But, call it 2027, 2028, 2029. I think that's when at least we think that if OpenAI can't get to AGI, that's when they have a big hole to fill in terms of the funding gap. And that's when we start to see the data center build slowing. And so for us, I mean, at the end of the day, we're long short, we hedge. And so we are hedged sort of at the tail in terms of some of the very, very asymmetric, puts we own and so forth, and some of the data center builders.
Thank you so much for hitting the like button, folks. Please, if you have not already, smack the like button. Thank you so much.
From an inference perspective with the memory names, because every time you and I do ChatGPT queries,
thank you so much for those of you that show true love.
Right, it's got to get stored on hard disk drives and NAND.
The world is a very dangerous place, full of ratatouilles.
Decline. Some of these stocks that are pricing all of that in are going to start declining, and so that's why
trying
we're
to fucking fake love you and then fucking give you negativity and try to harm you. That is when you let God come through and let God do its thing to people that wish negative things upon anybody.
It's a bit of a no-brainer from that perspective.
They're just not focused on
Hey, look,
themselves.
Nitin, we're a bit guilty
Best
of
believe
kind of
God
chucking
knows.
evil in one bucket as far as when we talk about the memory stuff. But just talk us through which players are well positioned in this cycle as far as the pure plays versus some of the others? Because obviously we know the top tier guys are sort of the Microns, the Samsungs, the Hynixes, they've got the tie-ups with the Microsofts, they've got the tie-ups with NVIDIA. But just talk us through sort of the breakdown as to who is likely to be sort of emerging this year more as sort of the winners and the losers.
Because all this shit fucking ties into everything. You think trading's fucking just candles? Haha, wake up. Haha, wake up.
So the more scaling that gets done with the models, the more of that kind of DDR4 HBM DRAM you need, right? And so that's Micron, that's SK Hynix, that's Samsung, right? And then you have the next step, which is the NAND, right? And the NAND is the Samsung, SanDisk that you mentioned, and also Micron. And that's, where you're calling, inferred data up really fast for your ChatGPT queries. And then the third piece is really kind of the cold storage, which is the hard disk drives, right? That's the Western Digitals and the Seagates. And so that's where when we do more and more of these queries, they get stored, right? They're not really being from there, quickly the way they are on the NAND, but that's the supply chain, right? And so we think through that, and we think for inference purposes, right, you're going to need all three of those subsegments. So I think they're all sort of going to continue growing in tandem. I think you have 3 players in DRAM that I mentioned, and that makes the barriers to entry a lot higher.
Right.
You have 2 players in hard disk drives that make the barriers to entry higher. In NAND, you have a lot of players, and then you also have more Chinese competition.
Correct.
So we've seen some isolation or insulation based on the Chinese not being allowed to sell into Western markets.
Yeah.
And so the question is, I think that supply side is your big swing factor on pricing for NAND.
Gotcha. Nitin, fascinating chat. Thanks so much for the setup ahead of Seagate's earnings. Really appreciate it. That is Nitin Sacheti, founder and portfolio manager at Papyrus Capital. Let's trade it now with Tom White, host of Fast Market. We've got an example trade for Seagate this morning. As Nitin just said there, the bar's high. Tom, what are you seeing? What's the approach?
You could say that the bar's high as the stock's hitting all more record levels today. Overbought on a technical basis. The RSI is above the 70 level at this point. And if you take a look at what the option market's pricing in, about $32 either way, about 8.5% in either direction on this one. But the bar is high. Remember, they're sold out through 2026 as far as their chips goes.
Time is
so
2:10.
Will this be another one of those Intel type of moments where, hey, they had demand, but the production's just not there? So I looked at a strategy, takes advantage of maybe some consolidation, maybe a
somebody
slight
bots in
pullback,
chat, man.
giving yourself
Go take a one-day break.
Go
Think about what you're trying to do with your 200 followers on your channel. No offense, no hate, but like, dude, why does it seem like everyone that is hateful on YouTube is some people with some sort of followers trying to bait people?
So a short $10
like, why are you being so negative, man? Go make something of your life.
I've got 280 credit
There's
on here.
no need to watch shit you don't want to watch.
So collect a little bit
There's
more.
no need to
But
hate.
that takes your break even if you collect
Go do
280
your
up to
thing.
402.80
Much love, brother.
to the upside. That's over 6%
That's really your
above
first
the current
comment,
share
though?
price. So nearly that one standard deviation move that the option market's pricing in. You got a probability of finishing out of the money of close to 70% on that short 400 strike that you're selling in this strategy. I think one of the keys with these high-priced stocks, big moves expected, staying risk-defined on this. But break even at 402.80 to the upside if you think the stock's going to at least consolidate, go lower, or hey,
I don't even know if you guys
seen
the shit just posted.
Just want to remain below
fucking Insta removed.
All right. Well,
IWM gap filled.
Up 6% into this report card later this
gap
afternoon.
has
Tom,
filled.
thanks so much for the example trade for us today. As we look across these major indices today, we are pretty mixed off the back of a very diverse earnings morning.
Time is 2:15. They're using the IWM gap, right? 1, 2, 3, 4 made going down to burn all 0 DT puts with this bots up almost. Right, if you didn't see what he posted, good. Oh, weird. Weird fucking thing to say.
Tech layoffs are revving up again. Pinterest shares are down nearly 10%
Market
today after the company announced restructuring that will eliminate 15%
what is this pattern?
Of its jobs.
Little dragon
Meanwhile,
hand,
Amazon
little
is
flag,
reportedly set
I don't
to
know,
cut
bull
another
flag,
14,000
QQQ at the roof
Even
flag,
AI
some
startups are making
flag.
changes, with OpenAI Sam Altman saying the company plans to dramatically slow
QQQ has
down
never
hiring.
slowed
Is
down
this a
today.
tech
Just
story, Deirdre, or is
continuous
this in
rejection
back
and
to our
pop up
favorite,
every single time.
ChatGPT
Did it 1,
versus-
2,
now it's
3,
Claude.
4,
Now it's
5,
all about
6,
Claude.
7 times
is this
now.
just a
8
cute
times
way for
almost
him
into
to
the day.
disguise the fact that they are laying people off?
You know, that's a really good
Look at the
question.
volume
Is
on
this like an
QQQ too.
OpenAI thing, or is this a
Came in
broader thing? Well,
bullish,
I'm going to argue that
chopped
this
up
is
all day
both,
up north.
but it also tells us something really interesting about, how we should be looking at AI at the moment.
So the shift is interesting for OpenAI because, of course, it's not exactly known for its financial discipline. There's that. In a town hall, Sam Altman, he warned employees that aggressive hiring can actually be a signal of poor planning and a setup for layoffs once AI starts doing more of the work, i.e. what Pinterest and Amazon are doing right now. Now, this gets at a broader shift that investors should be watching closely, especially as big tech earnings gets underway. The next phase of AI, it's not just about expansion, it's about leveraging what you already have. So, for example, if Capex continues to climb, investors should be asking how targeted the build-out is, what they're doing with what they've already built. They should also scrutinize utilization rates at those data centers and look for productivity metrics like revenue or free cash flow per employee rather than just raw headcount.
Can't even make
In other
this shit
words,
up.
who's getting the most out of what they've already spent or workforces that they have already cut? Anthropic CEO Dario Amodei, his essay that was published yesterday, it had a very practical point underneath the warnings, which I know got most of the attention, and it's this: as AI systems mature, the constraint shifts from building faster to managing and deploying what already exists. So that framework, that lines up with what Sam Altman is signaling here with hiring, and it's one that investors absolutely should be paying attention to over the next few weeks when we get big tech earnings. So, Kelly, it's a little bit of both. OpenAI needs to show some discipline, but AI as a whole probably needs to show some discipline, right? Show how they're leveraging what has already been built out with, billions, hundreds of billions of dollars. Yeah.
Did that resonate with what you're seeing on the Robinhood platform, or is that completely different than what you're seeing on the platform?
We haven't actually seen a ton of international take-up, at least here in the U.S. You've seen a little bit in the Chinese tech aspect, like in names like Baba, but largely it's been a very U.S.-focused, AI and lots of other investing themes focused for over the last year.
Why do you think that is?
I think our customers take sort of a long-term view, and they like to invest in things that they know and understand, really no different than, past generations. And I think they feel that they know and understand, tech and can understand kind of the long-term secular growth trends that can come from parts of tech, and are willing to take that risk, even if it's in the space like quantum computing, which is still, in sort of discovery
Trump is live at 4.
Do you think that has to do with some of who are actually on your platform? In other words, the demographics that I think, I don't know.
Then maybe they've only seen U.S. equities outperform, right? Like
exactly.
That's not the world that you lived in for much of what you've done.
Right. It could be absolutely part of it. I mean, it's the same kind of thing as like, has a generation ever seen value outperform growth?
Exactly.
Here in the U.S.
It's so funny that you say that. I on Friday was at a big dinner and was talking with someone who has started companies, sold them, now investing their own money, and just talked about some of the big wealth managers who come to him and say, you should be buying the market, and paying me a fee for doing that, and so on and so forth. And he's like, you know what? I haven't bought the market. I've actually doubled down on those big tech names and have outperformed the market, even though if you think about the last few years, people keep saying, oh, back off some of these. It's time to diversify. You know what? If you didn't, you did really well. And especially if you played on those Mag 7 names.
I do think it's shifting now. Like I'm sort of a student of looking at the market and saying that once you had sort of a post-COVID world, I do think the fact that we have interest rates has shifted what is possible and can outperform. And there was, COVID kind of brought tech right into front and center and the need for it. But I think as more time goes on, and especially with some of the incentives from the One Big Beautiful Bill and other, that I think it's possible that you can start to see other things do well.
And yet the net buys on your platform, right? Meta, Microsoft, I'm thinking about, we're going to have for the Mag 7 reporting this week alone.
Crazy IWM 1 minute gap fill.
NVIDIA, AMD, and CoreWeave, which is interesting because CoreWeave rallying in today's session, but that's what you've seen in
thanks to an NVIDIA investment.
Right.
Yeah, and that's over the last week, so it does shift. What was also interesting over the last week is that I saw, and you kind of saw
this might be some CPI candle channeling
the X platform, but you saw below those top names a number of software companies starting to come into the net buy side.
I don't think that's a fun coincidence.
So taking advantage of the pretty deep sell-off in that space. And then more recently, just like in the last day, we've seen some Netflix buying as well.
Was that because of the Alex Honnold stunt over the weekend? Just 30 seconds?
Might be.
Okay.
Obviously there's a lot of drama with Netflix right now.
Yeah, there is. It's been beat up ever since the announcement that.
Let's see this shit on IWM again. Six, 24, 14. That's crazy. Every 5-15 minutes coming in, popping up, coming, chopping down. This is top of from a couple of weeks out, a week or two out. At new ranges on SPY and QQQ, creating some sort of a channel up here. Just creating some sort of a cycle up here, I mean.
Inez, I want to start with you because what we're witnessing in the metals market it's stunning. I think that's the word I want to use here. Last week it was a rally and we were watching the buying activity emerge. It's just flat out stunning right now.
Damn.
It is stunning. And Robin Brooks of the Brookings Institute called it breathtaking and profoundly scary what we're seeing with the precious metals market. Look, I think in your opening comments, I mean, you laid some of this out. Geopolitical issues, you've got resource stockpiling, there's the debasement trade that is happening is something that has been accelerating since last year. And if you take a look at what gold at 5,000, I mean, Brooks was from Brookings Institution was talking about this is much bigger. The gold rally is part of something much bigger because you are seeing all the metals which are rallying, and you are taking a look at now a dollar that has started to decline because it was consolidating in the second half of last year. And so this debasement trade is expected to even now accelerate it with the dollar declining because that gives more purchasing power to non-dollar buyers. But so much of this has to do also with the fact that you are seeing government debt around the world, and the markets are increasingly scared that governments will have to inflate away their debt. So there's a myriad of issues that are going on with this entire bubble that we're seeing in the precious metals market. And yes, yesterday you saw silver that was at 115 an ounce at one point. And you are seeing, of course, a silver squeeze to some extent. And you are also looking at, you have strategists that are saying, watch out, because you are going to be seeing this going lower at some point. But nobody wants to call a top yet because it's very hard to call a top at these prices.
Art, hot potato to you. You want to call a top on precious metals?
I don't. You know, what's interesting here, Brian, is that the gold breakout happened 2.5 years ago, and that was after breaking a 45-year inflation-adjusted base. So momentum players started to notice that, not surprisingly, 2.5 years ago or thereabouts, the SWIFT system froze assets because of Russia's incursion into Ukraine. And then central banks and governments and oligarchs started saying, well, if they can freeze these assets, perhaps we need to have more hard assets on our balance sheet. So central banks, for example, went from buying $7 17 tons a month to 25 tons a month as of last week. So central banks are a big driver here, and that's not slowing down. But to Inez's point, neither is geopolitical uncertainty and fears of inflation. So I think all of the drivers are still intact. We could certainly have some pullbacks here, but I don't think we're going back to anywhere close to what last year's lows were. And I think the momentum players and certainly the fundamentals continue to move the precious metals higher.
Art, humor me here. Quick short story. A couple days ago, I went to get my eyes checked, needed some contacts, totally ran out. I just forgot that I even needed them. My eye doctor said, Brian, I sold my gold 3 or 4 years ago, and I'm just out. They didn't want to get back in, but I know I'm going to get this question from people. Are like, is it too late to get in? How would you, if you were not invested in gold or silver right now, what is a rational way to go about it?
Well, 3 things to answer that question. First and foremost, he sold his gold. He might have held the precious metal. ETFs are a perfect way to play this. And certainly expect some pullback in both gold and silver and use that as a buying opportunity. So the gold-silver ratio, which is about 1,000 years old, is a ratio of gold to silver that sits somewhere between 50 and 80, right? And silver was out of whack. That's why we've had the explosive move. Now, the gold-silver ratio is above 90, so silver's probably gotten ahead of itself, and that may be one of the precious metals that has the first pullback. I think the fundamental drivers are still here, but I would use pullbacks as an entry point, and I would certainly use ETFs. You don't need to buy the precious metal and store it in your basement in a safe.
Something is a brewing. It's a pullback on IWM or something to brewing. Market is HOD trying to break. A brewing. Candles are showing that for sure. In the 3/3 of the top of IWM though, 130. Just like I was at the bottom. It is now playing with fire on top of the CPI candle. Something is brewing. What is the word brewing? It means candle traders are gone. Most of the like hitters are here. And it means it's cooking. That's what it really means. Market waiting for this presidential live stream or something. It needs something. It's just slow. Tesla, Meta, Microsoft tomorrow. Let's go look. So will you be watching the FOMC meeting today? Will you be?
Let's bring in Kevin. Okay, let's get into some of the movers in the healthcare space. You've got United Health out with its quarterly report card. It didn't help the picture. It was already under pressure off of this move with regard to Medicare payments. You got United Health down 16% in the pre-market, Humana down 16%, CVS Health down double digits.
What is this 1 p.m.
Take us through what's happening here and then some of your takeaways from United Health's results.
Yeah, so yesterday, actually, before the earnings announcement for United Health, we actually did see a proposal for the government to increase the Medicare Advantage payments premiums by 0.9%. Now, that's well short of the street's expectations of between 3% and 6%, and this could actually have an impact when it comes to margins for all of those healthcare insurance providers that you were talking about. As prices continue to move to the upside when it comes to providing care, their ability to actually hold profitability is going to be stretched and challenged. You could also make the case that maybe the timing of that announcement could also kind of lead to maybe a signal for a lot of these healthcare companies that are going to be reporting earnings, especially when you're looking at United Health. Now, they actually did report earnings today. Revenue came in at $113.2 billion. Slight miss from the street's expectations. The adjusted earnings per share, for the most part, came in line, came in at $2.11. Street was looking for around $2.10 here, but their guidance moving forward did come up a little bit light. One thing to kind of keep in mind here, their medical care ratio, basically this is just the amount of premiums that they are paying out in order to cover the medical costs or quality improvement actions for their customers here. That actually hit about 89.1% for the quarter. So they continue to see that inch to the upside. That also then once again has an impact when it comes to their profitability moving forward. Now their guidance once again came up a little bit short. Their revenue guide also coming up a little bit short here, and they're just a little bit cautious as far as the dynamics of this business just in general, and they are divesting a lot of their business segments away from their company here and trying to reduce the amount of members that they have, really focusing on the profitable ones. So this has been a headwind for the space for a fairly long time. You did see a decent little bid being brought in to the healthcare companies or health insurance companies over the last 2 months or so, but now we are seeing that re-rating back to the downside, as this will play out over the next couple of months, especially in the political sphere, which once again they're kind of in the crosshairs of.
Yeah, and then there was the view that this year the healthcare space was going to look better, was going to perform better, and it's a blow early in the year for this space. And then when you look at United Health's result, it just doesn't look like there's a lot to help things. What's your thought?
Yeah, I would agree. I mean, especially with the cancellation of the ACA tax credits that are being provided for a significant amount of Americans here, you are seeing a readjustment where consumers are still buying health insurance, but their deductibles are a lot higher. And so you could actually see a situation where the system actually gets a little bit strained. So we are seeing a fundamental shift here as to how care is being provided, how it's being paid. And this is going to be a headwind for a lot of these health insurance companies, at least for now. Once again, we could actually see something shift. If you have something in the budget
people
deal,
are a lot smarter than that.
Maybe some of the sentiment around
when people
the
say,
insurance
"Oh, I'm back," and they join the WhatsApp group,
a lot of this has been kind of it's now being kind of priced in.
There's other ways to find out that you come in at 7 p.m. because you watch the other stream and you come back on here.
Worse if they're going to start peeling off a lot of their customers and setting a little bit more of a higher bar when it comes to the quality of care and the premiums that they're going to provide their customers as well. So a really tough shift here. But if you're looking at the healthcare industry as a whole, you're seeing a bifurcation where the health insurance companies pulling that down, but when you're looking at the pharmaceutical companies like Eli Lilly, obviously they've been doing actually a pretty decent job kind of pushing that health care sector to the upside here. So a little bit more of a gyration on an industry basis when you're looking at the sector.
Because when the candles align,
another earnings that you're across, RTX, formerly known as Raytheon, looks like it was a beat on the bottom line. Take us through some of your takeaways here.
Trading at the most risky
Raytheon continues to see, or RTX, if you will, continues to see strong inflows, not only top line growth because of new orders coming in, but also when you're looking at their profitability. Their adjusted earnings per share came in at $1.55. She was looking for around $1.47 here, in the adjusted earnings per share, or the adjusted sales, if you will, came in at $24.24 billion. She was looking for $22.73 billion. They are still seeing a very big backlog as well. That came in at $268 billion, and their guidance actually was in line for the street's expectations when you're looking at EPS. Their sales guidance slightly above the street's expectations here. It's because you are still seeing this uptick in the F-135 engines. This is basically the engines for the F-35 fighter jet. We have seen a lot of those deals actually being made over the last 6 months, 12 months or so.
$2 up
continues
since
to grow. And then also the fact that we are seeing a short shortage in engine products just in general. So the servicing of those engines, which is what they are also providing, is a higher margin business that continues to thrive and move to the upside here. So you are seeing the shares moving a little bit higher after this earnings announcement. And once again, you're seeing a lot of tailwinds, not only U.S. domestic spending, but also international spending as kind of these geopolitical risk events continue to evolve on pretty much a day-by-day basis.
Okay, and then I want to widen out. You talked about things under the surface and talk about the latest on the geopolitical, well, the trade and tariff landscape, I should say. You've got news of the EU and India striking an accord there, and it feels like there's just this kind of shift in reshaping the trade landscape. I checked True Social to see if President Trump has posted anything yet about that. So far, nothing about that.
FOMC tomorrow.
And then you also have the U.S. Raising tariffs on South Korea. Tell us what you're watching here across the board.
Yeah, that's where you start seeing maybe this tariff news starting to hit the headlines here a tad bit. Maybe we see a reacceleration of these tariff wars taking place here. So the EU and India has come to an agreement here. The agreement is to try to actually have zero tariffs over time for most items here, except for agricultural products as well as some of the autos coming from both of those countries here. So this is actually a very historic milestone, not only for the EU, but also for India. We have not received an official response from the White House or President Trump at this point in time, but maybe some of that rhetoric gets a little bit aggressive, which once again could lead to a little bit of volatility when it comes to the equity markets as a whole. A lot of these countries are looking elsewhere at this point, and it doesn't mean that they're leaving the United States or do not want to do business with the United States, but obviously they're kind of stuck in a rock and a hard place, and a lot of deals are being done. Even China and Canada are trying to ink a deal. It seems like Canada's kind of on the fence right now, based on some of the threats that we've seen from President Trump over the weekend. So a lot happening in that space. Any type of retaliation from the United States probably could lead to, once again, a little bit greater volatility in the broader equity market here in the United States. If you look at South Korea, though, we did see the increase or the threat of the increase of tariffs. Their actual stock index, if you will, actually still moved to the upside. It was up over 1% overnight. So a lot of these markets, the international markets, are not really taking any of these threats that seriously, and I think that's being reflected in relative strength for these international markets compared to the United States. They've been outperforming us.
There's a rejection of Bruin. Bears are trying.
Taking it off. All right, really quickly, let's get your levels on the S&P 500 today.
Yeah, to the upside 69.90, to the downside 69.40. Once again, keep your eye on vol.
But
all right, thank you, KG. That's Kevin Green, our senior markets correspondent.
235. They could pull back from this top of the CPI candle and IW and be like, oh, higher time frame, stable, or they could break up and clear the divergence.
You are audit of Apollo. Apollo seeing a rare setback, taking a lot. You are looking at a screen, let's talk about it, of Apollo. Apollo seeing a rare setback, taking a loss on a portion of $170 million asset-backed financing for an Amazon brand aggregator perch that was written off to zero. That loss represents about $500 million commitment. Joining us now is Bloomberg senior reporter Silas Brown. Silas, ultimately, these are the kind of figures that I guess are like a drop in the bucket for Apollo. So what's more important, the loss itself or the fact it was a loss for ABF, neutral. Something that has been billed is very safe?
Yeah, I think
that's you, right? VC.
I mean, I think the way that I see this story is that it's a kind of shot across the bows
VC
for
Ninja,
an area of private credit that we're seeing as
brother.
Kind of great.
Thank you.
Sort of success story and this kind of like great kind of area of scale for the market, and crucially a way for insurance companies to put their balance sheet to work in the industry.
That easy, you know what I mean?
And I think this
Human
is a kind
being
of rare
actually
blemish
talkative,
and
actually active, actually trying to say some shit that's really relevant.
The way that asset-backed credit is structured normally really mitigates against the risk of loss. So as you say, I think it's a kind of important, it's an important sign.
It ain't that hard, you know what I mean? Like it's actually just logical, reasonable things.
In exactly the way that you're talking about, Silas, how does it record such a loss when it is built in a way to try to mitigate these risks?
No hate against channel hoppers or no. I'm not even trying to say channel hoppers and none of that. Like, bro, it's just like you gotta respect the environment because the environment is so serious. Market is actually so serious at all times. It's like sure things are funny. Sure things could be great. Sure all times could be great, but you have to realize there's a good and a bad to this bitch, and you don't want to be in the bad. The bad sucks. The bad does not feel great. That actually feels fucking absolutely terrible. So,
by structuring it to make it kind of more senior.
To realize the bad and the struggle and to be like, oh, I can understand the bad and let me try to dig my way out and then feel the good. That's completely different. But I mean, to be like, oh, this shit is great, good, all jokes all around.
These types of
green, grand, like it's actually
as I say, I mean, it's kind of
nothing
a
serious
thing,
about that.
And as this,
nothing actually
as
serious
this story
about that. It's just literally just candle bullshit.
You know, it's a kind of warning shot for the industry.
Any dog, any neighbor, you can train your dog to give you a bone on green candles. You can train your cat to give you a kitty cat treat on red candles.
It struck me as a low price,
all
considering
do that.
the assets under management.
It's just,
at
we got to train the dog
Marathon,
and the cat. That's all it is.
Well over $20 billion, and the price tag of $1.2 billion. With a third of it apparently going to Blackstone investors, seems like a real discount. Why?
That's so interesting that you say that because, by the way, I should caveat this point by saying I am by no means in any way an M&A analyst. But what I would say is it's interesting you say that because I've had actually people saying it was kind of overvalued and people saying it was undervalued, and then some people saying that it was kind of just about right, which I suppose is kind of the nature of things. I would say, look, I mean, I think Marathon has been fortunate in that they've kind of found themselves in this position of strength as a somewhat independent. I mean, I know that Blackstone had a stake, you know, kind of arguably a global manager, definitely strong penetration in the US to these kind of like buzzy forms of leverage credit. And so, yeah, I mean, in this kind of quest of the larger private capital managers to kind of scale and develop these multi-product offering machines like Blackstone and Apollo, but also CVC notably, I thought Marathon and Bruce Richards and, you know, and the kind of team there have been beneficiaries of that trajectory.
Long-term, medium-term puts are in danger because of the divergence at the top.
72 hours to decide this rally as mega cap earnings, the Fed decision, and potential government shutdown hang over this market. We'll discuss and debate with the investment committee, and joining me for the hour today, Joe Terry. 72 hours to decide this rally as mega cap earnings, the Fed decision, and potential government shutdown hang over this market. We'll discuss and debate with the investment committee, and joining me for the hour today, Joe Terranova, Stephanie Link, Shannon Sakosha, and Jason Snipe. We will go to the markets. The Dow is red, as you see. Everything else, though, is green, led by the NASDAQ as we get ever closer to those mega cap earnings that will begin tomorrow. The S&P hitting a fresh all-time high today. Gold and especially silver are reversing. Silver was down 5% earlier. We should note that every day because the moves there have been just astounding. And it is down near 7%. You have another tariff threat from the president. You have the Fed decision tomorrow. You've got Microsoft, Meta, and Tesla tomorrow as well. Apple on Thursday. And then the possibility of that shutdown coming on Friday. What's on your mind as you watch these markets today?
Well, there goes the broadening narrative. The S&P equal weight is actually down on the day. So we're back to the environment in which it's the mega caps, it's semiconductors, it's Lam Research, it's KLA Corp, it's Applied Materials making new 52-week highs. It is Apple making a nice recovery, Microsoft making a nice recovery. So once again, it's all about tech. And you're right, this is a critical week. And over the next 10 days, we're not just going to hear this week, but we're also going to hear next week from Alphabet and from Amazon. And the key is the spending. The spending is the key. And the spending has never really been the question. What really is the question is when the return.
Overspending.
No. It's when does the return on spending actually happen? If you think about it, the operating cash flow for Amazon, they spend 90% of that operating cash flow on building out data centers in AWS. The
Amazon
return on that spending, that's really the question as you begin to look forward. We're going to hear from all of these companies over the next 10 days about it.
What's interesting, Steph, is that many of these names are
running into the prints, which does something to the bar. Maybe it raises it. I'm not sure because the stocks hadn't performed all that well going into the numbers. However, if you look at the 1 week performance from many of these, Meta is up 11% over 1 week. You own that. Nvidia is up 6.5%. Apple's up 5%. This is one of the few periods, really recently.
Meta up 10% in 1 week. Nvidia up 6.48% in 1 week. Apple up 5.8%. Google up 4.18%. Microsoft up 5.65%. Amazon up 4.75%. Damn. For sure. Did they cook this bitch? Within a week's time. Every single bear ripped up. Wednesday into Wednesday tomorrow.
Where you can look over any kind of short period of time and say, wow, they're all up. Because they haven't been trading all together as a monolith. But they have over the last week trying to potentially anticipate what I think the street thinks is going to be a good reporting from these companies.
I think the reports are all going to be good, but to your point on the performance of these stocks, yes, they've had a good week or two, but they are all, except Google, they are all down from their highs. Meta is still down 15% from its highs. Microsoft down 12%, Apple down 10%. I actually like the setup of that when they're down, and yet they are starting to see a recovery. I do think that Joe is right about the spend. I think the spend is going higher, but to me, the most important thing is free cash flow after the spend. And all of these companies are going to still have considerable free cash flow. So Meta is going to have $16 billion this year. Amazon is going to have $41 billion in free cash flow this year. Microsoft at $77 billion, et cetera, et cetera. So they're all going to still have free cash flow and flexibility to continue to invest as they should, given the AI revolution. As a whole, earnings are running at about 9% so far.
They are. That's ahead of expectations.
And that is ahead. And I actually think you're on track to do something like 12, 13%. There are some aggressive targets, Scott, out there of 16, 17%. I'm not there. I'm in 12, 13 in a 3.5%, 4% GDP world. And it's not just revenues. It's not just earnings. It's not just revenues. It's also margins, which I pay very close attention to.
Yeah.
And I think the economic data still is very supportive of all of this. And so you want to pick your spots. I don't think it's just going to be Mag 7 that take over. I think I can name a whole bunch of companies that reported in the past week that are down because earnings is stupid season.
No, I'm glad you raised that point because I was literally going to go there next.
Yeah.
That Wolf points out today what they call punishing price action to start earnings season. That even very solid results, these are their words, the share prices of companies beating on the top and the bottom lines have witnessed negative relative price action after reporting. They do not think it's sustainable, though. They expect double beats to exhibit positive price action as more companies report.
Every single bounce is making people think of the HOD divergence at the roof. That's what I'm thinking about, too.
And that
I feel like they're going to pull back. I thought IWM was going to pull back here, to be honest, but I don't know anymore. This shit is bouncing at 246, so I can't even fucking say clearly this shit is something different.
That investors are looking at. But I would agree with Wolf in that paradigm cannot persist. In our view. And so we have 81% of companies that have beat on earnings so far for the S&P 500.
We're at the roof.
That's a pretty darn good number.
So maybe the bears are in danger here. The divergence at the HOD.
These earnings releases that are likely to come in the next few days. In fact, there's really no reason that given the broad strength, there's no reason for the Mag 7 to upset that trend. I mean, there's absolutely no reason that they cannot continue to grow their earnings in this type of environment. I think more importantly, though, Scott, there's some of these exogenous weights on the market right now. There's some concern about
cycles
a potential shutdown.
And these
There's
candle formations coming in so spiky, all-time highs.
And one could say that as we get further into earnings season, you're going to see companies in, for instance, in consumer. I actually think that's going to be really important from an inflection point perspective. The consumer confidence data today was pretty weak. And so I would say if we can get through earnings for tech and then we have consumer on the horizon, I actually think that's where you could start to see some of this double beat really start to catalyze a stronger move, to Joe's point earlier, in the broadening direction.
I'll just come back to you for a moment when you say, the question is not about the mega cap companies
Pure
growing their
speculating
earnings.
though, bro.
It's not about that at all. It's about the growth rate.
Right.
People aren't worried about them growing
no
their
idea
earnings.
what they're cooking on Tesla.
It's can you still grow your earnings at 50% or whatever?
Get Tesla's back from 420, 430s to 450s on earnings. We'll see tomorrow.
And the multiple.
Before even earnings is going to get volatile as shit overnight.
That is what investors are grappling with as they look at the breakdown of the market, the broadening of it. Questions about, well, can tech still lead the way if those growth rates
because I say this shit because during Tesla deliveries and Tesla earnings 2 months ago, they did the exact opposite when everyone was thinking it. They burnt the fuck out of the calls and they burnt the fuck out of the puts in 2 days. Palantir in that day too. Because it was Tesla and Palantir earnings in 2 days.
The narrative from these hyperscalers in particular, they are still willing to put forth the spending.
I literally saw the contract go from $2,000 to $5 to $4, literally $2,000 both ways on puts and calls. So this is why I say, you know, we have no fucking idea what they're cooking on Tesla. This shit is Cathy Wood's territory, and Cathy Wood's territory alone.
Most importantly, though, however, that delta is compressing.
Do you know what's going on in Tesla? I don't. I have no fucking clue. This is earnings time too, so what happened last earnings? Last delivery numbers. This was delivery numbers and into earnings. Look at what they did on earnings. They dropped out crazy and then pumped it on up on earnings. Like they destroyed everybody.
This week
is
the
earnings,
the Fed decision.
Since then, we've been playing on 435, 439. Literally for 2 months.
The news conference could be interesting, not only on Fed direction, but Fed investigation. So that's going to be hanging over the market a little bit.
Crazy shit
we're looking
to say.
towards Friday. We're going to get another.
I think they're going to go bearish on Tesla.
Market's sort of yawning
earnings
a bit at that.
Yep.
What's on your top of your mind?
Holy shit, they're already bearish though. That's the crazy part. They get more bears involved.
It's definitely mega cap tech, right? We're hearing from Apple, Meta, Microsoft, and Tesla.
All techs are all pumped up already.
To Joe's point, Capex is a very important
piece
for me.
Meta up 10%, Nvidia up 6%, Apple up 6%, Google up 4.2%, Microsoft up 5.6%, Amazon up 5%.
I think the return on this Capex is going to be critical. Free cash flow, again, what Steph mentioned, I think is important as well. Margin expansion. What does that story look like? We need to see these companies continue to grow. I think the other concern for me a little bit last year was the debt market, right? Meta, Amazon, the rest, Oracle as well, and starting to dip into the debt market to raise funds to do. To continue to build and the innovation that we're seeing. So I think that's what's really on my mind. We'll see from many of these correlation. I think Amazon will be solid. I think Microsoft hasn't traded well. It'll be interesting to see what goes on with Azure, and also I think there's some interesting thoughts playing out in the market in terms of Microsoft having a legacy product, and what does the real integration story look like? I think it's been a story of AI first names really starting to continuing to perform. So I'm really anxious to see what Microsoft reports.
Yep, they're anxious to see what Microsoft reports now. Now that we are at all-time highs. How is this?
Ed, why the change in strategy?
Yeah, closing and shuttering what was already a diminishing footprint, right? There are only 14 Go stores. We have one of them, or had one of them here in SF, and 58 Amazon Fresh stores. And as you point out, that real estate gets converted to Whole Foods. This is not Amazon saying that they are done.
Help us assess where price could be headed next, I'd like to welcome in Ben McMillan, CIO of IDX Digital Assets. Ben, of course, gold just broke above 5,000 per troy ounce for the first time. What really do you see as the single most important driver behind this historic move? If there could be one single driver, I think there's a lot of things to factor in here, of course.
Yeah, I mean, the big one has been central bank buying. So if we look back to kind of pre-COVID levels, central banks in general, which historically have been kind of the largest holders of gold, they were buying about 500 tons a year of gold. Fast forward to right after COVID, which also, by the way, coincided with historic money printing by the United States, and you saw central banks ramp up those purchases to about 1,000 tons. So basically doubled, and it's been that ever since COVID. So for years, central banks have been basically buying twice as much gold as they ever have. And that was kind of the first part of the dollar debasement trade, which of course now is in the investing zeitgeist, and retail has moved into that. So to kind of follow back to those numbers, if we look at gold ETF inflows, they hit record highs last year. And so they're now close to eclipsing central bank buying. So, back to your original point about, what's driving this, it started with the central banks a couple of years ago. It really ramped up last year with, retail and broader investors, particularly in the US, starting to get in on the debasement trade. And that's why a lot of people are saying, this isn't necessarily a speculative rally. This is a resetting of the dollar relative to gold.
Ben, Chief Investment Officer, obviously you're thinking about where this fits into a portfolio if it does, but I'm sure depending on the time, conversations around gold with clients can be tough because just anecdotally, you can look at it on a chart though as well. This asset class tends to be pretty dormant, kind of just like a doorstop until it isn't. And we're seeing what it looks like when it isn't now. That said, it still becomes one of those questions, and I'm sure it becomes more of a question, when do I get in? Do I sell it? Where does it fit in a portfolio? How much? How do you have those conversations?
You hit the nail on the head. That's an excellent point. And this is something, those were conversations we were having this time last year with clients, or even the year prior. We've been structurally bullish on gold, largely because of central bank buying, for a couple of years now. And clients said exactly what you were saying. They said, yeah, but look at it. It hasn't done anything for 10 years. It's dead money, doesn't earn a yield, all of the kind of traditional knocks on gold. And now, of course, everybody's piling in. You're seeing the big banks kind of, readjust, allocations within the 60-40 portfolio, upwards of 20% in some cases. So what does that mean? What does the outlook look now? Like I said, I think it's important. We've been telling clients, listen, now is not the time to necessarily load up the boat and chase returns, but you do probably need to have a structurally higher allocation to gold. Most folks we talk to, it's between 0 and 5%. There's very few people coming into this year that, we're really buying gold. And, yes, it's had a historic run. It's not likely, 2026 is going to look like 2025 in terms of returns. But the outlook still looks pretty good. And again, if we go back to kind of structural fundamentals at what's at play here, it's dollar debasement. G7 debt levels are just simply too high. We're seeing Japan have their reckoning. You're seeing central banks, think about who's the driver behind this. It's central banks. They're not speculative traders. They are structurally selling treasuries.
Just because a candle's turned.
That's effectively coming off the marketplace for a long time. You've got retail buying increasing, so we continue to be structurally bullish on gold. It depends on the investor and the risk tolerance, but it's definitely something that we're recommending at least 5%, upwards of 10-15%, depending on the investor in their portfolio.
Market deciding whether it wants to fucking dump
wanted to get your thoughts on that. I mean, where do you think that stands as far as being in? I mean, like the early innings, and perhaps why are you seeing it right now in this current environment?
So that's, I'm not going to bore you with a 60-minute TED talk, but we are in the early innings of the debasement trade, and there's a couple of structural things there. The simplest is just supply and demand. The United States has, I think the number is 80% of all US dollars have been printed since 2020. That's Econ 101. You've got too many dollars in the system. That's why we're seeing inflation. That's why we're seeing a rush to hard assets. I think the other thing too is elevated geopolitical risk. Historically, U.S. Treasuries have been the beneficiary of, geopolitical, flashpoints. And, with Russia and Ukraine, we started seeing much more of that move towards gold, crypto to a lesser degree. I think interestingly too, with the uprising in Iran a couple of weeks ago, the Treasuries didn't move at all. It was all gold that got a bid from that. So I think increasingly too, the world is looking at it and saying, you know what, U.S. Treasuries is no longer my flight to safety asset. It's gold. And so I think, again, this is, and I've said this, for well over a year now, I think we are at the beginning of the end of, the dollar as the global reserve. And I think it's going to move to be gold.
Yeah, and I think that has definitely been evidenced by some of the performance and just the recent geopolitical really turbulence we've seen weigh in on these markets with gold and silver, actually, to also mention. I mean, just really seeing phenomenal outperformance. So really appreciate it. Great conversation. Wish we could actually talk more about this because it's such an really interesting and now critical component of this market. But we so appreciate it. Ben McMillan, CIO of IDX Digital Assets.
Time is 3. PM is here.
President Trump is taking his economic message straight to the heartland today, kicking off a weekly travel blitz in Iowa, where the White House wants midterm voters focused on results, not rhetoric. Welcome to the Big Money Show, everyone. I'm Jackie DeAngelis, along with my co-hosts Taylor Riggs, David Asman, Brian Brenberg, and for the hour, we've got Fox Business senior correspondent Charlie Gasparino. Good to see you. The president is headlining an economic speech in Des Moines where he's going to make his case on energy.
Yeah, they know something that most don't.
His argument is this: gas prices are down, growth accelerating, stocks are at records, and prices are stabilizing, with even more relief still on the way.
Traveling to
Susan
Iowa.
Wiles says Trump will campaign like he's on the ballot in 2026, making appearances every week until Election Day. The White House is treating the midterms like a referendum on its economic record. Still, voters say the middle-class lifestyle is slipping out of their reach, and it has been for quite some time. So can the president flip the script? Things are moving, Charlie, in the right direction. $2.60 per gallon, slightly lower than that, is the average price for gas in Iowa. Inflation has stabilized a bit. Hopefully it will go down a little bit more. Impacts of the big, beautiful bill still expected. So we're on the right track here, but it depends how voters feel about it. And that's what the president's trying to address.
You know, listen, some of this is psychological warfare, right? I mean, voters are bombarded, and you could see that in the reaction to what's going on in Minneapolis. They're bombarded with negative images, negative commentary about Donald Trump every day, including the economy. I thought the mainstream media was dead. You know, that's what our usual mantra is, that people don't pay attention to it, but they obviously do. So I think it's hard. I mean, you got to go at it with facts. Things are better. They're not great. We should point out that gas prices represent a part of inflation, not the whole part. There's other parts of that
Hour is undecided yet,
where prices are up,
right?
Or at least they haven't come down enough.
Housing's a huge problem.
Housing's a huge problem. Food. I mean, there's beef prices. I mean, you can go through the whole thing. So I think, and again, and I sound like a broken record, but so, call me out. Tariffs don't help. And even though he backed off them wickedly, they're still there. And so that adds to the price pressure. That's a tax. So I think he's going to have an uphill battle going against not just his own self-defeating tariffs, but also the mainstream media narrative, which will ignore all the other good stuff he's done. I mean, the big, beautiful budget has all sorts of great stuff in there. There are tax cuts. We have, what's the unemployment rate? 4%? I mean, that's like insanely low.
Yeah.
Inflation is at 2.7. Okay, that's not the worst it's ever been.
And look at growth.
Growth is good. Wage growth is kind of up there, depending on how you cut the numbers.
It's picking up.
It's better. He never catches a break with the media. I'm astounded just by how much power the evening news has on this Minneapolis stuff. And it translates to everything, because this Minneapolis stuff, and I know this is not quite the topic, but I think it translates to the economy. It's literally a one-sided story of a murky situation, no matter which way. But I'm not saying that the guy deserved to die. He didn't, obviously. But that is insanity squared. Yet the mainstream media has one side of that story, that this guy is guilty. The cops are guilty. The Alex Preddy is not. He's completely harmless. And it's the same thing with the economy. They bombard every day. Oh, it's horrible. Inflation is up.
But it's young people that are going to believe that anyway.
Well, it's the thing about I don't buy with the mainstream media thing is it's young people driving these polls. But it's young people driving these polls who are saying things are so bad they don't have hope for the future, right? They're not watching the mainstream evening news to get
Well, how do you know it's just young people?
Because I'm looking at the poll.
The poll just says it's skewed to young people?
It says half of voters under 45 describe themselves as generally worse off financially than their parents were at that age. I mean,
just so you know, 45 is not quite young.
Hey.
When I grew up, when I grew up, when you were 20, you were old. You were an adult at 20.
Here's what I'm saying.
Thought it was like
you went through the numbers, and I'm with you. You got 5% growth, 4% unemployment, and 2.7% inflation. Yes, things aren't perfect. I get that.
People on Social Security love their lives.
No, they do. But tell me, like, give me an era where you'd quote those numbers and you'd say, you should feel bad about those numbers. Again, I'm not saying they're perfect. I know beef prices and food, I get all of that. I'm just saying these are good. You know what
era was? It was the last year of the Biden administration, where inflation was down to about 2.5%, or maybe lower.
Yeah.
Growth was up. Yes, it was. Yes,
Charlie,
it was.
Charlie, the Democrats lost in 2020.
No, that's my point.
That's my point. Can I just say one thing?
That's my point.
Susie Wiles.
They didn't feel good for a reason.
The problem
David.
with Susie, I agree with both of you to a certain extent, because the growth is just through the roof. We haven't seen growth numbers like this for a long time. However, there is in effect Susie Wiles' problem. She wants Trump to deal with the situation, the political situation, like it was 2024. In 2024, we were dealing with a senile president. Granted, the last couple of months
my mic was muted.
were
If they
Kamala
pull
Harris,
back SPY and SPX would pull back the VWAP,
on the basis of a
IWM would pull
economic
back to
program.
somewhere
And
below
most Americans
624,
thought it was
16.
bad. That's why the
Top of the
Democrats
CPI candle.
let me
But those
finish.
numbers,
Charlie, let me
David.
just finish here. So the point is that you have to have something
No
else
correlation
to offer the people.
IWM with the market trend.
You can't just be against something because you've been in charge for a year.
We have the
so
same
they
growth.
have to come up with two
IWM
big
the only
issues.
thing
Our
bouncing, or is
housing,
Q
because
strong?
the housing
Nobody knows.
situation, you need to make it easier for
Nobody
the people
truly
under
knows.
45
Gold is breaking
to buy a house,
HOD
and then
and trying to
healthcare,
run
which is through the roof,
at
because Obamacare is an
5,001
absolute
fucking
abject
100.
failure. It is the opposite
Reverted
of
from
affordable,
5,000
which is
to
what
100
its
points up.
official name was. So those two issues have to be clear
Damn.
before the election. The GOP has to put out
trying on the
something
housing
for both of those
side,
two
and
issues.
he's done more on the
Anything
healthcare
below the VWAP,
side
I'm in
than
profit
Obama
on
did.
SPY
All he did
and
was let
SPX, but I
illegals
just
come
need
into
it
the
to
country
fucking
and get
go
on
into
roll.
tomorrow.
No, I agree with all
It's
that.
just
I'm just saying that if you look at
all-time
the
highs right
economic
now,
numbers,
696.
they're not all that much different than Biden's last year, and Biden couldn't
Is this
make
above the previous all-time high?
We did have good growth.
Okay, but
we had good growth. We
Not
had
over 5%.
We didn't have
Charlie.
3%?
Nowhere near 5%.
Well, we had 5% the last quarter. Biden had up
Many
and down
people say
too.
it's going to be up more than 5%.
Hopefully. And by the way, you got to have wage growth. That's significantly more than the than prices.
Which you were not getting under Biden.
You're not getting really now.
Can I just say one last thing to finish the point I was trying to make? Okay, I'm just saying. I got on the subway the other day, and there was a sign on the subway, and it said, "Are you the victim of ageism?"
310.
And it wasn't directed toward old people. This was a New York City sign directed toward young people, trying to convince them they're the victim of ageism.
45 is not young.
Charlie, if you live in a world where your cities are telling you if you're young and not getting a job, you're the victim of ageism, I'm telling you, you're never going to be happy with any economy because you have bought into the victim mentality. And that was probably there under Biden. We could argue about that. But what I'm saying is there's something bigger than the numbers happening in our world, because institutions like universities and lots of leftists on social media tell you
IWM just running
out of the cradle.
Well, yeah,
okay?
obviously,
Market's not
the
running.
mantra from the cultural
pulling
left
backward,
does impact public opinion, and it's not just young people, by the way. There's a lot of people that feel this way, and I think they're wrong, and I can't stand it, and I think there's a lot that Trump should be proud of. He has made some mistakes, which added to his uphill climb on this.
Literally,
by the way, if you're Trump,
HOD.
be prepared. You're always going to have to fight against the media. You just have to have just have to have really good
and I think
answers.
He gets that. So to a certain extent, I agree with you also that it's an uphill climb, and the cards are stacked against him to a degree.
He just loves tariffs.
But Taylor, what is he going to hammer home to people in Iowa today, understanding his audience and how important that state is?
I think one thing we've learned about the data and consumer, well, let me answer your question. I think you're right on gas prices. I think you're right on tax refunds. Morgan Stanley says tax refunds will be over $500 higher, coming in at $3,500 this year.
They're leaving
Real
the lotto
disposable
still.
personal income will
HOD
rise
divergence
4.1%
clear, or
this quarter on a
whatever this
seasonally
run is.
annually adjusted basis. That's after flat for the second
Why is
half of
IWM the
last
only
year.
thing going one
That's
direction?
good. Refunds up 20% year over year. I could go on. The impact to GDP is a 40 basis point increase if you spend that real disposable income from that tax refund, right? So that's big picture number. Those are things that he can highlight and hammer home.
There has been a change, though. Let's talk about the Conference Board Consumer Sentiment Survey. This number plunged, the lowest since July of 2014, I believe. And you could wonder why, when the data we're talking about looks so good. In the last 18 months, that has usually been correlated with the unemployment rate. That correlation has been totally broken down. Consumer sentiment is down because we're in the low hire, low fire, which in the last 18 months, it has been tracking that, the churn, your perception of your ability to get a job. So, Brian, we could talk about why that perception is there. If it's an advertisement, if it's companies that have reported that we're not hiring, but we're not firing, that impacts the ability, your perception of getting a job. That in the last 18 months has been tracking this consumer sentiment.
But look what they're buying.
That's why all of that is in the doldrums.
Look what consumers are buying. The durable goods number was through the roof.
Huge.
We were expecting 3%. It was up 5%. I mean, and when you buy durable goods, that means you have a positive view of the future. You don't put money out there. Maybe when you're answering a questionnaire of do you have confidence in the future, you say, no, I don't because I'm worried. But if you have confidence enough to put down money and buy a durable good, that's a very positive sign.
Well, and we've talked about watch what I do, not what I say. I would agree with that. And on those numbers, the capital investment portion of that was over 8%. And we talked about how that lags GDP growth. When you get high GDP growth, that capital investment then lags, and then hiring lags. And so all of this, unfortunately, is working at a lag. So I don't know, is it later this year? I don't know the timing, but it's the green shoots are in there. We're just not seeing it filtering through the way we feel.
They're saying he's going to campaign every single week. He's learned that he is the best person to deliver the message because other people have tried and they just don't quite hammer it home the same way that he does. So if he hits the campaign trail in this way, you know, a lot of times whether he's on the ticket or not really makes a difference. If he's on the ticket, people are enthusiastic and energetic about it. And if he's not, then on the GOP side, they're not.
It's trying to break the divergence clear.
And messaging and being personal and one-on-one with people gets him where he needs to go.
Well, his approval
all puts are destroyed. I mean, it's right there anyway. I don't know.
His approval ratings aren't sellable right now.
Zero DT. They are burning the shit into clothes.
He runs a car dealership in Vegas. He's selling cars like crazy right now. I mean, just
time is
off the charts, high-end cars. I mean, obviously, there's something in this economy that, you know, we're talking like sort of macro, 30,000 feet. You know, there are niches in this economy. And, you know, there are some people with jobs, they're doing very well. People in finance are doing well. But there is an undercurrent of people who aren't. And I don't think they're just young people because if you're between 35 and 45, you ain't young. If you're listen, by the time I was 25,
Charlie's main point is you got to be 20 to be young.
Right. Okay.
I buried two parents before I was 27, so I was not young in my 20s. Okay, that's what I'm saying. Generally, you know, my father went into the Marines, almost saw combat. The war was over when he was just out of his teens. So I'm just saying that, you know, let's just put a lid on like what is young here. I mean, bottom line is,
I remember the phrase, if you're over 30, you're the enemy from the 60s.
Yes,
remember that?
That's right. Over 30.
I think it's
don't trust anybody over 30.
And more about these segments that you're talking about. And I think the president understands that there are pockets of people that are not feeling it the way others are. And that's where the balance needs to be restored.
And he is, listen, hopefully he can deliver the message because he is fighting against a mainstream media that shows just they don't care about being.
They're a campaign apparatus for the Democratic Party. They know that the midterms are coming up. They are working for the Democratic Party full time, and I'm surprised, like you are, the power that they still have to influence the voters.
It's just amazing to me. So he's going to have to employ everything. He's going to have to employ social media, influencers.
Yeah.
Unfortunately,
he's going out to campaign. That's what he said.
Unfortunately, the great Charlie Kirk is not with us right now,
Right.
and that I think that hurts as well.
The president, though, does use TikTok. TikTok is here to stay. Speaking of stocks and other stories, Pinterest is one today.
This highlights and everything we're talking about along with Nike. Nike's cutting almost 800 jobs because they want to automate. Pins, the ticker, Pinterest, cutting almost 15% of their workforce because they want to pivot to AI. They are saying that layoffs are designed to support the transformation initiatives that include priorities like AI-powered products. So I'm not saying that robots are coming for your job or AI is responsible for this, but where companies are finding efficiency, they are finding it, and it's due to AI.
Thoughts?
AI
Do you
my
even know what Pinterest is? Do you use it?
no, but try to AI my writing. Impossible.
So.
Yeah, well, that's
it's so bad you can't copy it.
By the way, it ain't hurting Nasdaq. Look at what's happening at the bottom right of the screen right now. Nasdaq is up almost a full % today.
You know, stocks like playoffs.
Yeah.
We want to hear from you. So if you have a question for us, go over to our X page or our Instagram page and leave a comment there. Your questions will be aired on Friday in our app.
1.03% fully on QQQ now. This is it. What is the power hour? Shit, well, IWM for sure went north on 3. QQQ went north on 3. SPY went north at exactly 3. To 3:15, 15 minutes. Candles are probably about to fly all over the place, but it is literally, yeah, market close in 30 minutes. Look at that MACD being slightly let up. QQQ just bullish all day long. Damn. Do something. What a run. 1 to 3:15. 262.99, 263, 265 almost. FOMC tomorrow. QQQ breaking out now, 6:32. It's this all-time high on QQQ. Well, it for sure broke every other high except the one all the way up there. $320. Just call it market testing the roof. Put some eye drops in 1 second. eyes itchy. Man, this IWM though, gapping down 4 times and gap filling only happens when the market is almost at all-time highs or some crazy moments like this. So do remember that happened too. How it was a setup to go up since 1. Perfectly at the 0.5 fib. 2 near HOD from the midpoint. $72 hours is a long fucking time. Fuck. They're saying next 72 hours. Motherfucker, I needed 24 hours. Oh my. All-time high in gold too. This shit is actually on some crack. Market is fucking blowing up. On all fucking fronts. Commodities. Man, that's actually fucked. IWM. I don't know how they have the power to do this shit honestly on gold every day. It's cooked. $2 up since yesterday's high, still doing everything. Right now it's actually fucking getting cooked. The fuck is this shit? Oh, fuck, man. SPY needs to hit fucking big for me because it's getting crushed now. It's fucked. I wasn't even fucking watching, honestly. That's crazy. Just fucking noticed a big fucking dip. Crazy. Nasty as fuck. Market is trying to reject. There is not that much time left. Not that much time left. I hope this shit drops crazy. It's fucking nuts. Here they go. Time is 3:30. Man, Robin at close time 3:45. Are they gonna cook it all, or are they gonna cook the puts only here? Time is 3:30. I don't understand how SPY never made a HOD. There's a divergence all day long. That's crazy to me. How IWM and QQQ ran and made a HOD. SPY never did. SPY never did. Not yet at the previous breakout point of the day. Well, I mean, Power Hour looks south. Lotto looks south. Yep. Lotto is south for sure. Get the fuck out of here. Too late. Candle traders are too late. Alright, since 245. 245. I've said the market's dumping and they've been cooking. Time is 3:30. I need way more. Shit is fucking me into tomorrow. Nvidia is fucked into Friday. Last thing I need is a fuck on market tonight. I need a big ass dump. They really are cycling it to the end. There's so little time left. 30 minutes. 28 minutes. Just be one directional. Wide on VWAP. I think they're really trying to show like a spike into close or like a spike into tomorrow or something, because there is probably a lot of bears that can continuously cook, but we are in the 3/3, so just need this presidential live stream to come out in 25 minutes and change everything. Below VWAP. Into FOMC. There's 10 minutes left until Robinhood closes on SPY. SPX is open till 5. Man, I don't even know if this is a chase candle. Destroy. Since 3:30, I'm not sure if they're faking out here. Something is a brewing again. IWM 1 minute gap maybe. Nope. Something is a brewing. POC. HOT divergence never cleared. That's so weird. They were so close at 325. Minutes, 25 minutes. Come on. Bust down Tatiana in 20 minutes, 23 minutes. Candles or something. Man. These candles are fucking something. It's so fucking bullish on gold that they're just gone. Yet again today. What the fuck? I got 50% on gold. It's crazy. 50% now. It's crazy. 100% up from yesterday to now on 100% down from that now. From that top. So it's crazy. $9, $10 up. Like, what the fuck? This is insane. Time is 2:40. Holding it wild into close. I'm worried about the gap up open like all-time highs, man. What the fuck? What a day. Gold is up 1.74%. I hate this shit. Gold. Gold. God. What the fuck is this close? Spaghetti linguine close. Can it move? $15 minutes left in the market. Man, what a choppy ass show. I mean, they did end up hurting all the out of the money puts. And most of the out of the money calls too. At the tippity top cycle or what? Tippity bottom or what? Oh, yeah. Time is 3:45. One more nice ass candle to power up. Let's get VWAP. Then figure it the fuck out. Man, that's a crazy. Who remembers the poll we did in the middle of the day? Is the trend direction up or shot? Look what they're doing at the close. Fucking going crazy. This shit is sad. This shit is so fucking fucked. Every fucking day they make new contracts and rip this bitch up north like crazy. Oh my god. Oh my god. A most unexpected cycle on IWM that I would expect to happening right here. Fucking bullshit, bro. Hell, dude. We need the president now. What the fuck? Bro, this is the most bullshit shit ever. $3.50. Can't even fucking make these candles up. Like, this is like power hour lotto. Fuck me, dude. What the fuck? You can't even make this shit up. There's 10 minutes left and they're doing this. Like, what the fuck is this? What? 350. I was getting my hope up like fucking crazy. Like, please go up, go down $10. I'm kidding. Holy fuck. What the fuck is this? Lotto is south. Bears are coming. Time is 3:52 in 1 minute and 28 seconds here. Man, they fucking actually destroyed almost everything. All the out of money calls, all the out of money puts. Right into 350, 0 DT. That's the most fucked up shit I've ever seen. I feel like I say that almost every day. That's the most fucked up shit I've ever seen. Right at VWAP. Is Lotto south or is Lotto a scam? I don't know, but it's trying to go south. Candles are right on top of VWAP. On some horse shit. Puts are going up since 3:15 though. Gold is rocketing here. This is fucking whack. This is fucking whack. Gold is up 2% for the day. Why is it that the shit just went from 400 to 475 in 1 month? 20 fucking percent in 1 month. 2% today on gold. Sick. Makes me want to fucking. I'm down bad on gold. I'm fucked. I did not take profit yesterday and they grinded this bitch and they're destroying it now. Crazy work. I'm short into Wednesday and fucking Friday and this is cooking. It's the ultimate fucking troll. Gold. It's the ultimate fucking troll, gold. There is 5 minutes left in the market. Market is still trying to go lower. We are right on VWAP now. This is some bullshit. This fucking extension cycle all day from 1 to 2. I don't even know this shit is cooking. Cooking. The fuck? How do they just trap all the calls at the end of the day like this? Like, oh my god. 2/3 going into 3/3 bearish. Just 5 minutes left. This is a 355 and the date. Every single one of these candles into 359. The next 3 minutes is 355. Godly gold. And of course, the president comes on after the market closes. P-share profile date. We are. Bro, this shit is terrible, I think. What a fucking way to close today. Oh my god, what a fucking goddamn cycle today. Oh my god. That's crazy. Gold up 2.5%. What the fuck? All right, guys. Have a good day. I'm going to send the presidential stream in the WhatsApp group.